Now, very good morning everyone. How are you all? Super? Okay. So today we will take two important chapters. One is consolidation and other is share-based payment. Consolidation will cover all three in the accounting standard. One is Ind AS 110, Ind AS 111 and Ind AS 28. Ind AS 28. Correct? Now for consolidation, 1 minute. For consolidation, once again I will say, for consolidation, the chapter is not so much complicated. Okay. But what happened in exam, if some new information come, so you are not able to react because of that new information, and if one mistake happen, it will affect the entire solution. One mistake will affect the entire solution. Correct? And nowadays you have also understood that from the last 3 attempts, they are asking a totally new question which is not in ICS study material. But can you say whatever may be the question, the pattern of doing solution will remain same. In the same working note will be there. Only one new adjustment might be there, which you have understood, you will be able to do it. Which you have not understood, of course, it will affect your solution. So what I have done this time, because what I have experienced, they are taking questions from AS based CA final syllabus. AS based. Understood? They are also not creating any questions. They are not creating any new questions, because we used to teach when there was CA final in AS syllabus. So we can understand that they are taking questions from there. Normally what happened when there was AS based consolidation and then we shifted to Ind AS based consolidation. So AS based consolidation, there were a lot of adjustment in the question. There were many adjustments. So we used to teach all adjustment from examination point of view, because that time they were asking that type of adjustment. Then we moved to Ind AS based ICS study material. Then we felt that there is no such adjustment. Because if there is no such question, they will not ask. However, when I have first taught Ind AS consolidation, then I have taught each and every adjustment. Then I felt that why to teach this much? Because already CA final syllabus are overloaded. If I will teach extra, then it will be overloaded to you. Then I understood that okay, let us teach from exam point of view. Correct now? So we shifted to only those adjustments which they are asking. So for the first 5-6 attempts, so they have asked only the question of ICS study material. But once all the questions, whatever is given in ICS study material was finished, they started taking questions from what? AS based. They started taking all that adjustment which they used to ask when? AS based. This is the only difference. So I know what type of adjustment they may ask now. So what I will do, I will just give you an idea. If suppose this happen, what you are supposed to do it. Will not take, of course we can't create a question in this revision batch. But can you see, if you have an idea, so you can react in exam hall. You can react in exam hall. Understood what I am saying? Correct. So that is only required. Whenever there is some action, if you take positive reaction, so you will be able to do it in exam. Got this point? Am I right? Okay, sir. Chalo. Now, let us start consolidation. So consolidation, you know that this is a financial statement of group company. When I say group company means only parent and subsidiary. When I say group company, it does not include associate and joint venture. Correct? But you also know that in CFS, we also think about associate and joint venture. But that will be as per Ind AS 28. That will be as per Ind AS 28. Now, in this, the first concept which you need to understand is the calculation of goodwill or gain on bargain purchase. Can you say the last point of business combination become the first point of this chapter? the last point of business combination chapter, because the last point of business combination was calculation of goodwill or gain or bargain purchase, and there we end what? Business combination chapter, and the starting point of this chapter become what? Calculation of goodwill or gain or bargain purchase. So can the formula remain same? Because you will calculate goodwill or gain or bargain purchase as per the requirement of Ind AS 103 only. So whenever parent company obtain control over subsidiary company, so this is nothing but business combination. Last day we have done, it is nothing but formation of subsidiary. So in CFS of parent company, on the date of acquisition, we apply Ind AS 103. In CFS of parent company, on the date of acquisition, we apply what? Ind AS 103. It means we need to calculate goodwill or gain or bargain purchase on the date of acquisition by applying the same formula. What was the formula? Formula was fair value of consideration paid plus value of NCI. Now you know value of NCI can be calculated by two methods, either by fair value method or by proportionate share in INA method. If the fair value information is not given, then we'll go for what? Proportionate share in INA method. That is understood point. Correct? I'll come back to value of NCI. Once you have calculated value of NCI, then if there is a step acquisition. Step acquisition means there is some previously held equity interest. There is some previously held equity interest. Then we'll measure that previously held equity interest also at fair value. So we'll take fair value of previously held equity interest. So this becomes the total. We call it, this is the total value of business. This is the total value of business of which company? Total value of business of which company? Subsidiary company. When I say total value of business, whether it is including goodwill or excluding goodwill? Including goodwill. From that, if I minus only fair value of INA, but the INA will be including or excluding? When I say fair value of INA means identifiable net asset. So that will be including or excluding goodwill? Excluding goodwill. So fair value of business will be including goodwill. Fair value of INA will be excluding goodwill. So difference will be what? Goodwill. Or if it becomes negative, so we call it gain. And that gain is known as gain on bargain purchase. I hope you have understood. The gain on bargain purchase will be transferred to what? Gain on bargain purchase will be transferred to what? Capital reserve. Gain on bargain purchase will be transferred to capital reserve. Acha, you need to remind me, business combination last day I forgot one special point. Correct na? You need to remind me. Today we will do one measurement period concept that is very important. Actually one question I was supposed to do, it was missed. By mistake it was missed. Okay. So there is one important concept of measurement period where business combination. You need to remind me when I will complete consolidation chapter, I will take that measurement period wala concept. Because I am expecting one question of measurement period this time. Missed ho gaya. By default missed ho gaya. Okay. So I'm sorry for that, but I'll take it today only. Okay. Yes, sir. So I hope the formula is very simple. The formula is very simple. Okay, sir. Correct. Formula no doubt. Formula no doubt. Yes, sir. Now just try to understand. This NCI you have understood will be by two methods. One is fair value method. One is I call it Pasina method. I call it Pasina method. Proportionate share in INA method. Now whenever we apply fair value method, what is the formula? Formula is what? Number of shares not acquired by parent company. Number of shares not acquired by parent company multiply by fair value of shares of subsidiary company. So can you say value of NCI by using fair value method will be number of shares not held by parent company multiply by fair value of shares of acquiring company. Acquiring company means, in this chapter, acquiring company means subsidiary company. Correct? If this fair value information is not given, or they have not informed you about fair value of NCI, then always will use what? Pasina method. Will not try to calculate fair value of shares of acquiring company by our own. Will not try to calculate fair value of shares of acquiring company by our own. It means we need to apply which method? Pasina method. So Pasina method means fair value of INA on the date of acquisition. Can I say this is nothing but fair value of INA on the date of acquisition? Fair value of INA on the date of acquisition multiply by what? Share, percentage share of NCI. Percentage share of NCI. Understood? Now whenever we use fair value method, so we calculate full goodwill. I hope you know this point. Whenever we use fair value method, we calculate full goodwill. And whenever we use Pasina method. Pasina method means what? Proportionate share in INA method. I will call in my class Pasina method. So don't be confused. Don't be confused. If you have not taken classes from me, so you are not habituated with pasina method. Am I right or not? Are you able to understand? But I will call it pyar se pasina method. The pasina method whenever I am using, then we'll calculate partial goodwill. Now full goodwill is attributable both to parent company and NCI. Full goodwill is attributable both to parent company and NCI, and partial goodwill is only attributable to parent company. So full goodwill is attributable only to both to parent company and NCI, and partial goodwill is attributable only to parent company. This is the difference between full goodwill and partial goodwill. Understood? Yes, sir. Understood. Now, can I say in this chapter, PC will be always given? In this chapter, PC will be always given because can I say balance sheet, separate financial statement of parent company will be given. In that investment will come, and investment is nothing but the amount of PC. So in this chapter, we are not supposed to calculate PC. Thank you very much. In business combination, we used to calculate PC. The difference between business combination chapter and this chapter is this only. In business combination chapter, they will not give PC. In this chapter, they will give PC. Thank you very much. So can I say cost price of investment, which is coming in the separate financial statement of parent company, that will become purchase consideration. But sometime to confuse you, they might not give what? PC. Means they will say that investment is still now not recorded. Then apply the concept of Ind AS 102. Yesterday we have done PC calculation. Same to same will be PC calculation. Can I say? So PC will include what? Cash payment. PC will include cash payment. It will be also include fair value of equity shares issued and deferred consideration and contingent consideration. So whatever is given, can I say we can easily calculate PC if suppose not given. If suppose not given. But 99% PC will be given in the question. It is quite possible in one of the question might not be given PC, then calculate PC by using the concept of Ind AS 103. Understood? Correct. Can I say fair value of previously held equity interest? You can calculate that will be number of shares acquired by parent company previously multiply by fair value of shares of acquiring company, fair value of shares of acquiring company on the date of acquisition. Can I say this goodwill is calculated, this gain is calculated on the date of acquisition. So all information will take on which date? On the date of acquisition. So this all information is on which date? Date of acquisition. Understood? Goodwill. Concept number 1 done. Can I say concept number 1 to done? Now for calculating goodwill or gain or bargain purchase, you need to do some working note. You need to apply some working note. Can I say first we want a net asset, we want fair value of INA, fair value of INA. But in this chapter, what they will give? They will not give you balance sheet on the date of acquisition of subsidiary company. They will not give you balance sheet of subsidiary company on the date of acquisition. So can you say if they have not given balance sheet of subsidiary company on the date of acquisition, so you don't know assets and liability of subsidiary company on the date of acquisition. It means can I say we cannot calculate net asset of subsidiary company on the date of acquisition by applying asset minus liability. If you remember in business combination they will give. So in business combination we are calculating INA by using what formula? All asset at fair value minus all liability at fair value. But in this chapter that information will not be given. In this chapter that information will not be given to confuse you. So can I say we will calculate net asset by using which approach? Equity approach. By using which approach? Equity approach. So they will give you equity information of subsidiary company on which date? Date of acquisition. So can you say equity share capital plus other equity of subsidiary company on the date of acquisition is nothing but net asset of subsidiary company on the date of acquisition. So equity share capital plus other equity of everyone, equity share capital and other equity of subsidiary company on which date? On the date of acquisition will become what? Net asset of subsidiary company on the date of acquisition. So can you say when I am writing equity share capital and other equity, actually we are not calculating other equity. We are not calculating equity. We are calculating what? Net asset means INA, identifiable net asset of subsidiary company on the date of acquisition. Achha, one disclaimer I need to give. It is quite possible ki if you have done from some other faculty, so the format means the flow of working note might be different. And if you are following ICA solution, then the entire working note flow is different. Correct? So I use thoda sa different approach, but ultimately the answer will remain same. Ultimately the answer will remain same. But if you follow my method now, all questions can be done. Means for all questions only one process for all questions. Any type of question can be done. Any type of questions can be done. Understood? Are you able to understand? So my second concept number 2 is what? Preparation of statement of net asset of subsidiary company on the date of acquisition and on the date of consolidation. Can you see, we'll apply which method? Equity method. We'll apply equity approach to find out net asset. So can you say, if this is the date of acquisition, if this is the date of consolidation. Now what is the date of acquisition, you know? What is the date of consolidation? Means when you are preparing consolidated financial statement, that become date of consolidation. So can you say, if this is the date of acquisition 1/4/2023, but they have asked you to prepare 31st March 2024. So this become date of consolidation. This become date of acquisition. And this become which period? This become which period? Post acquisition period. We call it post acquisition period. We call it post acquisition period. Understood this point? So can you see, we write down date of acquisition. This is the date of acquisition. This is the date of consolidation. We write down date of consolidation, and this become post period. Post period. So can you say, in post period we calculate what is the post acquisition profit. We need to calculate what is the post acquisition profit. Understood? So can you say, if I say net asset on the date of acquisition and the net asset on the date of consolidation, the difference will be what? Post acquisition profit only. The difference will be post acquisition profit only. So how to calculate equity share capital? Other equity, this become net asset on the date of acquisition, this become net asset on the date of consolidation, and this become post acquisition profit. Have you understood this point? Have you understood this point? Correct. Yes sir. Yes sir. But to find out other equity on the date of acquisition and other equity on the date of consolidation and post profit, we need to prepare one more working note, that is known as analysis of profit. We call it what? Analysis of profit. The most important working note of this chapter is what? Analysis of profit. The most important working note of this chapter is what? Analysis of profit. Understood what I am saying? So now my full concentration will be only on what? Analysis of profit. Correct? So concept number 3 is the time adjustment and analysis of profit of subsidiary company. Understood? Yes sir. So I will take examples very fast. Very fast. You need to cope up with me. Correct? You need to cope up with me. And I will say, if I can write fast, you can also write fast. So write with me. Okay? Everyone, live student, write with me. Because if you write, then only you understand. If you see, you don't understand. Believe me, I am just saying one thing. If you accept, very good. If you don't accept, then also very good. But I will say, follow my suggestion. Whenever you are listening any revision class, nothing will happen. Don't listen revision class. You are wasting your time. You are wasting your time. If you are thinking some teachers come in YouTube and you are only listening, nothing will happen. You are wasting your time. Nothing will. Your 50 marks, suppose in the last attempt 50 marks, it will become 45 marks in the next attempt. Don't listen. If you want to understand, so whatever teacher is writing, that also you write down. Whatever teacher is saying, write down. If you are writing, then only you will understand. If you are not writing, you will not understand. There is only one rule. But a CA student is student or CA? CA student is CA finance. Sorry, my mistake. CA finance student is student or CA? Acha, in class 10, whether you used to write or listen. In class 12, whether you used to write or listen. In CA foundation, whether you used to write or listen. In CA inter, whether you used to write or listen. In CA final, what you are doing? Listening. And therefore, hawa. Because you are changing from CA student to CA. You are becoming CA. And therefore, you are not getting pass marks. So please follow my suggestion. Even though if you are listening me, it will not help. Write, that is the best method. Understood? Correct? One of the student came last time from your class. She has written everything. I appreciate it. I say you will pass. She has written everything whatever I have said. So I said you will pass. Understood? So those who are writing, they will only understand. Those who are not writing, they will not understand anything. Correct? So listen. You can't write everything. but write whatever is important. Chalo, start. Let us start. But very fast, huh? You need to only follow me. Now, example number 1. Only we are doing revision. Okay? This is what subsidiary company information 1/4/2024, 31st March 2025. Equity share capital, this they will not give. They have given 1 lakh, correct? Then they have given retained earning, they have given 1 lakh, and they have given 1,50,000, and they have given date of acquisition. Date of acquisition they have given 30th June 2024. This is a very basic question. Understood? Correct? Now can you see, if this is the date of acquisition, this is the date of consolidation, so this become which period? Pre-period. This become which period? Post-period. So this is how many months? 3 months. This is how many months? 9 months. Understood? Correct? Now, first working note will be what? Analysis of profit. AOP. We'll call it what? AOP. In exam, write down analysis of profit. Don't write AOP. Even though you are writing AOP, they will not deduct marks, but don't write. Why to take risk? AOP, don't write. Analysis of profit. Now we write down what? PL, profit and loss account. But what is the closing balance? Everyone will say 1,50,000. What is the opening balance? 1 lakh. So what is the profit for the year? What is the profit for the year? 50,000. This 50,000 is the profit of entire year. How much pre-period? How much post-period? Will be allocated in which ratio? 3:9. So we write down pre, we write down post. We write down pre, we write down post. So we write down allocated profit. In which ratio? 3:9. Can you cop up with me? Can you? If I can write, you can write. Write. Today I will not leave you. Huh? Today I will not leave you. Okay? Write. Everyone writing? Live student, are you writing? Right, because I can't see, you need to only follow me. So 50,000 into 3/12 what? 12,500. 50,000 into 9/12 how much? 37,500. So this become pre-acquisition, post-acquisition profit of current year. Understood? But can you see in this we'll add opening balance? Can you see this opening balance is entirely pre? So we'll add in what? Pre-acquisition profit. The total become 1,12,500. This become what? 37,500. AOP completed. Understood? After this, we'll do working note number 2. SONA, statement of net asset. We'll call it प्यार से SONA in exam, statement of net asset. We write down date of acquisition, date of consolidation, and post. Date of acquisition is what? 30th June 2024, and this is 31st March 2025. Understood? The post is how many months? 9 months. Understood? But the equity share capital, how much given? So we'll assume there is no changes in equity share capital. We'll assume there is no changes in equity share capital. And other equity, can you see this will come on the date of acquisition? Yes or no? So 1,12,500 will come in the date of acquisition. This will become post acquisition profit 37,500, and this will become what? 1,50,000. This become net asset on the date of acquisition. How much? 2,12,500, 37,500, and 2,50,000. Understood? This is what analysis of profit. Understood? Once you have calculated, once you have prepared SONA, then there are some more working note that I will explain once you have understood AOP and SONA. Correct? Now, life is not simple. Life is not simple. So, if life is not simple, then maja nahi aega. Life should be interesting. Correct? Life should be interesting. Therefore, questions should be also interesting. Correct? So, they will give some adjustment to confuse you. So, this you have understood. Concept number 3 you understood? Yes, sir. You can see you have taken printout. All have taken printout. I have asked you to take printout now. If you have taken, good. If you have not taken, then take today after the class. Okay. So this I have done only to understand. Now in this there are some general assumptions. General assumption, if you are not following, then they are not going to give you marks. Now if suppose in exam opening balance of retained earning is not given, opening balance of retained earning is not given, then always assume nil. Always assume nil. Opening balance of retained earning is not given, then always assume nil. But 99% they will give you opening balance retained earning. But opening balance of other reserve and surplus not given. For example, general reserve, there can be any other reserve and surplus, suppose not given. Then always assume it is equal to what? Closing balance. It is equal to closing balance. Means for other reserve and surplus, you can't assume it is nil. Understood? So any other reserve and surplus apart from retained earning, whatever. Any other reserve and surplus apart from retained earning, if they have not given what? Opening balance, then it will be equal to what? Closing balance. This assumption you can't change. If you are changing, they will not give marks. Understood? Chale aage. Yes, sir. Then the next point is abnormal loss. Till now they have not given any question of abnormal loss, but by saying what? All the previous attempt question, they may give abnormal loss now. Correct? Now, let me say. Suppose this is example number 2. Example number 2. Okay? So this is 1/4/2024, 31st March 2025. Okay? Date of acquisition is 31st/12/2024. This become date of acquisition. They will give you equity share capital how much? 1 equity share capital question mark, and they have given 1 lakh. Correct? They have given PL 1 lakh 50,000, and they have also given general reserve. General reserve also given 50,000 and 70,000, and with this they have given one abnormal loss. Abnormal loss happened during which period? Pre. Suppose abnormal loss they have given to 20,000. Abnormal loss they have given 20,000. Understood? So what will be the adjustment in AOP? That we need to understand. Can we start? Now I have given you 2 reserve and surplus. So we need to analyze 2 reserve and surplus. Correct? So we write down retain. PL means retain earning. Write down better retain earning. Retain earning and general reserve. Retain earning and general reserve. Okay, sir. Now what is the closing balance? 1,50,000 and 70,000. What is the opening balance? Opening balance is what? 1,50,000. So what is the profit? How much profit? Profit is 50,000 and 20,000. Now you say this is profit after abnormal loss or before abnormal loss? So this is profit after abnormal loss. But can you say if the abnormal loss has happened during pre-period, can you assume this is uniformly spread throughout the year? So because specific information is given, so you can't apply time adjustment or time ratio on abnormal loss. Therefore, first we'll add what? Abnormal loss. Of course, in retained earning. So we'll add back in retained earning. So what is your profit before abnormal loss? It is 70,000 and 20,000. I need to apply time ratio in this profit. You need to apply time ratio in this profit. Understood? So you will apply always time ratio in profit before abnormal loss. Understood? So now how to present? Write down pre, write down post. In post write down retained earning and general reserve. In post write down retained earning and general reserve. Understood? Correct. Now we can do allocation. Allocation of profit. So first allocate retained earning wala profit 70,000. In which ratio? 9:3. So that can change as per the information given in the question. So 9:3, allocate 9:3 70,000. How much? 52,500 and 17,500. And general reserve also allocate 15,000 and 5,000. Can is this allocation you can do? But always write down post retained earning यहाँ पर, post general reserve यहाँ पर. pre we want together, so we can write down together. Understood? Have you understood this point? Correct? Yes, sir. Now can you see in this we'll add opening balance. Opening balance is what? 1 lakh plus 50,000. You can write down together. 1 lakh plus 50,000. So write down 1 lakh 50,000 pre ki post. Pre 1 lakh 50,000. Understood? 1 lakh 50,000. Because opening balance will be always pre. Opening balance will be always pre. Understood? Now minus abnormal loss. Because can you see we want profit after abnormal loss. Now abnormal loss happened in pre-period ki post-period. So if happened in pre-period, deduct from pre. If suppose in your exam question it occurred in post-period, then deduct from post. Understood? So it can be deducted from pre or post as per the date of occurrence. As per date of question occurrence. ठीक है ना? So minus 20,000 in my example from where? Pre. So this become what? Your pre-acquisition profit. Can you give me the total? 1,97,500. Understood? Correct? Understood? Correct? Now we can prepare statement. Working note number 2 is statement of net asset. We write down date of acquisition, date of consolidation. Now in post write down 2 column, retained earning and general reserve. Write down retained earning and general reserve. Correct? So what is equity share capital? As per our question 1 lakh and 1 lakh. And you can add on other equity together. Other equity as per AOP, it is 1,97,500. Retained earning how much? 17,500. And it is what? 5,000. Total is what? This total 1 lakh, 2,20,000. This total will be always equal to closing balance. Check karo. This total is always equal to closing balance or not. So always you can cross check whether it is equal to closing balance or not. If you have done some plus minus mistake, you will be able to understand. So this is actually Sona I prepared to cross check. Sona I prepared to cross check. Sometimes we do some plus minus mistake. So you will be able to understand here only whether you have done mistake or not. Understood? So this is actually Sona is for cross checking. Sona is for cross checking. Understood? Because one mistake you have done in AOP and that is not cross check, your entire CBS will not tally. Understood? So 2,20,000 you understood. Now can you give me the total? 2,97,500, 17,500, 5,000. This become how much? 3,20,000. Correct? Understood? Correct. Now can you say this should be allocated to parent company and NCI. This should be also allocated to parent company and NCI as per their holding ratio. I mean, right now I am not given holding ratio. Suppose it is 70:30. So this will be allocated in 70:30%, 70:30%. Understood? Can you say this will be transferred to consolidated retained earning? We'll prepare it. And this will be transferred to consolidated general reserve. And this both will be transferred to what? NCI. This both will be transferred to NCI. In the some working note. We are coming in that working note soon. Have you understood? Abnormal loss you understood. One by one each adjustment first we'll understand. Then we'll come to directly one question. Abnormal loss you understood. What we have understood? First add back what? Abnormal loss. Whatever is given add back. Then deduct from pre or post after time allocation. Deduct from pre or post after time allocation as per date of occurrence. Whether it occurred in pre-period or occurred in post-period. Chalega? Yes, sir. Then most important adjustment is dividend paid by subsidiary company. Dividend paid by subsidiary company. Dividend declared and paid by subsidiary. This will be always in any exam question. This will be always in any exam question. Understood? Dividend declared and paid by subsidiary company. Can you say any adjustment related to subsidiary company is only relevant? Any adjustment related to subsidiary company is only relevant for adjustment. Because AOP is for which company? subsidiary company. Sona is for which company? Subsidiary company. Goodwill we are calculating for which company? Subsidiary company only. Because everything is subsidiary company, means any information of parent company is not at all relevant. If correctly recorded, there is some error in the books of parent company that need to be rectified. Suppose they have said dividend declared by parent company and paid by parent company, whether that information relevant? Not at all relevant. So only we need to understand what are the information given by subsidiary company. Any information given by parent company is not relevant for this chapter if it is correctly recorded. If wrongly recorded, then we need to rectify it. Understood? So this is only for which company? Subsidiary company. Correct? Yes, sir. Now let us take one example. Example number 3. Example number 3. So this is 1/4/2024, 31st March 2025. Correct? And they have given 30th June date of acquisition. Date of acquisition. Okay? They have given equity share capital 2 lakh. They have given PL 2 lakh. And 2,50,000. They have given general reserve 50,000 and 70,000. Okay? Yes, sir. They have given abnormal loss 20,000 and they have given one final dividend at the rate of 10% was paid by subsidiary company. Final dividend at the rate of 10% was paid by subsidiary company. Now, final dividend paid by subsidiary company means this is for which year? Previous year, paid in current year. This is final dividend of which year? Previous year, paid in current year. This too you have understood. So whenever I say final dividend, it is understood paid in current year, but for which year? However, in exam they will inform you, they will not say final dividend, they will say dividend paid for the year ended 31st March 2024. For the year ended 31st March 2024. So it means what? It is previous year dividend. Understood? Now you know interim dividend, you know final dividend. Till now no question of interim dividend has been given, but of course that can be also given. The treatment of interim dividend and final dividend is same. Treatment of interim dividend and final dividend is same. So suppose in exam interim dividend came, don't be confused. The treatment of interim dividend and final dividend are exactly same. Exactly same. Understood? Are you able to understand? So I can write down interim dividend if you want, but the treatment are same. If you have understood final dividend, then same treatment for interim dividend. Can I move? Yes, sir. So first we'll prepare what? Working note number 1, AOP, analysis of profit. We want PL and general reserve. But what is the closing balance given? Closing balance 2,50,000 and 70,000. What is the opening balance given? 2,50,000. 2,50,000. What is the profit? Profit is how much? 50,000 and. But this is profit before abnormal loss, after abnormal loss. This is profit before dividend, after dividend. After dividend. This is all after dividend. Correct now. So we'll do first what? Abnormal loss. How much? In PL now. Means PL is nothing but retained earning. Better write down retained earning. Because in exam they say retained earning. Okay? Then can you see we'll also add back what? Final dividend. That is 10% of what? That is 10% of what? 10% of 2 lakh. 2 lakh is what? Opening. 2 lakh is what? Now I am giving you two options. It is 2 lakh is what? Opening profit ki equity share capital. Here some of the student mistake, they will calculate on what? Opening. I don't know why. Dividend is always on capital. This no one will inform you. This is understood point. Dividend is always on capital. But pata nahi what happened in exam. I don't know what happened in exam. They will do this small mistake. Understood? They will take 10% of profit. Maja aa raha. 10% of what? Capital na. 10% of capital. Understood? 10% of capital. So that will come 20,000. Understood is fine. So this become what? Profit. Profit how much? Means profit before dividend and profit before abnormal loss. This become profit Means this is, can I say this is nothing but profit earned during the year before abnormal loss. Profit earned during the year before abnormal loss. How much? 90,000 and 20,000. Now on this we'll apply what? Time allocation. Can you do fast? Pre, post, retained earning and general reserve. What is the ratio? Allocate for retained earning first. 3:9. How much? 22,500 and 67,500. Then general reserve 5,000 and 15,000. Then we'll add what? Opening balance. Opening balance total is what? Pre ki post? Pre. Always pre. Then we'll do minus abnormal loss from where? Post. Minus abnormal from post. Why? Because this occurred during post period. So minus 20,000 from retained earning. Now minus dividend paid. Normally student do mistake यहाँ पर. Final dividend paid. Normally student do mistake यहाँ पर. Final dividend paid. Okay? Are you getting? Now, this dividend is paid in current year for which year? Previous year. But it will be deducted from pre ki post. Pre ki post. How many are saying pre? How many are saying post? Pre is wrong. Pre is wrong. If you are saying pre, means you are in CA inter. In CA inter we used to deduct from pre. But CA inter was something different. But what happened? This is carry forward from CA inter. The mistake is carry forward from CA inter, because CA inter may okay pre, but here not pre. So dividend, just try to understand what is the objective of preparing AOP. The objective is preparing AOP to get net asset on the date of acquisition. So बताओ, dividend is paid before acquisition or after acquisition. So it will decrease the net asset of which period? Post acquisition period. Means can I say it will not affect net asset on the date of acquisition. It will not affect net asset on the date of acquisition. It means deduct from pre or post as per the date of payment. As per the date of payment. Means it paid before what? Acquisition. So deduct from pre. If paid after acquisition, then deduct from post. Understood? So here deduction will be as per the date of payment. Here deduction will be as per the date of payment. So in my question, it is paid after acquisition ki before acquisition? After acquisition. Therefore deduct from post. Here normally student do mistake. Correct? Why they will do mistake? Because of the information given in the question. I will explain you what information they will give. First, this you have understood. Minus what? 20,000 from what? Post. Minus 20,000 from post. Have you understood this point? So can you give me the balance first? 3,22,500, and this is 27,500. Done. Now we'll prepare what? SONA, statement of net asset. Date of acquisition, date of consolidation. What is? This is not correct. What is the correct amount? 3 lakh. So who said 3 lakh? 2 lakh. Don't do calculation mistake. If you have wrong calculator, throw it. Okay. Don't do calculation mistake. Calculation mistake, no one can save you. No one can save you. Okay. Yes, sir. So बताओ, equity share capital how much? 2 lakh and 2 lakh. Okay. Now other equity is what? 2,77,500, and post may be write down 2 column na. So how much retained earning? 27,500. How much general reserve? 15,000. What is the total? Three lakh 3,20,000. Just check whether it is equal to closing balance. So just cross check. If you are doing calculation mistake, now you will be able to understand. Understood? Suppose you have given me wrong amount यहाँ पर, so automatically will find out. So this is only cross check, and therefore Sona, I say, even though ICI is not preparing, even though your other faculty suppose not prepared, do it. This is very important. You can cross check what plus minus mistake you have done, and normally plus minus mistake only we do in exam. Correct? So this will help you a lot in exam. So 3,20,000 understood should be equal to closing balance. Total you can find out. आगे चलें. Dividend you understood. Dividend you understood. ठीक है. Now just try to understand what type of information they will give you in exam. They will give you retained earning. They will give you retained earning 1 lakh and 1,50,000, and they will say out of opening balance, dividend of 10% was paid. Suppose this is 30th June date of acquisition, was paid on 31st/7. Understood? They will say in this way, कि out of opening retained earning, the language will be this like, out of opening retained earning, dividend of 10% was paid on 31st July. 31st July means here, 31st July. Understood? So it means what? The meaning, that what is the English? Ki this is the final dividend declared out of what? Previous year profit, but paid after what? Acquisition. So of course, can you say final dividend will be declared from which profit? Previous year profit only, means from opening balance only. So declared from previous year profit, but paid after what? Acquisition. So you only say, now once you done pre and post, so you deduct dividend from pre-profit or post-profit? Post-profit. So this date is relevant, but they are trying to confuse you. This is declared from which profit? Pre-acquisition profit. Of course, can I say final dividend will be declared from which profit? Pre-acquisition profit only. Final dividend will be declared from which profit? Pre-acquisition profit only. Understood this point? Have you understood this point? Have you understood this point? Chalega? Means deduction will be from what? As per the date of payment. As per date of payment. Suppose date of payment is not given, then always assume that it has been paid after acquisition. It has been paid after acquisition. Understood? Correct. So dividend. Now same treatment for interim dividend. So treatment of final dividend paid and interim dividend paid during the year is same. So suppose in exam they have given interim dividend paid, don't worry. First add back interim dividend, then minus from pre or post as per the date of payment. Minus from pre or post as per the date of payment. Till now they have not given interim dividend, but they may give interim dividend also. Understood? Same treatment. Same treatment. Correct. Can I say dividend declared and paid by parent company, if recorded correctly, is not relevant for this chapter? Is not at all relevant for this chapter. Sometimes they will give both the company has declared dividend of 10%. Means for parent company no adjustment required if it is correctly recorded. If it is correctly recorded. Understood? This point already I have said, dividend paid will be reduced from pre and post acquisition profit as per the date of payment. As per date of payment. It means if it is paid after acquisition, deduct from post profit, otherwise deduct from pre profit. Understood? Chalega. Dividend adjustment understood? Can we move? Can we move? Yes, sir. Next adjustment, which is super adjustment, is concept number 6, is fair value adjustment. Fair value adjustment. Correct? Means dividend paid and fair value adjustment is most common adjustment in exam. Now just try to understand. Abhi we have prepared Sona by which method? Equity approach. Net asset by equity approach. So when I am adding equity share capital and other equity, this is carrying amount of net asset or fair value of net asset. This is the book value. Means can you say if the fair value information is not given, then we are assuming book value and fair value are same. We are assuming book value and fair value are same. But if suppose fair value of net asset, some of the net asset is given, so we need to consider fair value information also. Correct. It means can I say this is right now the book value of INA of subsidiary company on the date of acquisition, but we want fair value of INA of subsidiary company on the date of acquisition. Therefore, can you say some fair value adjustment is required or not? Some fair value adjustment is required. Some fair value adjustment is required. Now try to listen fair value adjustment. Full concentration. I will give you all information together. One by one, so I can't give the entire information together. Okay. Now suppose in exam they have given you information about plant and machinery, land and building. They have given debtor. They have given creditor. Correct. And they have given inventory. They give inventory also. Normally they give this only. This is the maximum I have given. Okay. Plant and machinery, land and building, inventory, trade receivable, trade payable. Understood? Maximum they will give this information. Other assets and liability they will say what? It is equal to what book value. Okay, na? So first we write down fair value on the date of acquisition. First we write down fair value on the date of acquisition. Then we'll compare with the carrying amount on the date of acquisition. On the date of acquisition, because we want fair value on the date of acquisition. So fair value on the date of acquisition will be compared with what? Carrying amount of these assets and liability on the date of acquisition. So can you say either there will be increase or decrease? Either there will be increase in asset or decrease in asset. So increase will be what? Gain. Decrease will be what? Loss. Gain. This will be loss. This will be gain. This will be loss. This will be gain. This will be loss. And this will be what? For liability it will be loss and gain. This so we can find out. This we can find out. Understood? Correct? Means can I say if there is a gain, so net asset will increase with the amount of gain or not? So if there is a gain, so net asset means INA will increase with the amount of gain. But if there is a loss, then can I say INA will decrease with the amount of loss. So INA will decrease with the amount of loss. Can I say very simple? We can easily find out gain or loss. But difficulty is what? Both should be on the date of acquisition. Both should be on the date of acquisition. So sometime for plant and machinery, they will not give you carrying amount on the date of acquisition. For plant and machinery only. For other, they will give you carrying amount on the date of acquisition. But only for plant and machinery, pata nahi kya hota hai. For plant and machinery, they will disturb you. For plant and machinery, they will not give you book value on the date of acquisition. Let me take one example. Suppose they have given you this information. This is 1/4/2024. This is 31st March 2025. And suppose this is the date of acquisition. 30th June is the date of acquisition. Now for PP, they will give you fair value. Suppose they have given 1,50,000 is the fair value on the date of acquisition. But we want what? Book value on this date. If they have given book value on this date, thank you very much. But they will not give you book value on this date. To confuse you, to waste your time in exam, to disturb you, or to do simple mistake, nothing more than this. Correct? Now, two type of information might be given. Suppose they have given book value on the date of acquisition. Suppose they have given on the date of acquisition, opening balance they have given 1,20,000. And they have given rate of depreciation what? 10%. Then to easy. Can you see? You can find out book value as on this date. Then to it becomes simple. I think anyone can do it. But they will not give this also. They will give you what? They will not give you opening balance also. Means what they will give you? PP. And they will give you closing balance of this. Suppose closing balance they have given 90,000. And can you say this will be given what? In individual balance sheet of subsidiary company. Individual balance sheet subsidiary company. So from that you need to take this figure. Understood? And they will give you rate of depreciation. Rate of depreciation they are given 10%. Now you do entire back calculation. Means we'll assume this is closing balance. So closing balance will be 90% of opening balance. 90% of opening balance. So opening balance will be 1 lakh. Means 90,000 divided by 90%. 90,000 divided by 90%. So we'll get 1 lakh. And in 1 lakh, we'll charge depreciation for how many months? 3 months. So 3 month depreciation will charge. So that will be how much? 2,500. So this become 97,500. And then you can find out fair value gain. So what is the fair value gain? What is the fair value gain? 52,500 as per this example, and this 52,500 will be added to the net asset on the date of acquisition. This 52,500 will be added to the net asset on the date of acquisition. Understood? Understood? Correct. So for fair value adjustment, this is one adjustment. Second adjustment will be for post acquisition period. First adjustment will be on the date of acquisition. Second adjustment will be for post acquisition period. Can you say for post acquisition period, subsidiary company has already charged depreciation on 1 lakh? Means subsidiary company has already charged depreciation on 7,000, depreciation 1 lakh, that is 7,500 for 9 months. But parent company will now charge on which amount? 1,50,000. So can you see there will be some additional depreciation due to fair value adjustment during post acquisition period. So that will reduce your post acquisition profit by the amount of additional depreciation. It means you need to work out what? Additional depreciation also. You need to work out what? Additional depreciation also. Understood? Correct. Now this additional depreciation depends upon SLM or RBM. This additional depreciation depends upon SLM or RBM. This rate of depreciation is SLM or RBM. This is SLM or RBM. Correct. Means they will give you information whether it is SLM or RBM. Correct. So just write down how to calculate. If SLM additional depreciation will be equal to, what is your fair value gain? 52,500 into 10% into 9/12. This will be your additional depreciation. So if SLM, you need to apply directly the rate of depreciation on fair value gain. On fair value gain, how much it is coming? 3. So this become additional depreciation as per what? SLM, as per SLM. But if RBM, so this is not your additional depreciation. Why? Because can you say in case of SLM, rate of depreciation is based on cost price. But in case of RBM, in case of SLM, rate of depreciation is based on cost price. But in case of RBM, rate of depreciation is based on WDV. Therefore, this way we can't do. So in that way, what we do, ki depreciation to be charged by parent company will be on what amount? 1,50,000 is the fair value into 10% into 9/12. How much? 11,250. Means parent company will charge this much depreciation on fair value for post acquisition period, but subsidiary company has already charged on 1 lakh, na opening balance 10% into 9/12. How much? It means what is the additional depreciation required? 3,750. So you can see both answers are different. 3,750. Understood is fine. Difference is there or not? Have you understood? Correct. Means can I give you one formula for RBM? Formula is what? Fair value minus opening balance into what? Rate of depreciation into what? Post period divided by 12. Can I give you this formula? This is not formula derived from mathematics. Correct. Means in exam what you will do? 1,50,000 minus opening balance into what? 10% into what? 9/12. Same answer will come or not? Same answer will come. Same answer will come. Bolo. Have you understood? Correct. So can you say you have understood SLM, RBM? SLM, so read the question carefully, whether rate of depreciation is SLM or RBM. If they have given SLM, but you calculate RBM, understood? No mercy. Okay? If question is silent, suppose they have not given whether SLM, RBM, what will apply? No, RBM. General assumption. And that is only correct. Understood what mistake is happening in exam? Because most of the time question will be silent. Understood what mistake you are doing in exam? Correct? So if question is silent, what you will follow? If question is silent, what you will follow? RBM. Have you understood this point? Correct. Understood. But life is again not simple. Life is not again simple. This chapter is difficult because of examination question. Practically, this chapter is totally bakwas. I will say, once you become CNA, delete this chapter from your life. Only this chapter is totally bakwas from what practical point of view. Once you become CNA, delete this chapter from your life. Other all chapters are perfectly correct. Only this chapter is totally bakwas. Now, try to understand now situation. What are the types of question can come? Now we are discussing about additional depreciation or saving in depreciation. Am I right or not? Means if there is a fair value loss, then can you see there will be some saving in depreciation? Are you able to understand? So there can be additional or saving in depreciation. Are you able to understand? Suppose if I am saying कि fair value is equal to 1 lakh and opening balance was, suppose opening balance was 1,20,000. So it means parent subsidiary company has charge on this, but parent company will charge on this. So it means the parent company will now charge less depreciation. So post acquisition profit will now increase. Post acquisition profit will increase. So there can be either additional depreciation or saving in depreciation. So if there is some fair value loss, so it means there is some saving in depreciation. If there is some fair value gain, so additional depreciation. Understood? Now there can be three types of question in exam. Three types of question. If the rate of depreciation given, then whatever I have said that you apply. Means if SLM you have understood, RBM you have understood. SLM what you are doing? Fair value, gain or loss multiplied by rate of depreciation. This you don't write because everything is written. If you want to write, but it is written in what? PDF. Because when I write now, you will understand. If I will not write, you will not understand. In this chapter, so pakka. Into post period divided by 12. This formula have you understood? If it is RBM, then what is the formula say? Fair value minus opening balance into what? Rate of depreciation into what? Post divided by 12. If question is silent, then follow what? If question is silent, then follow this. But sometimes they will give you remaining useful life. Now you only say if remaining useful life is given, can you apply RBM? If remaining useful life is given, so you can't apply RBM. It is impossible to apply RBM. Then only what? SLM. You can't apply RBM. Understood? So if remaining useful life is given, then your formula is what? Fair value gain or loss divided by remaining useful life multiplied by post period. Multiplied by post period. Understood? Understood? Correct? Now in the last exam what happened? Last two exam what happened? They have not given fair value. They have not given carrying amount. They have given changes. Means they have given fair value gain only. Are you getting what I am saying? Correct? Now they have given, just try to understand what happened. They have given fair value gain. What was our fair value gain? What was our fair value gain? 52,500. This is only given. Understood? Correct. And they have given rate of depreciation. But what to do? Only SLM. Now one of the students, what they have done, they have calculated fair value and opening balance by back calculation and applied RBM. I will say perfect, means mastery. But Baba, no, we will not calculate fair value in exam. Whether we are supposed to calculate fair value in exam? No, Baba, no. That much permission is not given to us. Understood? But I will say mastery, super, but they will not give marks. So whenever the fair value gain is given, then also we have only one option, what? SLM, means apply this formula. Don't try to calculate fair value by your own. Understood what I am saying? So in this also, what will be your formula? Fair value gain or loss multiply by what? Rate of depreciation multiply by what? Post period. Understood? So these three type of question can be asked. So I have said in this, if question is silent SLM, I have said if in this question is silent in RBM, but in this two only SLM only. You don't have any option only for RBM. You don't have any option for RBM. But this chapter is totally bakwas or not? This much assumption. And you can't change this. You can't change this. But now I have done everything. Now question cannot be outside this. Have you understood this point? Have you understood this point? Can we move? Can we move? So can you say, now just try to understand. So whenever there is a fair value gain or loss, so what will be our entry? Can you say our pre-acquisition profit will increase with the amount of gain? So what journal entry will do? PP account debit, yeah, asset account debit. What we can say? Asset account debit to pre-acquisition profit, not revaluation. This is not Ind AS 16. Whether we are applying Ind AS 16, this is not Ind AS 16. This is Ind AS 103. Understood? There is no revaluation surplus. We are not applying Ind AS 16. We are applying what? Ind AS 103. Means only we need to increase the asset, and that will become what? Your pre-acquisition profit. Means you need to increase the net asset now. Understood? This you have understood. Now for additional depreciation, what will be your journal entry? Batao. Can you say your post-acquisition profit will? Your post-acquisition profit will decrease, and your PP will also decrease. PP or any asset. It can be any asset now. Your asset will decrease. Your asset will decrease. Okay. If I am saying fair value loss, so what is journal entry? But your pre-acquisition profit will decrease, and your asset will also decrease. Now, if you have understood asset, you understood liability also. So it can be asset or liability. It can be asset or liability. Okay. Now, for post, if there is a fair value loss, so there will be some saving in depreciation. So your post acquisition profit will increase. So what journal entry will do? Asset account debit to post acquisition profit. Post acquisition profit. Okay, now this is one benchmark. Understood? Have you understood this point? Correct. Can I come to next point of this particular topic? This particular topic means I have said plant and machinery, land and building, inventory, trade receivable, trade payable. Trade payable. I said write down first fair value on the date of acquisition. I said then write down book value on the date of acquisition. Now you have understood for plant and machinery also how to calculate. For other, so normally they give book value on the date of acquisition. Understood now? For other, they will give you book value on the date of acquisition. Are you able to understand? And this become your fair value gain or loss. This become your fair value gain or loss. Understood this point? Have you understood? Correct. Now sometime in exam now, they will give you this only. They will give you fair value gain and loss. So can you say then we don't require this? Bolna yes or no? If suppose they have given changes in the value, so you don't require what? Fair value and book value. So thank you very much. Are bolna objective is to calculate this. And if they have given this, thank you very much. So sometimes they will give changes in inventory, changes in trade receivable, yeah, increase in inventory on the date of acquisition like this. So it means what? They have given what? Fair value gain and loss. So thank you very much now. Then you don't require this and this. Are you able to understand? Because our objective is to calculate this and they have given this. So thank you very much now. Are you able to understand what I am saying? Correct. Now after that, can you say we'll do post adjustment? It means, can you say from this we'll do depreciation adjustment? In this also we'll do depreciation adjustment. This too you have understood. This both you have understood or not? Bolo. Now suppose they have not given rate of depreciation. They have not given remaining useful life. So batao what you will do? Suppose they have not given in question rate of depreciation. They have not given remaining useful life also. Then what you will do? I said, suppose they have not given rate of depreciation. I said not this. Either they will give what rate of depreciation or they will give a remaining useful life. Correct now? Or they will give rate of depreciation this. Suppose they have not given rate of depreciation. They have not given remaining useful life. What you will do? Ignore depreciation. Ignore depreciation adjustment. Then ignore depreciation adjustment. You can't assume rate of depreciation and remaining useful life by your own. You can't assume rate of depreciation and remaining useful life by your own. I understood how much bakwas it is. Bakwasness understood? Totally bakwasness na. You are understanding this teacher is bakwas. I am not bakwas. Believe me, I am not bakwas. I am teaching as per I see a question and I see a solution. Got this point? Are you able to follow me? So if rate of depreciation is not given, if useful life is not given, ignore what? Depreciation adjustment. Now can you say this too you have understood post acquisition adjustment? Now let us come to this. Let us come to this. What happened? Then, okay, concentration started? Yes, sir. Now, inventory. Can you see it is quite possible they have given some information about inventory, trade receivable and trade payable. So, but this information is of which date? This information is on which date? Date of acquisition. But we are preparing balance sheet on which date? Date of consolidation. Means if this is sold, so whether it will come in the balance sheet? No. If it is collected, whether it will come in the balance sheet. If it is paid, whether it will come in balance sheet? No. So if it is sold, minus it. If it is collected, minus it. If it is paid, then minus it. Bolna yes or no? Are you able to understand what I am saying? One second. Just try to understand. This information is on which date? Date of acquisition. This is also on the date of acquisition. This is also on the date of acquisition. Now, if it is sold, the inventory is sold, whether it will come in CBS? No. So, if such inventory which was acquired on the date of acquisition has been sold, so the effect of such inventory should not come in CBS on the date of consolidation. Therefore, what? Minus if collected, minus if paid. Understood? Correct? Are you able to understand what I am saying? One second. First, don't ask me any question. First, whatever I am saying that you are understanding, I will come back to your question. Listen whatever I am saying. Don't think out of my box. Abhi, right now, I don't have so much time. First, listen whatever I am saying. I will come back to your point. Because if you think something extra, you will not be able to understand whatever I am saying. Then I need to teach you as per my regular class. Pyar se. I teach in 9 days. You have 9 days, 3 hours. 9 3s are how many hours? So that much hours you have? No. Correct now? So please listen whatever I am saying. First, this is changes on which date? Acquisition. Now, if this inventory is sold, whether it will come in CBS? No, it means deduct it now. Because can you say this balance will come on the date of consolidation? It is as simple as suppose this was 1 lakh fair value change and depreciation adjustment. So this amount will come where? In CBS. After depreciation only will come in CBS. Are you getting? So if this inventory has been sold, so it will not come in CBS. To reduce it. If this trade receivable collected, reduce it. If this trade payable paid, reduce it, and the net amount will come where? In CBS. Net amount will come in CBS. Net amount will come in CBS. Understood? Correct? For example, suppose inventory, they have given fair value 1 lakh and they have given book value 80,000. So what is the fair value gain? Fair value gain is what? 20,000. Correct? And they have given out of this stock 80% sold. So you only say how much will remain in CBS. Out of this stock 80% sold. So how much will remain in CBS? 20%. Will minus what? Sold how much? 16,000. So balance will come where? In CBS. Balance will come in CBS. Understood? Have you understood? So this you minus. This minus means what? It will reduce your post acquisition profit. It will reduce your post acquisition profit. So it will reduce your post acquisition profit. Can you see? Because if the inventory is sold, it will increase your expense. If it will increase your expense, it will decrease your post acquisition profit. Understood? So whenever inventory is sold, it will increase your cost of sales. If the cost of sales will increase, your post acquisition profit will decrease. Similarly, now don't think much right now. Similarly, if this is debtor and they say entire amount is collected, so 20,000 minus and this will become nil. Suppose this is what? Creditor, and suppose this is loss because increase in creditor, this will be loss. Now this is paid. So what you will do? Plus ki minus. You will do plus ki minus. You will do plus now and this will become nil. This will become nil. Understood? So this become post acquisition adjustment. This become post acquisition adjustment means this will decrease your post acquisition profit. This will also decrease your post acquisition profit and this will increase what? Post acquisition profit. Means can I say in this way? If the inventory is sold, reduce it. If the trade receivable collected, reduce it. If the trade payable paid, reduce it. If no information is given, always assume inventory is unsold, receivable is uncollected and trade payable is unsettled. If no information is given, but information given, so you should do it. Have you understood? All points I have covered. All points I have covered. Just read this adjustment number 2 once. Read this adjustment number 2 fast. Done? Read. Done? Understood this everything? Easy and fine. Then this attention read. Attention read. Attention wala point read. Understood? Correct? If you have understood this much, we can take one question directly from examination point of view which have been asked 3 times in exam. This much if you have understood. This much if you have understood, we can take directly one question. Can we take? Take it. But we'll do fast. Okay, we'll do fast, but fast. This question is not in my expected list. But popular question. This is the question. Question 23. Similar question may have been asked 3 times in exam. Okay. Ram Limited acquires 60% ordinary shares of 100 each of Krishna Limited on 1st October 2001. This is what date of acquisition, correct? On 31st March 2002, the balance sheet has been given. Once you read balance sheet very fast. PP, land and building, plant and machinery, investment. This is PC. 8 lakh is what? PC or not? 8 lakh is PC. Inventory, financial asset, trade receivable, cash, equity share capital, other equity, retained earning, financial liability, bank overdraft, trade payable. The retained earning showed a credit balance of 60,000 on 1st April 2001. So 60,000 is opening balance of retained earning, out of which a dividend of 10% was paid on 1st November. On 1st November. But it is paid during which period? Post acquisition period. But declared from which profit? Opening balance. Don't be confused. Don't be confused. Ram Limited has credited the dividend received to returning. Can you say Ram Limited will receive the dividend and they will transfer to PL account only? So this is not an error. This is not an error. Understood? This is correct. Therefore, this particular point is totally bakwas point. No adjustment is required. No adjustment is required. Ram Limited has, fair value of plant and machinery on 1st October 2001 is 4 lakh. What is given? Date of acquisition, fair value is given or not? Means fair value adjustment is required. The rate of depreciation is plant with 10%. Whether given SLM RBM, whether given SLM RBM, not given. This the same question I have done in the class. I have written RBM. So if nothing is given, we'll assume RBM. We'll assume RBM. Understood? RBM. Now if you are applying SLM, understood? 0 marks. No assumption benefit. Okay. Following are the changes in the fair value. Changes in the fair value means what? Means they have given increase or decrease. They have given increase or decrease for the following assets and liability. Trade payable 20,000, land and building, inventory 2 lakh and 30,000. Whenever for asset they have given positive amount, it means increase or decrease? Increase. For liability, if they have given positive amount, increase or decrease? I am trying to confuse you and you are confused. Okay. This confusion will come where? In exam hall. If for liability they have given positive amount, increase or decrease? How many are saying decrease? How many are saying increase? It is increase, not decrease. Okay. The rule is what? Positive means what? Increase. Negative means what? Decrease. For any asset, any liability. I am asked you, you thought and you have done mistake. In exam, who will think? You will think. You will think you will do mistake. So normally what happens? You have done this question many times. You have understood also, but then also you are doing mistake. This happened in exam hall. This happened in exam hall. So what is the meaning? Increase means positive means what? Increase. Negative means what? Decrease. For any asset, any liability. For any asset, any liability. Write down somewhere. This is the point where many students will do mistake. Because they will say, Acha, this is increase, so this will be decrease. Positive means what? Increase. Negative means what? Decrease. Understood? Yes, sir. Now note they have given. It may be assumed that inventory is still unsold. Inventory remain unsold. Understood the point? Unsold. Also assume that other reserve as on 31st March 2002 are the same. This also general assumption I have given. Achha, they have also given trade payable also unsettled. Means that trade payable remain unsettled. Understood that point? Previous CBS. Can we start? Fast karenge. You have that question? You have the question? Working note number 1. First we'll do fair value adjustment. Can you say, because for land and building, trade receivable, inventory and trade payable, they have given changes. So working note is not required. Only for plant and machinery, working note is required. So for plant and machinery, what is the fair value they have given on the date of acquisition? 4 lakh is given. We want what? Book value on the date of acquisition. Whether book value is given? Whether book value is given? Not given. Whether opening balance is given? Not given. So we'll take what? Closing balance. Closing balance is what? 3,60,000. This 3,60,000 will be 90% of opening balance. 90% of opening balance. So what is the opening balance? 3,60,000 divided by what? 90%. How much? How much? 4 lakh. So 4. Right. Everything right. Even though you are not right. Okay? Fast. Your increase speed will increase. Okay. You will brain and your hand will work. In exam, what happened? Your brain and hand does not work together, and therefore accident. So your brain and hand should work together. Right. Okay. What you are saying? No. For land and building, they have given what? Changes only. अच्छा, I have taken wrong amount. Oh, चलो, my mistake. देखो स्पीड में होता है. So it is what? 2,70,000 divided by what? 90% is equal to what? Is equal to 3 lakh. Okay. Less what? Depreciation for how many months? So what is the date of acquisition? 1st October. The first 6 month depreciation. So depreciation of 6 months at a rate of what? So 3 lakh into 10% into 6 by 12. How much? 15,000. So this become 2,85,000. So what is the fair value gain? Fair value gain is what? 1,15,000. Understood? Correct. Now can you see, we'll also calculate additional depreciation during which period? During the post period. Post period means how many months? 6 months. But the SLM ki RVM? You will calculate. You calculate. Don't say. You will do one mistake, I know. I want you to do mistake. Everyone will do, huh? No discussion, no here, there. Live class also, you also calculate. Believe me, I will make you expert from examination point of view. That much commitment I am giving. But you need to follow whatever I am saying. If you are not following, then I will say don't attend the class. Done? How much answer you are getting? Everyone getting 5,000? I know now, someone is there. Do 2 answer, 5,000? 750. Mistake hoga. If even after my explanation, even right now you have understood, then also we are doing mistake because might happen we have not understood one point. What I said, fair value. Fair value is what? Fair value is what? What? 4 lakh. Minus what? Minus what? Opening balance I have said. But you have taken what? 2,85,000. How many you have taken 2,85,000? How many you have taken 2,85,000? Understood your mistake? Understood your mistake? Mistake understood. Don't take 2,85,000. Then to take this only. Oh, in the lakh. If you are taking 2,85,000, then to take this only. Then become SLM na. Understood? Opening balance is what? 3 lakh. Higher chances in exam you will do mistake. I said fair value minus what? Opening balance. opening balance, because if you are taking this, then it is equal to SLM. Then there is no difference between SLM and RBM. Understood what I am saying? Into what? 10% into what? 6 by 12 is equal to what? Live student, Naresh, you have also done mistake. Those who are doing mistake, you should give chocolate to me now. 5,000 now. Understood. So this become additional depreciation and this become fair value gain. So what is the net amount will come in CBS? Net amount 1 lakh. This will come in CBS. 1,10,000 will come in CBS. Understood? Have you understood? Correct. Can we move to second working note? Second working note is what? Working note number 2 is what? AOP. AOP we write down retained earning and general reserve. Yes or no? But what is the closing balance from the balance sheet? Closing balance from the balance sheet. So it is given retained earning how much? 1,64,000. General reserve is what? 2 lakh. So 1,64,000 and 2 lakh. Opening balance from additional information. Opening balance from additional information. So go to additional information. Additional information 60,000 they have given for retained earning. General reserve, the question is silent. Batao. For general reserve, what we will assume? Same as what? Working note. Same as what? Closing balance. Can you assume nil? No, Baba. No. Correct. So this become what? Profit. Profit is how much? 1,04,000. Then what? Nil. Okay. Now till now we have done abnormal loss and dividend paid. So any abnormal loss given in the question? No, ignore. Any dividend is given information? Yes, dividend is given. How much dividend they have given? They have given what? 10%, 10%. So we'll do plus ki minus. First plus, then minus. Okay. So plus final dividend paid. 10% of what? 10% of what? Capital. Capital is given how much? How much given capital? Check karo. It is 4 lakh. 4 lakh na? 4 lakh. 10% of 4 lakh. Okay, sir. So 10% of 4 lakh. How much it is coming? 40,000. Can I say done? So this become how much? 1,44,000. 1,44,000. Now we'll do pre and post. So pre and post. Can I say there is no general reserve? There is no write down general reserve. It will be entirely retained earning. So can you first give me allocated profit? What is the time ratio? 6:6. So it is 72,000 and 72,000. Then in this what we'll add? Opening balance. Opening balance is what? Opening balance is what? Total. Give me total. 2,60,000. You can add on here by in bracket 60 plus 200. You can add down in bracket for informing them. Okay. But you can add on total. Then minus what? Final dividend paid. But from pre ki post. From pre ki post. Because it is paid after acquisition. Dear, be careful. Be careful. Minus 40,000 from post. Now what is the answer? 3 lakh. 3 lakh. 32,000 and 32,000. Understood? Correct. This much you understood? Can you say with flow? Very easy now. If you understood everything, then easy. Now coming to fair value adjustment. Now fair value adjustment, either you can give the effect in AOP here or you can give effect in SONA directly. My suggestion is that give in SONA. Then all types of question can be done together. But ICI is doing from here. What you want, I will do that. Because SONA may, when they ask deferred tax, because I am expecting one question of deferred tax, then thoda sa it will be difficult if you are doing from here. Are you getting? So you want from here or you want from SONA? Ultimate solution will remain same. But don't blame me after that ki sir, ICI is doing that way. If you want to follow ICI solution, I can do from here. Bolo. but ultimate answer will remain same. What do you want? Sona or here? Because Sona mein na, if you are doing from Sona, then all types of question can be done. But if you are doing from here, in some of the questions, some other working note need to be done. ठीक है? तो चलो, can we leave यहाँ पर? But ICI is doing fair value adjustment from here. Okay, sir? Got this point? Got this point? Yes, sir. Now, working note number what? 3. Statement of net asset. We write down equity, we write down date of acquisition, date of consolidation and post. In exam, date of acquisition also write down, date of consolidation also write down. Okay, and post write down 6 months. That you can write down. Can you give me equity share capital? 4 lakh and 4 lakh. Can you give me other equity as per AOP? 3 lakh 32,000. Post is how much? 32,000 and 3 lakh. Just check closing balance. So it means we are doing perfectly. Match. Means AOP is to correct. Now we can move now. So we get a green signal. Move. Understood? Yes, sir. Now it is coming how much? 7 lakh 32,000. This is what? 32,000. This is how much? 7 lakh 64,000. Now we'll do plus minus fair value adjustment. Plus minus fair value adjustment. So one by one. For plant and machinery, but what is the gain? Fair value gain. Gain. What I am asking, listen. On the date of acquisition, 1,15,000. And what is the additional depreciation? Minus, sorry, this is plus. Gain is 1,15,000. What is the depreciation? So it is plus ki minus. So this will reduce your post acquisition profit. And what will come in the balance sheet? 1,10,000. Understood? Now, then they are going land and building. How much increase that is given in the question? So 2 lakh is the gain. But whether rate of depreciation given? Whether useful life is given? No. Now don't assume 10% is for plant and machinery. So this is also 10%. That is not given. Ignore what? Depreciation. Jindabad. Or we'll assume that this entire appreciation is for land. No depreciation. Okay. 2 lakh. Understood this point? Now, how much changes in inventory they have given? So 30,000 gain. Whether it is sold, unsold, to no adjustment. If sold, then minus. If sold, then minus. Understood? It is 30,000. I hope you are understanding. Then what is trade payable? Increase means gain or loss. Increase in trade payable is gain or loss. So it will be minus, because liability will increase, your net asset will decrease. Be careful. Most of the students will do mistake यहाँ पर because of in exam. Are you getting some mistake happen in exam by default mistake? So minus how much? 20,000. Whether it is paid, not paid. So this will remain minus 20,000. Understood? So this become total how much? $10,57,000. Then 27,000. Then 84,000. Understood? Now we'll divide, allocate parent company and NCI. What is the ratio? 60% and 40%. So only allocate post acquisition profit. Don't do allocation of this. Don't do allocation of this. The post acquisition profit will be allocated to parent company NCI in 60:40. Allocate 16,200 and 10,800. Understood? Working note number 3 done. Correct. Have you understood this fair value adjustment? Now suppose it is given कि trade payable settled, then what you would have done? You will do minus ki plus. If this is minus, so this will be plus. If this is plus, so this will be minus, because you are reducing it now. So whenever you are reducing, the reverse effect, understood? Correct. If the land and building, so nothing has been given. Have you understood this point? Have you understood this point? So can you do this information by your own in exam? By your own in exam? And that will affect your post acquisition profit. Understood? Either it will increase or decrease. Okay, great. Now next working note is what? Working note number 4. Now we'll calculate goodwill or gain on bargain purchase. Batao. First we write on PC. PC is given for 60%. How much? It is given in the balance sheet now. So this will be taken from balance sheet. From balance sheet always. Means this is cost price of investment. Is nothing but purchase consideration. You can add on fair value of consideration paid. Now we write on NCI. But by which method? Fair value method or Pasina method? Whether fair value information given? Whether fair value information given? Not given in this question, not given. NCI by 2 method, fair value method or Pasina method. Whether fair value information given, not given, so we'll use what? Pasina method. So you write on Pasina. In exam, don't write Pasina, write on proportionate share in INA method. For how much percentage? So this is 40% of what? 40% of fair value of INA on the date of acquisition. This is fair value of INA on the date of acquisition. Understood the importance of Sona? Importance of Sona you will understand. This is fair value of INA on the date of acquisition. Understood? Not on the date of consolidation, because this we are calculating on which date? On the date of acquisition. Understood? So 40% of what? 10,57,000. How much? 800. Total is what? 12,22,800. From this will minus what? INA. INA on which date? On the date of acquisition. That already we know 10,57,000. But this is goodwill. Which goodwill? Full ki partial? This is partial. In exam write down partial goodwill. Understood? Partial goodwill how much? 1,65,800. Load done. The last working note number 5. We write on other equity and NCI. In your ICI solution, they are doing 2 working notes. Other equity separately, NCI separately. If you want to do separately, that is your choice. Means this working note separately, this working note separately. But we can do together also. If you want to follow ICI solution, follow ICI solution. In class, so I will do together. Chalega. Understood? So retain earning, general reserve या other reserve and NCI. Okay. Now these 2 balance will take from parent company balance sheet. So can you give me parent company balance sheet? Retain earning and other reserve how much? Retain earning is at 1,14,400 and 6 lakh. 1,14,400 and 6 lakh. 1,14,400 and 6 lakh. And NCI opening balance will be this opening balance. Whatever we have taken in previous working note. So this become the opening balance of what? NCI on the date of acquisition. 4,22,800. Correct? Can I say in this we'll add plus share in what? Post acquisition profit. Share in post acquisition profit. As per which working note? Sona. Already we have done 16,200 and 10,800. So 16,200 and 10,800. Total will come what? 1,30,600, 6 lakh and 433,600. Done. Now we can prepare CBS. Now we can prepare CBS. Look, done. Same question have been asked 3 times in exam, but in recent time they have not asked. Super easy question, but have you understood the flow? Flow you understood. Now we can prepare CBS. CBS means what? Just try to understand. CBS means book value plus minus adjustment. Rule is simple. Book value plus minus adjustment. This is the formula. So can you give me land 3 lakh plus 3 lakh 60, and what is the adjustment? 2 lakh. So 3 lakh plus 3 lakh 60 plus 2 lakh. You can do. Plant and machinery 4 lakh 80 plus 2 lakh 70 plus 1 lakh 10,000. Adjustment on the date of consolidation. Very good. Adjustment on the date of consolidation means you will take this adjustment. Which adjustment? Okay, this adjustment in the CBS, this adjustment in the CBS. Understood? Correct. Then can I say goodwill also come? Goodwill will come as per working note. Investment will not come. Inventory will come 2 lakh 40 plus 70,800 plus what? Plus 30,000. Then trade receipt will come 1 lakh 90,600 plus 80,000. Nothing. No adjustment. Cash will come 29,000 plus 6,000 plus nothing because no adjustment. Equity will come how much? Equity share capital only what? This will not come. This will not come. Can I say other reserve and retained earning will come as per last working note? As per last working note. After that you write on NCI as per last working note. As per last working note. Understood? Then this will be book value plus book value because there is no adjustment. Hard trade payable 94,200 plus 34,800 plus 20,000 because increase. Increase. Okay, done. Balance will tell you. Super easy. So can I say, can I conclude you have understood fair value adjustment? Fair value adjustment you understood. Now next working note. Concept number 7 is very simple. Cancellation of intercompany debt. Okay, this is the very easy. The intercompany balance will be cancelled. So if there is some receivable and payable, that will be cancelled. So what general entry will do? Payable account debit to receivable. But sometime what happens? They will give you this as 10,000, this as 10,000. So both can be cancelled. But sometimes they will give you this is 9,000 and this is 10,000. Then the difference will be considered check in transit. Means the difference will be what? Check in transit. Means the party has issued check but other party has not received the check. So that difference will be check in transit, and that check in transit will be shown under the head cash and cash equivalent. So any difference will be considered check in transit and that will be shown under cash and cash equivalent. Now for cancellation of mutual acceptance means bills of exchange transaction. So one party might be drawee, one party might be drawer, correct? So in the drawal books BR will be there, in the drawee books BP will be there. So that need to be also cancelled. Parent and subsidiary company, that will be also cancelled. So what general entry? Bill payable to bills receivable. Can you see both are same? Then so no doubt it will be entirely cancelled. But sometime what will pay? They will give you bill payable 10,000 and bills receivable 8,000. It means can I say drawer has discounted 2,000 bill. So it means drawer has discounted 2,000 bill. So whatever has been discounted cannot be cancelled. Whatever has been discounted cannot be cancelled. Means will cancel how much? Only 8,000, and bill payable of 2,000 will remain in CBS. Bill payable of 2,000 will remain in CBS. Understood this point? Nowadays they are giving this type of transaction. Debenture of subsidiary company held by parent company. Debenture of subsidiary company held by parent company. Understood? Suppose debenture of 1 lakh. Nominal value 1 lakh. And parent company has done investment at a cost price of 1,20,000. 1,20,000. So can I say this is nothing but intercompany borrowing, one type of intercompany borrowing. So this will be also cancelled. So this will be cancelled. And can I say because parent company has paid some extra amount, that will be lost, and that loss will be transferred to consolidated retained earning. That loss will be transferred to consolidated retained earning. So any gain means it can be gain, it can be loss. It can be gain, it can be loss. Gain or loss will be transferred to what? Consolidated retained earning. Understood? This point have you understood? Chalega? Understood. Then next point is concept number 8, cancellation of unrealized profit on unsold inventory due to intra-group transaction. Due to intra-group transaction. Unrealized profit. Okay, I hope you know about this downstream transaction and upstream transaction. So there can be two type of transaction. Means if I am saying parent company has sold to subsidiary company, so this become downstream. So suppose cost price was 1 lakh. They have earned a profit of what? 20,000. And now the sale price become 1 lakh 20,000. So this will become the stock of what? Subsidiary company at rupees 1 lakh 20,000. And this remain unsold. This remain unsold. So can this include unrealized profit of which company? Parent company. How much? 20,000. So can you say in CVS 1 lakh 20,000 stock will include profit of which company? Parent company. That need to be eliminated. That need to be eliminated. So stock include profit of which company? Parent company. So what we will do? We need to eliminate. So we will pass journal entry consolidated retained earning account debit to stock. Means our journal entry will be what? Consolidated retained earning account debit to inventory. Inventory. Means can I say this affect which adjustment, which working note? Retained earning working note. Retained earning working note. Because this is the profit of parent company. Profit of parent company has been transferred retained earning. So from that reduce that profit. Understood? Suppose they have said if 40% is sold, it means we can eliminate only 60% now because 60% is unrealized. 60% is unrealized. So if 40% has been sold, the unsold is what? 60%. Then you can only eliminate 60% of URP. 60% of URP. Understood is fine. Now, if I am saying parent company, subsidiary company, but subsidiary company has sold goods to what? Parent company. So it means suppose the cost price is 10 lakh, profit is 1 lakh and sale price is what? 11 lakh. Correct? So this becomes the stock of which company? Parent company. 11 lakh becomes the stock. Now it includes profit of which company? Subsidiary company. And profit of subsidiary company means AOP. Profit of subsidiary company means AOP. And this transaction will be always post-acquisition transaction. It cannot be pre-acquisition transaction. So whenever we are eliminating analyzed profit, that is only for which transaction? Post-acquisition transaction. So but this need to be eliminated from pre-acquisition profit or post-acquisition profit? Post-acquisition profit. So we'll say what? We'll say post-acquisition profit we reduce to what? Stock we reduce. Means can I say this we reduce in AOP? This we reduce in AOP. Correct? Are you getting what I am saying? But normally I have seen students forget this in AOP. Normally. You will forget this in AOP. Mostly I have seen students forget because with the flow. Because this will be as an additional information, you will forget. So I will just giving one more point. Suppose you forget in AOP. So if you will change AOP, it will change entire answer. So I am just giving one shortcut which I always apply. Correct? So if you forget, this profit of subsidiary company belong to whom? Parent company NCI. Means can I say it will distributed to retained earning and NCI? Yes or no? So can I say if you have not reduced post acquisition profit, directly reduce what? Retained earning and NCI with the respective share, suppose 70% and 30%. So directly in the working note of retained earning and NCI, you can do adjustment or not? Directly means instead of this, can you pass this an entry? Retained earning account debit, NCI account debit to stock, to stock. But ICI is following this. I will say follow ICI for this. But suppose if you have forgotten, and most of the time we forget. So this is the best way. Don't change AOP because it will change AOP. It will affect entire solution. So last working note may you do adjustment. So this is also correct. This is also correct. Understood. So what is the effect? Post acquisition profit to stock or retained earning account debit, NCI account debit to stock. Understood. Have you understood? Chalega. This also you have understood. Any doubt? No doubt. Correct. Now, there is one more point. Cancellation of unrealized profit on unsold PP. Just try to understand. There is only one question given as a separate question for this. This type of point till now ICI has not given in the full question. And that separate question is already asked in exam. So now I am expecting that Same point may be given in the full question. Same point might be given in full question. Try to understand what I am saying. I am expecting this point in exam now. Are you getting correct? So what they are saying, just try to understand. Suppose stock is not transferred. What is transferred? PP is transferred. So the parent company and subsidiary company. Now suppose the cost price of PP is 10 lakh and it has been transferred at a profit of 1 lakh. To whom? To whom? Subsidiary company. So this is property, plant and equipment, which is now become PP of what? At 11 lakh. At 11 lakh. Understood? Now suppose this transaction was done at the beginning of the year or at the mid of the year. That will be given in the question. That will be given in the question. Suppose this transaction was done at the beginning of the year. So can its subsidiary company has also charged depreciation on this? Depreciation on this as for the entire year, and they have given rate of depreciation, suppose 10%, rate of depreciation 10%, or they will give remaining useful life, whatever they have given. Understood? Correct. Now in this, what is the adjustment? Try to understand. Can you say first, so this include profit of which company? Parent company. First, so this include profit of parent company, so that need to be eliminated. The profit of parent company means retained earning or AOP? Retained earning. So what is the first adjustment? Retained earning account debit to PP. Retained earning account debit to PP. How much? 1 lakh. Retained earning account debit to PP 1 lakh. Understood? This you have understood. But can you say now subsidiary company has charged additional depreciation of 1 lakh? Means they have charged some extra depreciation of 1 lakh. Actually, as a group company, their depreciation should be on 10 lakh. But parent company has charged depreciation on 11 lakh. So 11 lakh means 1 lakh extra. So 1 lakh extra depreciation for the entire year is what? 10%. 10% what? 10,000. This depreciation has been recorded in whose books? Subsidiary company books. So subsidiary company books, so it is AOP or retained earning? AOP. Means post acquisition transaction, it become post acquisition profit. So what journal entry will do? Can you see we need to increase PP and reduce what? Post acquisition profit. So what is second journal entry? PP account debit to what? Post acquisition profit by what? 10,000 and 10,000, 10,000, 10,000. Or we can say, if you don't want to do in AOP, so what you will say? If you don't want to do in AOP, so what you will say? PP account debit to what? Retained earning and NCI. Retained earning and NCI. This is also acceptable. Have you understood? This but my expectation is that they may give this new adjustment in your exam. Till now not given in exam in full question. A separate question have been asked only for this depreciation adjustment for 4 marks. But till now not given in the full question, which I am expecting now. Have you understood? Correct. Now you will say about upstream transaction. Parent company, subsidiary company means now the cost price of this is suppose 10 lakh. They have earned a profit of rupees 1 lakh and they have sold at what? 11 lakh. So this become the cost price of PP 11 lakh. Understood? And they have given rate of depreciation. How much? 10%. Understood? And suppose the transaction was done on 38th September. This transaction was done on 38th September. Understood? Batao. What journal entry for this unrealized profit? Bolo. Means you need to eliminate this profit. This is the profit of which company? So you will affect retained earning or AOP? AOP. So you will say what? Post acquisition profit account debit to what? PP. Or you can say retained earning account debit, NCI account debit to PP. Correct? This will be affected in AOP. Understood? Correct. Second, who has charged additional depreciation? So that need to be also eliminated. But for how many months? 6 months. So 1 lakh into 10% into 6 by 12, how much? 5,000. That become additional depreciation on unrealized profit. That need to be also eliminated. So what generally PP account debit to what? Only retain earning. Only retain earning. By what amount? 5,000. Understood? This was what amount? 1 lakh. This was what amount? 1 lakh. Have you understood this point? Have you understood this point? I am expecting this transaction in exam can be asked. New adjustment. New adjustment. Till now, not asked. Till now, not asked. Understood? Can you read this now? Read this now fast. Fast read. Achha, whenever adding post acquisition profit now, that is after time adjustment. Means that when you have understood pre and post, not before time adjustment. Huh? So you should reduce what? After time adjustment from pre or post. Got this point? Have you understood this? Have you understood this? Got this point? Chalega, can we move? Yes, sir. Next point is bonus share. आ गया bonus shares. Bonus shares. How many have understood bonus shares adjustment? Means have you done bonus share adjustment previously? Huh? You have understood bonus shares? Not understood. Done but not understood. How many of you understood bonus shares? Understood. Chalo, ठीक है. Now, means most of you have not understood. Listen carefully. Listen carefully. Now, whenever bonus shares is there, so there are 3 points to be taken care. 3 points to be taken care. Correct? First point is holding ratio. First point is holding ratio. Correct? Understood? Now, first you give me what is the journal entry of bonus shares. What is journal entry of bonus shares? Bonus shares means bonus share means a bonus shares declared by subsidiary company. All things we are doing for subsidiary company. Nothing is for parent company. If bonus share declared by parent company, ignore. We are discussing bonus share declared by subsidiary company. So what is the journal entry? Reserve and surplus account debit to equity share capital. Means can you say due to bonus share net asset will not change? Due to bonus share net asset will not change. And what is the objective of our chapter? To calculate net asset on the date of acquisition and on the date of consolidation. Means bonus share will never affect net asset at a point of time whenever bonus shares are declared. Because you are increasing reserve, you are decreasing reserve and surplus, increasing equity share capital, and you all know that bonus is without any consideration. So no money is coming, no cash inflow, so no net asset change. Understood? Correct. Now, suppose, just try to understand, the parent company has acquired 6,000 shares out of 10,000 shares at this point of time. And here, company has declared bonus share in 1:2 ratio, means 1 for every 2. So my question to you all, initially it was 60% holding ratio. Whether holding ratio will change यहाँ पर, whether holding ratio due to bonus share will change, will never change. Means can I say holding ratio before and after bonus shares remain same or not? Remain same. But what happened? As per the information given the question, student do mistake. Just try to understand what they will give. They will give you this information 6,000 acquired. But they will give you balance sheet on which date? On CBS date. This date now. This date in the balance subsidiary company, equity share capital will come. This will be after bonus share, before bonus shares. After bonus shares. After bonus shares, correct? So they will give you 1,50,000, means rupees 10 each, means 15,000 equity shares. This will be 15,000 equity shares. So this 6,000 is before bonus year, after bonus years. This 6,000 is before, after. This 15,000 is before, after. But what you will do? You will not read the question carefully. You will do 6,000 divided by 15,000. Which is it correct? No. Means can I say when you are calculating holding ratio, either both numerator or denominator should be what before? Yeah, both denominator should be after bonus year. Means this calculation is wrong. Then your calculation will be what? 6,000 divided by, can I say you will make 15,000 before? So how to make it before? If initially you have 2, now you get 1, so now it becomes 3. So can I say this is 3, we want 2. We want 2 now. So what we'll do? Into 2 by 3. So it will come out 6,000 divided by 10,000. So how much you are getting? 60%. How much you are getting? 60%. Have you understood? Or can I say you can do in this way? 6,000 plus bonus say how much? 3,000. Divide by what? 15,000. This will also come how much? 60%. This will also come 60%. Understood? So for bonus year question, they will not give you 60%, 70%. They will give you number of shares acquired to confuse you. And can you see if you have done this mistake, all mistake. So be careful about holding ratio. Be careful. Whenever bonus year question, so be careful about holding ratio. Understood? So can you say numerator, denominator should be either before or should be after bonus year. Understood this point? So read the question carefully. Read the question carefully. Means this is a dangerous point in exam. Understood? Can I proceed? The first point you have understood. First point, adjustment number 1, calculation of holding ratio for parent company. For parent company. So holding ratio of parent company, either both you take before, yeah, both you take what? After. Now you will not do mistake. Now, second adjustment is what? Treatment of bonus share in AOP and SONA. AOP and SONA. Now there can be two type of situation in exam. It's two type of question. They will give bonus shares. They will say subsidiary company has not done any journal entry of bonus shares. Or they will say subsidiary company has recorded what? Has recorded bonus shares. Understood? Correct. So two type of question will be there. They will say bonus share declared in this ratio, but no journal entry has been done by subsidiary company. Correct? So, understood? So there is one shortcut. Shortcut is what? Ignore what? Entire treatment of bonus share. Ignore treatment of bonus share means as if it is not given only. As if it is not given only. And your answer will be same. Means in exam, 2 times they have asked bonus shares. 2 times they have asked bonus share and this was the only question. Understood what I am saying? They have said no journal entry. Means ignore. If you ignore, your entire solution become correct. But just try to understand. Ki there can be 2 type of working note. Either you do adjustment or you ignore. Ultimately your answer remain same. In one of the exam solution they have done some adjustment. In one exam solution they have written because it will not affect the net asset on the date of acquisition. Then ignore shortcut. So can you say we can also follow this because ICI is also following this. Because now ICI is also following this, so we can also follow now. And why to do adjustment? Why to waste our time? Why to waste our time? So can you say we can also follow this? But if you want, I can give adjustment also. Bolo, what do you want? Ignore. From my point of view, if I am a student, I will also ignore. So can we ignore? Understood. So what conclusion we have done? Ki bonus share is declared by subsidiary company and no journal entry has been recorded by subsidiary company. Ignore the adjustment from the entire solution. From the entire solution I am saying. Don't give any fact. Chalega? Easy or not? So 2 times they have asked, both times they have asked what this? Now we are expecting what? This. But if they have given journal entry done, then you can't ignore. Then you can't ignore. And this is only interesting. Means in exam 2 times they have asked, that was easy. If you know the simple concept, it will not affect net asset. So anyone will ignore. So no journal entry, thank you very much. But if they have done journal entry, so some adjustment is required or not. So that adjustment we need to understand. I hope you have understood this point. Have you understood this point or not? Are you able to follow me? So I am explaining this now. So can I take one example? Can I take one example? Madam. Because if I will say plus minus, now you will not be able to understand. With numbers you will be able to understand. Plus minus, now your brain will block. Y plus, y minus. But when I take number, now you will try to understand. You will be able to understand. Okay, na? So they have given equity share capital. And reserve and surplus means retained earning. Suppose they are given 31st March 2024, 31st March 2025. This so they will not give. This they have given 1,50,000. Understood? This they will never give. Understood now? Because they will not give balance sheet. And they have given retained earning 1 lakh and 1,50,000. And they have given general reserve 70,000 and 50,000. Understood? Correct? Then they will give you additional information on 30th June 2024. Parent company has acquired 7,000 equity shares of subsidiary company at 5,50,000. At 5,50,000. Point number 1 you understood? So this become date of acquisition. This become date of acquisition. Correct? Then they will say point number B. Point number B. Ki on 31st July 2024, both company has declared and paid final dividend of 10%. Final dividend of 10%. Final dividend means of previous year. Final dividend means of previous year. Then they will say point number C means I am just giving one good example so that all points are covered. Easy example. I am not starting with the easy example. Okay? Okay? Then they will say on 31st March 2025, subsidiary company has declared bonus shares in 1:2 ratio out of general reserve as on 31st March 2024. Out of general reserve as on 31st March 2024. Correct? Understood? And if nothing has been given, but the journal entry has been done or not done? If nothing has been given, the journal entry done or not done? Done only, correct only. How can we assume that it is an error? Correct now. If nothing is given, means journal entry has been done. Journal entry has been done. Means in last 2 questions of exam, they have given journal entry is not done. Understood? Correct? This is the question. Question, have you understood? Can we start? Solution. But the first we want holding ratio. So this is rupees 10 each. Rupees 10 each. But what is your holding ratio? Holding ratio. So how many shares acquired? 7,000. But the journal entry done. So this is after bonus share, before bonus share? After. Be careful. Be careful. So it is 15,000 after bonus share. 15,000 after bonus shares. Understood? Correct. So what you will do? You will say 15,000 into what? 2/3 you will do. because 2 then plus 1 become 3. Correct now? So 2 by 3 you will do. Understood? So it will become 7,000 divided by 10,000 is equal to what? 70%. Or you can say in this way, 7,000 plus 3,500 divided by what? 15,000 is equal to what? 70%. Both will come 70% only. Be careful about this first. Now we'll do AOP, analysis of profit. Analysis of profit. Okay. So you write down retained earning and general reserve. But what is the closing balance I have given? Closing balance is what? 1,50,000 and 50. 1,50,000 and 50. 1,50,000 and 50. Then we write down opening balance. Opening balance also I have given. Opening balance given 1,70,000. 1,70,000. Correct. So what is the difference? Difference is what? 50,000 and negative 20,000. Negative 20,000. Negative coming, don't panic. Okay, flow. We're adding correctly, go on. Then can I say, we'll say plus what? Final dividend paid. Plus final dividend paid. So how much percentage? 10%. 10% of what? 10% of what? 10% of what? 10% of. Can I say, here also be careful. Can I say, this is the closing balance after bonus shares? But again, this is final dividend of which year? Previous year. Previous year there was no bonus share. It means, can I say, we need to give bonus shares, we need to give dividend on equity share capital excluding what? Bonus shares. Understood? Understood. Can I say 50,000 is what? Bonus shares. So this will be 1 lakh. Can I say, here also you can do mistake. Be careful. Danger. This is also point of danger because we are habituated of taking what? Capital. In exam you need to think that much. That much. 10% of what? 10% of what? Opening capital we can say. Opening capital means before bonus share. Be careful. So it will come 10,000. 10,000. Now can you say, because journal entry has been done of bonus shares, so first we'll add back. Now journal entry has been done from retained earning or general reserve? General. It will be given in the question. It will be always given the question out of what? It will be always given the question. So can you say, we need to first reverse the journal entry. So what we'll say, we'll add back this to what? General reserve. So can you say, amount of bonus share is what? If I will say 1,50,000, so it will be 1 by 3. The amount of bonus share is what? 50,000. 50,000 is the amount of bonus share. So we'll say plus bonus share, plus bonus share, plus bonus share. In general reserve we'll add. In general reserve we'll add. Because it was from general reserve. It is from general reserve. Understood? Correct. So what is the profit? It is coming 60,000 and 30,000, 60,000 and 30,000. Now this will be allocated in pre and post acquisition profit. We write down pre, and then in post we write down what? Retained earning and general reserve. Can you do allocation of profit in which ratio? No, 70:30 is holding ratio in the lakh. Understood? Presence of mind. In exam, no one is there to help you. 70:30, batao. Understood? Then after exam, you need to go to temple. Okay? Correct? समझो, just a high level of concentration. इधर उधर थोड़ा सा thinking about someone else. Understood now? So in exam, think about yourself only. Even though you are committed. Understood? Correct? Even though you are committed. Because in classroom, once I come in classroom now, I forget about my entire family. Even though morning I have done fighting with my wife, but then also I'll forget everything in classroom. And sometimes suppose that is in classroom affected, so believe me, I'll do many mistakes. In recording classes now, who have taken my classes? I have done sometime mistake. It means that day fighting with my wife. Morning fighting. Understand? Jabardast fighting. And in classroom, I had no concentration. So if I am doing mistake in class, means no concentration. And that affect. Means we are also human being now. So in exam, I will say before 10, means I will say before 1 month exam, don't discuss anything with anyone. Close yourself in one room. When I was doing CA Finana, 2 months I have not went outside my, that was PG, means one rented place. So rented, I have not went outside only. 2 months close in home. Only there were 4 friends doing CA. We used to talk whenever that was also in break time. Lunch time, breakfast, thoda discussion, then went to room. 2 months full close. We don't know what is happening outside. No effect. This much sacrifice is required. Because one single incident can affect your 10 days. One single incident can affect your 10 days. It affects, 100% it will affect your exam. So I will say don't do any discussion. Don't do any discussion. I'll just give example, don't take it other way. Don't take it other way. Suppose Mr. X, ठीक है ना, and Mr. Y is the close friend. ठीक है ना, Mr. X, Mr. Y is the close room. He is doing very good studies and he is committed to passing the exam. Suddenly he understood about Mr. Y, something happened in his life. Whether it will affect or not, 100% it will affect. 100%. Something happened in his life, it will affect the life of what? Mr. X. So I always say good friend are good enemies for exam. Understood? Good friend are good enemies for the exam. I will say don't break friendship, but friendship is important only after becoming CA. Because if you will not become CA, they will only leave you. And this is a fact. If you will not become CA, so no one will come to you. This is fact I am saying. Whenever, in fact is what, if you have money, everyone will come. If you don't have money, after this you realize after some point of time. Not now. But after some point, this is the only fact. You will have friend if you have money. If you don't have money, no one will, they will come. But this is a fact. It means right now think about yourself. You need to become selfish. This we are doing for ourselves. Correct? Yes, sir. Now allocated profit. Batao. 60,000 in which ratio? 3:9. Batao. Allocate fast. First retain earning. 15,000 and 45,000. Then general reserve. 7,500 and 22,500. Total 22,500. 4,500. 22,500. Okay. Total was not required. Then we'll add opening balance. Opening balance is what? 1 lakh plus 70,000. So 1,70,000. Pre-May will be added. Then can you say minus final dividend from where? Pre ki post. Final dividend deduct from pre ki post. Post as per the date of payment. So it has been paid after acquisition. So what was the amount? 10,000. Deduct from post. Understood? Correct? Then minus bonus share. Minus bonus share also na. Because of course we want profit after bonus shares. So minus bonus share. Now it will be deducted from pre ki post. Pre ki post. Just try what is the information given. On 31st March, as company has declared bonus shares in 1:2 ratio out of general reserve as on what? Means can you say from pre-acquisition general reserve? And you only say just try to understand whether bonus share can be given from current profit. Bonus share is given from accumulated profit. Always from accumulated reserve. I will say even though question is silent, deduct from what? From pre only. Always deduct from pre. Always deduct from pre. Understood? So even though question is silent, Even though in this the question has been given, but even though question is silent, deduct from pre. So what was the amount of bonus shares? 50,000. 50,000 minus. Now can you give? How much? How much? It was 45,000. It was 45,000. No? Oh, I've written 4,500. So 45,000 minus 10,000, how much? 35,000. This is how much? 1,42,500. Understood? Understood? Correct. Now we'll come to Sona. Sona, date of acquisition, date of consolidation, post, we write down retained earning and general reserve. But what is the equity share capital? How much given? 1,50,000 given. But this is including ki excluding bonus share. So can you say, just try, this will be also 1,50,000 only. Why? Just try to understand. Because you reduce which reserve? We reduce which reserve? Pre or post? We reduce pre-reserve. So can you see, you will increase pre-equity share capital only? Yes or no? Means if you are passing one journal entry for bonus shares, general reserve, account debit to equity share capital. So if you are reducing pre-reserve, so you will increase which equity share capital? Pre-equity share capital. You can't increase post-equity share capital now. Then only it will be nullified. Then only it will be nullified. It means, can you see, it should be including bonus shares only. It should be including bonus shares, and it is including bonus shares only. Understood? Means if you want to do in this way, do in this way. Write down 1 lakh. Write down 1 lakh and then add what? Bonus share how much? 50,000. Ultimately your answer remains same now. Or better I will say, in Sona, don't do effect. Whatever is the closing balance, that will only come. That will only come. Means Sona, no effect is required. For Sona, no effect is required. Whatever closing balance, that you write down as opening balance, means on the date of acquisition. Then add on other equity. Other equity is what? 1,42,500, 35,000, 22,500. What is the total? 2 lakh. What was the closing balance? Check karo. 2 lakh means we are doing correct. Once again cross check ho gaya. We are doing correct. Understood? Correct. So this become what? How much? 2,92,500, 35,000, 22,500, and this will be 3,50,000, 3,50,000. Done. Understood? This will be allocated to parent company and NCI. This will be allocated to parent company and NCI. Understood? Have you understood this point? So what we have understood till now for bonuses? Can I recap? Adjustment you understood? So what we have understood? Whenever bonus is given and journal entry is not done, ignore it completely. Forget about bonus share in exam. Your answer will be correct. Ignore it completely. Understood? But if bonus share adjustment, bonus share journal is done, then first think about holding ratio. Be careful. Be careful about holding ratio. Correct? Then be careful about final dividend. Be careful about final dividend. These are two mistakes you can do. Understood? Then when you are doing AOP, first add bonus shares in general reserve. Then allocate pre and post, and then deduct always from pre-acquisition reserve. Deduct always from pre-acquisition reserve. Even though question is silent, question may be silent, then also deduct from what? Pre-acquisition reserve. There might be one dangerous question ki pre-acquisition reserve is insufficient. Then you don't have any choice. Then from post-acquisition reserve only now. But that type of question, from my point of view, they will never give. If given, then to apply common sense. Then apply common sense. I hope you are understanding. Are you able to understand? कि pre-acquisition general reserve is pre-acquisition reserve is insufficient, then means it is declared from what? Post-acquisition reserve. But that type of question they will never ask. If asked, to apply what? Common sense. Understood? Correct? And in SONA, I will say no effect. Closing balance is after bonus share, that only become what? On the date of acquisition. Only this much. Then your solution will be correct. Understood? So bonus share understood? Bonus shares. So you can see treatment of bonus share. If bonus shares are not recorded in subsidiary company, first I have given concept. Then alternatively, ignore bonus share adjustment completely from what? AOP and so on. This only follow in exam. Why to take a risk? Okay, na? Then situation number 2, if bonus shares are recorded by subsidiary company, first add bonus shares, then deduct from pre-acquisition reserve, then in SONA this equity share capital will be always including what? Bonus share. Attention, if final dividend is declared and paid in current year, it will be calculated on share capital before what? Bonus share. Last adjustment number 3, treatment of bonus share in parent company, because who has declared? Subsidiary company. Who will receive? Parent company. But what journal entry parent company will do for bonus share received? No journal entry. No journal entry. Parent company will do no, because no consideration paid. No consideration paid. You will say investment account debit to equity share. Anda na. Investment account debit to cash or bank. Cash or bank is 0. Anda. So it means no journal entry in the books of parent company. No journal entry in the books of parent company. Understood? So no journal entry in the books of parent company. What happened in one of the AS CA final based question? Nowadays I have said now that they are asking that question which they used to ask in AS CA final based question. So in one of the questions they have said that parent company has done no journal entry. Thank you very much. They are confusing you by writing this. That parent company has done no journal entry. So no journal entry only. But can you see, if they will say parent company has not done journal entry, you will do some journal entry. Are you able to understand what I am saying? So in the books of parent company, no journal entry. So if they have given no journal entry, thank you very much. No adjustment in the books of parent company for bonus share received by subsidiary company. This is the entire effect. Done. Chale. Next point. Proposed dividend. Now proposed dividend, but whether parent company will recognize proposed dividend? No. Subsidiary company will recognize proposed dividend? No. Means there can be two type of questions. Proposed dividend given, but they will say and in an additional information and no journal entry recorded. Thank you very much, ignore. Correct? It means proposed dividend not yet recorded by parent company and subsidiary company, then no adjustment required. No adjustment required. Ignore that completely from CBS. Only a disclosure required in the notes to account that the company has declared company has proposed dividend, but that notes to account is not required from examination purpose. Understood? So if the proposed dividend has been given as an additional information in the question, ignore it. No adjustment required for consolidation chapter. Correct. But they may till now not given. They will say proposed dividend already recorded in parent company and subsidiary company. Means error. Error need to be rectified. Error need to be rectified now. It means reverse the journal entry. So in the books of parent company, what you will do? Reverse the journal entry. So what will do? Proposed dividend account debit to retain earning. Means proposed dividend will be deleted from balance sheet and retained earning will increase. Retained earning will increase. So if related to parent company, then proposed dividend account debit to retained earning of parent company. But if it is related to which company? Subsidiary company. Related to subsidiary company. Correct. It means, can I say, then it will affect AOP. Then it will affect AOP. So what journal entry will do? Proposed dividend account debit to retained earning of which company? Subsidiary company. Retained earning of which company? Subsidiary company. But before time adjustment or after time adjustment? Before or after? Before time adjustment. Because first you will correct it, then only you will allocate now. First correction, then allocation. first correction, then allocation. So whenever I say retained earning, it means before what? Time adjustment. Whenever I say pre-acquisition profit and post-acquisition profit, that is after allocation. Understood? So can I say proposed dividend to retained earning, add to AOP before what? Time adjustment in the retained earning column. In the retained earning column means you are cancelling it. So your retained earning will increase. Then allocate what? To pre and post acquisition profit. But till now not asked. But these are only new adjustment. If they ask, you will say tough. It is not tough now. Whether it is tough. So it is not yet asked. Not asked till now. It is not given in ICS study material also. This type of questions. But if asked, can you do it? Can we move? Can we move? Then dividend received by parent company from subsidiary company. This much is not required. Dividend received by parent company, try to understand from exam point of view. As per Ind AS 27, any dividend received by parent company will be transferred to PL account. Means this is correct. So can you see if the question says dividend has been transferred to PL account, so correct, no adjustment required. As we have done in one of the question, Krishna company and Ram company we have done. So they have a dividend transfer to retained earning, means PL and then retained earning, so no adjustment required. So can you see if dividend received is already credited to PL in SFS of parent company, no adjustment required in CFS. Understood this point? 90% means 99% they will give this only. But 1% chance, if they want to ask AS based CA final question, they will say dividend received is credited to investment account. Dividend received has been wrongly credited to investment account. So that become an error. Error to rectify it. Error to rectify it. If they have said dividend received is wrongly credited to investment account in CFS of parent company, means investment whatever is coming in SFS, that is wrong or not? Means your PC is wrong. So can you take that PC? So you will first do correct journal entry, rectify it, and then do adjustment. So what rectification entry you will do? Means that has been wrongly credited to investment account. Now correct it. Investment account debit to dividend income, and dividend income will be transferred to PL. From PL it will go to retained earning. Means investment account debit to retained earning. So you can see you need to increase investment and to increase retained earning. You need to increase investment and increase retained earning. Increase investment will add to PC. PC will increase. PC will increase now. PC will increase, and retained earning means consolidated earning also. Consolidated retained earning will also increase. Understood? Till now not asked. Just try to understand. I am just giving this type of new question can be asked to trouble you. But simple only. If they are saying dividend received has been wrongly credited to investment account. So what you will do? You need to pass one rectification journal entry. What is the rectification journal entry? Investment account debit to retained earning. Increase investment and increase retained earning. Only this much. Chale aage. Yes sir. Concept number 13. This they will not ask. Chhod do. This I know they will never ask. Okay. Concept 14. NCI. NCI to we have understood. Non-controlling interest. Non-controlling interest we have understood. Okay. Now whether NCI can be negative. Whether yes, NCI can be negative. So if NCI is coming negative, it will be carried on in the balance sheet with negative sign. So NCI can be negative. So NCI can have negative balance. NCI can have negative balance. Understood? I have already explained fair value method, proportionate share in INA method, that already I have explained. Okay, now you also know about full goodwill and partial goodwill. That also you know. Full goodwill and partial goodwill. This also you know. Can we move? Yes, sir. Next point is what? Goodwill, impairment loss. Only one question they have given in which they have asked you to calculate impairment loss of goodwill and then do adjustment. Okay? Understood? Means that question once again I am expecting, because that will be very good question. Now just try to understand whatever goodwill we have calculated. Whatever goodwill we have calculated, that is impaired as per the requirement of Ind AS 36. That is impaired as per the requirement of Ind AS 36. Means impairment loss is calculated as per Ind AS 36. Now, if suppose impairment loss on goodwill is given, then thank you very much. If impairment loss of goodwill is given, then thank you very much. Are you getting? If impairment loss of goodwill is given, then thank you very much. Now, this impairment loss will be allocated to parent company or NCI? Depending upon full goodwill or partial goodwill. Very good. If full goodwill, so this will be attributable to parent company and NCI. If partial goodwill, this is only attributable to what? Parent company. Means, can you say if this is impairment loss of full goodwill, then your journal entry will what? Retained earning account debit, NCI account debit to what? Goodwill. Means reduce retained earning, reduce NCI, and reduce goodwill. But if it is only partial goodwill, your journal entry was retained earning account debit to goodwill. Then only reduce what? Retained earning. This point is very simple. But suppose in your exam they ask you to calculate what? Impairment loss. Then we to apply the concept of Ind AS 36. Then we to apply the concept of Ind AS 36. And that depends upon full goodwill or partial goodwill. That depends upon full goodwill or partial goodwill. So can you see in that case, subsidiary company will be one CGU. In that case, subsidiary company assets and liability will be a part of one CGU. One CGU. It means if suppose they have given full goodwill, how to calculate? How to calculate? So can you say first we write down goodwill, then we write down INA, and this will become total CGU. This become total CGU, total carrying amount of CGU. Total carrying amount CGU. I hope you remember CGU. Huh? CGU you know na? Cash generating unit. Correct. Now, first question arises, this impairment loss we are calculating on the date of acquisition or on the date of consolidation? On the date of consolidation. On the date of consolidation. So, can you see we will take carrying amount as we have calculated in working note. This is as per working note. And this INA will be as per what? As per SONA. But on which date? On the date of consolidation. Now, understood the importance of SONA? This is the importance of SONA. So, we will take SONA but on the date of consolidation, because this impairment loss we are calculating on the date of consolidation. This SONA, but which column? Date of consolidation. We will take date of consolidation. So, can this become total carrying amount of CGU? Now, this total carrying amount will be compared with the recoverable amount. This recoverable amount will be given in the question. If not given, then how can we calculate? Then can this become total impairment loss? This become total impairment loss. Now you only say as per Ind AS 30, this will first allocated to what? Goodwill. The first allocated to what? Goodwill. And balance, if any, will be allocated to INA. But in this chapter, this balance will be always nil. Because if this is some amount, now this become very complicated. Why it become complicated? Because as per Ind AS 36, this balance will be attributably allocated to only those assets which are within the scope of this chapter. Ind AS 36 means only PP, intangible asset, but that will be very complicated. So that much level they will not go. That much level they will not go. Correct na? Then so I will say ICI should give poison to us. Correct na? Better. So that much level they will not go. So this will be always nil in exam for this chapter. For this chapter. So can I say this become what? This become impairment loss allocated to what? Goodwill. Now because it is full goodwill, this belong to what? Parent company and NCI. Understood? Calculation you understood? Now if it is partial goodwill, then it become interesting. So therefore in exam they will ask what? Partial goodwill. Only one question has been given of this nature in which it is a partial goodwill. So what you will do? First you write down goodwill, then you write down INA, then you write down what? Total, then you write down total. Correct? So carrying amount, this is as per working note, this is as per SONA, this is what? Total. But okay, this is partial goodwill. So what Ind AS 36 says that for calculation of what? Impairment loss, we should make it what? Full goodwill. We should convert partial goodwill into what? Full goodwill. So suppose this is 80% share of parent company. So we'll add how much? We'll add NCI share now. We'll add NCI share means 20%. So 20% you can find out. 20% we can find out. So this will be also added to total. So this is known as notional. We call it notional carrying amount. Notional carrying amount only for the purpose of what? Only for the purpose of what? Ind AS 36 chapter for calculation of impairment loss. Now from this will compare what? Recoverable amount. This will become what? Total. And this will be entirely, for this chapter, this will be entirely allocated to what? Goodwill. Because this will come nil only, I know. Because if this is coming some balance, dangerous. Okay. Now, this become impairment loss of what? Impairment loss goodwill. But can this include NCI share also? So NCI share cannot be recognized. So we'll minus what? NCI share. So suppose 20% of this will be calculated and then we deduct, and only now this belong to what? Parent company. So this is the impairment loss which will be charged to consolidated SOPR, but only attributable to what? Parent company. Only attributable to parent company. Understood? Have you understood? Correct. Just read it fast. Done? It is partial goodwill. In exam, this will be always nil. Okay. Can I take one question of this nature? You want me to take? Only one question has been given. And if they will ask as it is that question. But very good question. Can we take? Till now not asked in exam. Till now not asked in exam. And that is in my expected list also. This is the question. Yeah, this is the question. Can we take fast? Ishwar Limited hold investment in Vinayak Limited draft balance sheet. They have said, याद कर लो ईश्वर. They are saying, please recall your God. Two entities, Ishwar Limited and Vinayak Limited. Asset they have given PP investment, total non-current asset, inventory, trade receivables, cash and cash equivalent. They have given the equity also. Can we read? Can we read? Chalo. Additional information. Ishwar Limited investment in Vinayak Limited. On 1st April 2001, Ishwar Limited acquired 400 million shares in Vinayak Limited by means of share exchange of one share in Ishwar Limited for every 2 shares acquired in Vinayak Limited. It means, just try to understand, they have given investment. If you read the question, they have given investment. Whenever they say only investment, it means there are some other investment also. So it means you need to calculate PC in this. In this you need to calculate PC. Because this investment includes some other investment also. So whenever they say only investment, so be careful. Be careful. Understood? Yes, sir. So they have given this information to calculate PC. On 1st April 2001, the market value of one shares of Ishwar Limited is 7. So we can easily calculate PC. Ishwar Limited appointed a professional firm for conducting due diligence for the acquisition of Vinayak Limited, the cost of which amounted to rupees 15 million. So but this 15 million is the direct cost of acquisition as per Ind AS 103. Whether it will be included in PC, it will be charged to PL as a expense. Ishwar Limited included this acquisition cost in the carrying amount of investment in Vinayak Limited in the draft balance sheet of Ishwar. So there is some mistake. Mistake need to be rectified. So 50 millions in 1000 how much? Because the balance is given 1000. The 50 millions in 1000 how much? 15,000. This you know na. 15 millions in 1000 is 15,000. You know. So minus yahan se from minus what? 15,000. And this will be also transferred to retained earning. Means what Jana will do for rectification? Retained earning account debit to investment. Retained earning account debit to investment. So this become error in the books of parent company. Error in the books of parent company need to be rectified in the books of parent company. Understood? Yes, sir. On 1st April, they have given retained earning this much and other component equity this much. The directors of Ishwar Limited carried out fair value exercise. What they are saying, property having carrying amount of 800 million, land component 350, building component these, and had a fair value of 1000 million, land component these, and building component these, the building component has a estimated remaining useful life of 30 years. Understood? Plant and equipment having a carrying amount of 600 had an estimated fair value of 700 million. The estimated remaining useful life of plant is 4 years. So they have given what? Remaining useful life also given. Now this plant has been sold. Okay. On 1st April 2001, the notes to financial statement of Vinayak Limited is what? Subsidiary company. Disclose contingent liability. Oh. Now, in the last class business combination we have done, whenever there is a contingent liability of acquiring company, that will be recognized in the books of acquired company at which amount? Fair value. Correct? On 1st April 2001, the fair value of contingent liability was major real liability. So they have given contingent liability fair value. So that will become provision in the books of parent company on the date of acquisition. So what is the fair value of provision? 30 million. The contingency was resolved in the year ended 31st March 2002 and no payment were required to be made by Vinayak Limited in respect of contingent liability. This it will be reversed. If no payment is required, we need to reverse it. So before consolidation date, we need to reverse it. Before consolidation date, we need to reverse it. Okay. After this question, we'll take break. I understood now. Ho gaya. Okay. After this question, I will take break. The fair value adjustment has not been reflected in the individual financial statement of Vinayak Limited. Means you need to do fair value adjustment, and they have asked you what? Deferred tax also. So it means deferred tax. So fair value minus tax base is what? Taxable or deductible. Last class also we have done. So on the date of acquisition, we need to find out deferred tax also. So they have given deferred tax calculation also. And what they have given, 20% is the tax rate they have given. The directors of ISO Limited use the proportionate net asset method for measuring NCI. Impairment review of goodwill. No impairment goodwill on acquisition of Vinayak Limited was evident when the review was carried in the first year and second year. On 31st March 2004, the directors of ISO Limited carried out further review and concluded that recoverable amount of the net asset is how much? 2000 million. So they have given recoverable amount. It means we need to find out impairment loss. Vinayak Limited regarded a single CGU for the purpose. This will do at the end. Means this is totally separate point, will not affect your answer. Understood? Means first we'll understand up to this. Got this point? Now if you see, what is the date of acquisition given? Date of acquisition is 1st April 2001. And what is the date of consolidation? Means after how many years? 3 years. So 3 years is the post acquisition period. So always first you need to find out that also. So in exam, whenever you are doing now, always write down this way. So we are doing question number 24, 25. First, always write down holding ratio. Holding ratio is given now? Is not given. So they have acquired how many shares? 400 million. Out of what? Out of how much? Where it is given? 5 lakh divided by 1 means 5 lakh equity share, but it is given in 1000. So it is 500 million only. Okay? So that you know now. So we'll say 400 divided by 500 is equal to 80%. So NCI become what? 20%. So whenever this is not given, always first calculate this. This become your working note number 1. Then add on working note number 2. Then add on date of acquisition and date of consolidation. So this become 1st April 2001. This become 31st March 2004. So your post acquisition year is what? 3 years. So always identify this also. Normally what happens, we don't identify, we'll do mistake. Understood? Now we'll do working note number 3. Can you say fair value adjustment? Fair value adjustment. Correct. So they have given what? They have given land, they have given building, they have given plant and equipment, and then they have given what? Provision. These are given. Correct. Can you say better will do rupees in 1000 only? Because balance sheet is given in 1000. I will say always do working note in terms of balance sheet amount. If the balance sheet is in 1000, to do all working note in 1000. However, you can do in million also, but then you will be trouble because balance sheet is given in what 1000, you will be confused. So if balance sheet is in 1000, do all working note in 1000. Okay. Now can you give me all figure in thousand? You have to give me all figure in thousand. So first can you give me fair value on the date of acquisition? That is given. That is given. Check karo. Property, land component, how much fair value? It is given 400 million. Means how much thousand? Means add 30. Add 30. If you add 30, it will be in thousand. Okay? So it will be 4 lakh, and this is how much? 6 lakh. Okay? So 4 lakh and 6 lakh. 4 lakh and 6 lakh. Similarly, carrying amount is also given on the date of acquisition. How much given? Carrying amount is given how much? 350 and 450. So it is 3,50,000 and 3,50,000 and 4,50,000. Understood? Similarly, for plant and equipment, it is given how much fair value? It is given 7 lakh. 7 lakh given now? 7 lakh. And what is the carrying amount given? 6 lakh. For provision, what is the fair value they have given? 30. It is given how much? 30 million, means 30,000. What is the book value? Very good. Book value is nil. Book value is nil. Now, बताओ fair value gain or loss? Fair value gain or loss? So here gain is what? 50,000. Here gain is what? 1,50,000. Here gain is what? 1 lakh. Here gain is what? Gain ki loss? Loss. Very good. Loss. Understood? Now can you say we'll do post acquisition adjustment? Post acquisition adjustment? Bolna yes or no? Means additional depreciation, additional expense, whatever. Correct? So for land, whether there will be any depreciation? No, ignore. But building, they have given what? Remaining useful life. What is the remaining useful life of building? Remaining useful life of building, they have given 30 years. And what is the post acquisition period? 3 years. So you will do 3 by 30. So do 3 by 30. So what is the additional depreciation for 1,50,000? 1,50,000 into 3 by 30. 1,50,000 into 3 by 30. How much? 15,000. Minus ki plus minus. Understood? Now for plant and equipment, what is the remaining useful life? 4 years. It is given. Given na? 4 years. So you will do 3 by 4. So 1 lakh into 3 by 4, how much? 75,000. So 75,000 is depreciation. Understood? Now for provision, what they have said is reverse. So now it will not come in CBS. So what you will do? Plus ki minus? Plus how much? 30,000 plus. Understood? Reverse it. And this will become your on the date of consolidated balance sheet, means on the date of consolidation. How much? This is 50,000. This is 1 lakh. 35,000. This is 25,000. This is nil. Understood? Working note number 2 understood. Can we come working note number 3? Working note number 3 is what? AOP. AOP. AOP में आते हैं. So they have given return earning and other component of equity. You can add on other equity. Okay. Can you give me the closing balance from the balance sheet? Closing balance from the balance sheet. So closing balance from the balance sheet. Balance sheet is where? Yeah. This is 10,50,000 and 50,000. 10,50,000 and 50,000. And opening balance from where? Opening balance from where? Additional information. Additional information was 7,50,000 and 25,000. Correct? In thousand. Convert in thousand. Be careful. High level of concentration required. I have done this question many times. Huh? So don't compare with me. But in exam, so for me also this question is same. Correct now? Exam hall is something different and class is something different. Because I have done this question many times, so I can recollect everything fast. Okay. So 7,50,000 and 25,000. Chalega? So 7,50,000 and 25,000. Can you give me the difference? It is 3 lakh and 25,000. Now just think. There are 4 major adjustments. Always think in exam like this. 4 major adjustments. Normally they give. Whether any abnormal loss, any dividend, no. Any bonus shares, no. Any error in subsidiary company book, no. Khatam, no adjustment. These are the 4 major adjustments normally they gives. Apart from this, there can be some more adjustment also. For example, proposed dividend wrongly recorded, they will never give. Means rare chance. But given, so you should think that also. Correct? So this is totally done. And can you say, because the date of acquisition is the beginning of the year, so entire is post acquisition profit. Entire is post acquisition profit. Write down pre, post. In post, write down retained earning and other equity. Batao. Allocated profit will be entirely what? Post. So write down 3 lakh in what? Retained earning. 25,000 in what? Other equity. Then opening balance you write down where? So 7 lakh 50 plus 25, how much? 7 lakh 75,000. Got this point? This is coming how much? 7 lakh 75,000, 3 lakh and what? 25,000. Understood? Have you understood this point? Correct. Then there is no adjustment because here there is nothing. So no minus, no minus, no minus. Understood? Done. Done. Up to this, any doubt? Working number 3 done. Let us come to working note number 4. Working number 4 is what? Sona. Sona is what? Date of acquisition, date of consolidation, impost write down retained earning and other equity. Can you give me equity share capital? How much? How much? 5 lakh. 5 lakh. Okay, sir. Chalega. Then other equity as per previous working note, 7 lakh 75,000, 3 lakh and 25,000. 25,000. 25,000. 25,000. Total is what? 10. 11 lakh. See the closing balance. Check with the closing balance. Closing balance is what? 10 lakh 50 plus 50. Closing balance there. See here. Don't see the question. Closing balance. It means we are doing correct plus minus. Means no mistake in plus minus. Okay. So this become how much? How much? 12 lakh 75,000, 3 lakh 25,000 and 16 lakh. Now we'll do what? Plus minus fair value adjustment. Plus minus fair value adjustment will do as per previous working note, one by one. Can you give me land? 50,000. What is the additional depreciation? 0. So it will come how much? 50,000. Then we have building. How much gain? 1,50,000. How much additional depreciation? 15,000. What is the net amount? 1,35,000. Then we have plant and equipment. How much gain? 1 lakh minus depreciation. How much? 75,000 and 25,000. This was 1 lakh plus. Then provision. Provision is what? 30,000 minus minus. Then in post acquisition period plus, and this will become nil. Total. We'll do now. Don't worry. 15 lakh 45,000 and 2 lakh 40,000. Then 25,000. Then 18 lakh 10,000. Okay. Now just try to understand deferred tax. This question I am doing for goodwill and deferred tax. Goodwill and deferred tax. Understood? Now let us understand first the question information. That time I have not read carefully. Fair value adjustment have not been reflected in the individual financial statement of Vinayak Limited. First point you have understood, and therefore it will become in CBS. We have done the adjustment. In CFS, the fair value adjustment will be regarded as temporary difference for the purpose of computing deferred tax. It means whatever fair value gain or loss, that is nothing but temporary difference. Means that is either taxable or deductible. Now you only say if there is a net fair value gain, that will be taxable or deductible? Taxable. If there is a net fair value loss, that will be deductible. Or can I say in this way? Because if the question is silent, this is the fair value and this is the carrying amount, and if nothing is given, this become what? Tax base. So fair value minus tax base is this difference only? Yes or no? And if fair value is more than tax base, that will be what? Taxable temporary difference. Understood what I am saying? Have you understood this point? Have you understood this point? But suppose in exam they have given, however they will never give in this chapter, ki tax base on the date of acquisition this much, then you can't take this, then you can't take this, then calculate, do a separate working note. To a separate working note, but in this chapter they will never give that. So can you say this is nothing but gain? How much it is coming? Total? $2,70,000. So this become taxable temporary difference. So we will do minus what? Minus DTL. 2,70,000 now. 2,70,000 into what is the rate of tax? 20%. So how much DTL you have created? So DTL will come 54,000. Understood? Understood? Correct. And can you see during post acquisition period, taxable temporary difference will be reversed because of this? It will reverse because of this. So during post acquisition period, your DTL will reverse due to additional depreciation and etc. So what is the total of this? What is the total of this? So can you see, you'll do 60,000 into what? 20%. How much? But the DTL reverse will be an expense or income? DTL reverse, expense or income? Income. That means it will be added to what? Post acquisition profit. Therefore it will be added to what? Post acquisition profit. Understood? Now this minus this, what is the net DTL which will come in CBS? 42,000. Have you understood this point? Correct. This become what? Your INA on the date of acquisition and on the date of consolidation. How much? 14 lakh 91,000. And this is how much? 2,52,000. This is what? 25,000. This is how much? 17 lakh 68,000. Understood? Have you understood? Correct. Now this will be allocated to parent company and NCI in which ratio? 60%, 80% and 20%. Can you allocate? Only these two, huh? These two. Only these two column. Don't allocate this. How much? 2 lakh 600 and Understood? Correct. This much. Have you understood? Now next working note number 5. Can you see we'll do goodwill or gain on bargain purchase? Goodwill or gain on bargain purchase. For that we want PC. But can you calculate, can you take the PC given in the balance sheet? No. It means in this we need to work out PC because they have given some information. What they have given? Check karo. Ki they have acquired how many shares? 4 lakh shares by means of share exchange of 1 shares per every 2 shares acquired, and the fair value is what? 7. So what you will do? 4 lakh into how much? 1 by 2 into 7, how much? So 14 lakh is the PC. 14 lakh is the PC. No other information is there. Understood? Correct. So this is for how much percentage? 80%. Now you want NCI. So NCI will be what? 20% of what? INA. Understood the importance of this. Now after detail you will take. So if you are not prepping Sonana and if you are prepping some other working note of detail, you will not be able to understand what is INA on the date of acquisition. So when you are prepping Sonana, you will never do mistake. And therefore Sona is very important. Correct? So in this type of question, the importance Sona will increase. In other questions, simple question, you can do directly without Sona also. So 20% of 14 lakh, 91,000, how much? 2 lakh 98, 200. Total is what? 16 lakh 98, 200. Minus INA how much? 14 lakh 91,000. Now what is the goodwill? 2 lakh 7,200. Partial ki full? Partial. Understood? But can you say from this we should deduct what? Impairment loss. But that amount is not given. The last working note. Why I am doing this question? For this also. Correct? So working note number 6. We'll say impairment loss will calculate. So they have given goodwill, then INA, then total. Can you give me first carrying amount as per our previous working note? This is 2,07,200. INA will take what? Don't give wrong amount. 17 lakh. Understood the importance Sona? Sona importance. Everything is in Sona now. 17 lakh 68,000. So 17 lakh 68,000. Total 19 lakh 75,200. 19 lakh 75,200. Understood? Partial ki full. So what we'll do? Plus NCI share. How much? 20%. So this is 80%. Add proportionate 20%. Add means do 20 by 80. How much? 51,800. This will be also 51,800. Total is what? 259. 259? How it is 600? How it is coming 600, Baba? 2,59,000 na? 1,000. Okay. 17 lakh 68,000. Then this is how much? 20 lakh 27,000. Now we'll compare with the recoverable amount. So they have given 2,000 million. So 2,000 million is how much lakh? 20 lakh. So 20 lakh. So what is the total impairment loss? 27 na? 27,000. But entirely allocated to what? Goodwill. Understood? This will always come nil. I said na. In your exam chapter, means in your exam question, this will be always nil. Because if this is balance figure, this will become difficult. Understood? Now, this belong to right now both from this minus what? NCI share. How much? 20%. 20% of this is how much? How much? 5,400. 5,400. So, what is the impairment loss of goodwill? 21,600. 21,600. And this will be entirely attributable to whom? Parent company. Understood? So, this is the goodwill. Understood? So, this is coming 21,000. So, can you see will minus 21,600 from here? So, what is the goodwill amount to be shown in the balance sheet? How much? Just check now this correct answer is correct or not. You have the solution. Correct. So, how much goodwill is coming? 1,85,600. Means we are doing correct. 100% correct we are doing. Okay, sir. Done. Chalega. Now, next working note number 7 is what? Other equity and NCI. So, we have retained earning, we have other equity and we have NCI. These two balance will take from where? From balance sheet. Retained earning and other equity will take from balance sheet. Balance. So, take balance sheet figure. So, it is 28,65,000 and 12,50,000. 28,65,000 and 12,50,000. NCI will take from previous working note. How much NCI? It is 2,98,200. 2,98,200. Understood? Understood? Okay. Now, can you say we'll do plus post acquisition profit, share of post acquisition profit as per Sona working note. So, as per, so it is retained earning 2,01,600 and general reserve 20,000. 2,01,600. 2,01,600. General reserve how much? 20,000. NCI, can you give me the total? Can you say NCI will come these two total? So, it will 55,400. 55,400. Understood? Correct. Now, can you say minus will do impairment loss of goodwill? But from which impairment loss minus करेंगे? From where? Only retained earning how much? 21,600. Only for retained earning because it is partial goodwill. Understood? Correct. Now, there was two rectification given. One rectification we know. There was one direct cost of acquisition debited to investment account, but that's be deducted from what? Retained earning. So, minus direct cost of acquisition, how much? 15,000 will deduct. 15,000 will deduct, and from investment also it will be deducted. This is the first rectification. So, any error need to be adjusted in retained earning. Now, one more rectification given. This is the rectification which we have not read. But up to this you have understood or not? Provision wala point I will do, nothing to worry. But up to this you have understood or not? Flow, have you understood? Flow. Balance sheet you can prepare. Suppose this is not given, then to done na. Then done, you can prepare CBS. Okay, you can prepare CBS. So, wait for this. Correct na. So, can you say we have understood this goodwill? Goodwill understood. Can you say any error in the books of parent company and subsidiary company also I have explained from this? So, any error need to be rectified before preparing what? CBS. Can I say error of parent company will be adjusted in retained earning? Error of subsidiary company will be adjusted in AOP. AOP. This difference you have understood? Any error of parent company will be adjusted where? Retained earning. Any error of subsidiary company will be adjusted in AOP. AOP where? Before time adjustment, after time adjustment. Before time adjustment. Before time adjustment. That you can do. Can you say that will depend upon the information given in the question? That will depend upon information given in the question. Correct? And rectification you are okay. Final level student, rectification you are okay. Am I right or not? Okay. So this also we have completed. This also we have completed. And this also we have done. Calculation of DT and DTL also we have done. So this also adjustment I have explained from this particular question. So with this question we have addressed 3 points: goodwill, rectification, and what? Deferred tax. Deferred tax. Understood? Correct. Now if you want to do this, let us come to this, because this is very important. I have seen the same para was given in one of the MCQs of in Board of Studies MCQs, ICI Bose website. Same MCQs was given. पता नहीं कहाँ से लेके आए ये question. On 1st April 2003, Iswar Limited completed a construction of non-current asset with an estimated useful life of 20 years. So on which date, Miss, can you say it is during post-acquisition period? And the last year, if you see, last year, the cost of construction were recognized in PP and depreciated appropriately, because well, no rectification in cost of construction and depreciation. Iswar Limited has a legal obligation to restore site on which non-current asset is located. Okay. The estimated cost of this restoration work is 125 million. Okay. The directors of Iswar Limited have made a provision of 6.25 million. Means what they have done, 125 divided by 20. 20 was the remaining useful life. They have divided by this. Whether it is correct? This is not correct. We need to capitalize it by which amount? Present value. In the draft balance. It means this is one mistake. So they have created provision and nothing has been given. It has been capitalized. But if nothing has been given, so provision has been charged to PL account. So this provision has been charged to PL account. So two mistakes. Amount is wrong and the treatment is also wrong. Amount is wrong and the treatment has been also wrong. Means they have done one journal entry PL account debit to provision with what amount? 6.25 million. Chalega? Yes, sir. An appropriate annual discount rate is given 6%, and they have also given what? Discounting factor 31.2 paise. But discounting factor we want in rupees. So our discounting factor is 0.312. Be careful, read the question carefully. Read the question carefully. So our discounting factor is 0.312. It means one thing is clear, that 125 means 1,25,000 in 1000 into 0.312. What is the amount of provision? 39,000. Means amount of provision is 39,000. Means what we should do? What we should do? Means can you say on 1/4/2001, our journal entry should be PP account debit to provision. So we will capitalize how much? 39,000. 39,000. Correct. And can you say they have already recorded how much provision? They have already recorded how much provision? 6,250. It means can you say will increase the amount of provision by what amount? How much? 32,750. So this will be our rectification entry, and the balance will be adjusted in retained earning, because they have done wrong. They have charged it to PL account. So we need to increase our retained earning by how much? 6,250. So what is the effect? Will increase PP in the balance by how much? Will increase provision in the balance sheet by how much? Will increase retained earning in this working note, in our working note here, by what amount? 6,250. Correct. But can you say in this provision amount we need to also add interest expense for the 1 year? So one more journal entry will do on 31st March 2002. Na? So this was 3, 4. So one more journal entry. Can you say interest expense which will be debited to retained earning? Correct now. To provision on 39,000. 39,000. What is the rate of interest? 6%. How much? 2,340. 2,340 means again we should decrease our retained earning by how much? 2,340. And we need to increase our provision by how much? 2,340 in CBS and in working note. Then again can you say on this we need to charge depreciation also. So what journal entry? Depreciation account debit, which will be transferred to retained earning. So depreciation in bracket you can have retained earning to what? PP, to PP. What is the useful life? 20 years. So 39,000 divided by 20 how much? 1950. 1950. Can you say your retained earning will again decrease by how much? 1950. And your PP will decrease by how much? 1950. Can you see this effect you can give in respective working note and in CBS? Your balance sheet will tally. Your balance sheet will tally. Understood? Correct. This question is super interesting. From my point of view, it will take a lot of time. But if you have done the same question just before exam and come, you can save a lot of time or not. So I will just 2 hours before revise this question and go. Because it will come as it is. As it is. So if you know all information, you can do fast now. You will save time in reading and understanding. That is required. Chances are rare, but आ तो सकता है. Understood? Done. This also done. So I have explained what? This also. Now one more last adjustment is left. We'll do after break. This is new adjustment they are asking. Equity dividend declared but not paid, which was asked in last exam. And also we can say last to last, but actually that depends upon assumption. So this now they started asking this adjustment also. ठीक है ना? So only one adjustment. This I will not do because they will not ask this. Correct now. Goodwill I will explain. Then step acquisition. Step acquisition is something different point. So only one adjustment is left. That will do after 10-15. How much? 15-minute break? 15-minute break. Can we start? One thing that tomorrow now I will not be able to take the class because now I'm working. Let me go by 9 today. Okay? So I'll just inform you what to do. Okay? Some urgent one came. Go by night. Okay. Unavoidable circumstances there. Can we start? Okay. Now, before break we completed one question. But one good question we have completed. Now come to one more point. That this also one question has been asked with this adjustment in the previous attempt. Now just try to understand goodwill appearing in the balance sheet of subsidiary company. Now suppose goodwill is appearing in the balance sheet of subsidiary company. Whether it can appear here, it can appear because subsidiary company may have done some past business combination because there is some goodwill appearing in the balance sheet of subsidiary company. Now whenever we calculated INA is including or excluding goodwill? Excluding goodwill. Not just by when I am writing equity share or other equity. So when I am saying equity share capital, another equity, you only say this will be total net asset. So total net asset will be including goodwill. So what we should do? From that we should do minus what goodwill appearing in the balance sheet. So if the goodwill is appearing in the balance sheet subsidiary company, whatever INA you have calculated till now, I can say deduct before payable adjustment. Even though you are deducting after that chalega. But whatever carrying amount of INA you are calculating, from that you deduct what? Goodwill appearing in the balance sheet of subsidiary company. Understood? Because we want INA excluding goodwill. Understood this point? Have you understood this point? We'll take one question of this nature. But have you understood this point? So this I think nothing, no more discussion required. So what I said, goodwill appearing in the balance sheet of subsidiary company from Sona deduct on the date of acquisition and on the date of consolidation. Post adjustment will be 0. There is no adjustment in the post. Correct? Deduct from this. This will be the INA excluding goodwill. So we want INA excluding goodwill. Got this point? Then last adjustment, which is also very important, is what? Equity dividend declared but not paid by what? Subsidiary company. Is it practically impossible? Dividend declared and not paid. Practically impossible or not? Sorry. My mistake. Now, once again I will say about goodwill. So what I am saying, the concept 20 is what goodwill appearing in the balance sheet of subsidiary company. So if the goodwill is appearing in the balance sheet of subsidiary company, correct? So what adjustment is required? So what I was saying that we want INA on the date of acquisition for calculation of goodwill only. So INA means including goodwill or excluding goodwill? Excluding goodwill, correct? Now we are calculating equity share capital plus other equity. So when you are adding equity share capital and other equity of subsidiary company, you only say this will be the total net asset. So total net asset will be total asset minus total liability. So total asset is inclusive of what? Goodwill appearing in the balance sheet. So can you say when you are calculating this become net asset including goodwill. But we want what? INA excluding goodwill. So from this what you deduct what? Goodwill whatever appearing in the balance sheet of subsidiary company. Balance sheet of subsidiary company. Then automatically this will become INA excluding goodwill, which is required for the purpose of calculation of goodwill and other working note. Have you understood this point? One question already asked in exam can be again repeated. That question I will take, don't worry. Then the next point is what? Which is also they are asking nowadays, equity dividend declared, but now it is audible, na? No, not to you. Live student, now it is audible? Yes. Now what I am saying, equity dividend declared but not paid. Means dividend is declared but not paid. Can you say practically impossible? because as per Companies Act within 30 days we need to pay. So this is the violation of Companies Act. So I will say practically impossible. Practically impossible, but in exam possible. Bakwas chapter. Bakwas chapter. Correct. So what adjustment required? Now if it is related to parent company, so there can be two situations, either recorded or not recorded. If recorded, then no adjustment required. Then already they have done one journal entry, retained earning to dividend payable, and dividend payable will come in the balance sheet. Correct now, because even though declared, means what I am saying, declared but not paid, but we need to pass journal entry, then become payable. So can you see, if already recorded, then don't do any adjustment in the any working note. Means dividend payable is already appearing in the liability side of the balance sheet of parent company. So okay, no adjustment required. But if it is not recorded, so it means dividend payable is not appearing in the balance sheet of parent company, then record it. So what adjustment entry will do? Retained earning account debit to dividend payable. Retained earning account debit to dividend payable. Dividend payable will come in the CBS and retained earning reduce it. Retained earning reduce it. I hope this is the very simple. This is very simple. But if it is related to subsidiary company, then maja aayega. Related to subsidiary company. So there can be two situations. Situation number 1, already recorded. Situation number 2, not recorded. That will be as per the information given in the question. First think about already recorded. So can you see, if it is already recorded, it is as simple as dividend declared and paid. Understood? So first what you will do, you add equity dividend payable, add it. As we add in the final dividend paid, interim dividend paid. So add dividend payable. First you will find out profit before dividend. So add equity dividend payable. Understood what I am saying? So this will become profit before dividend. Then allocate in pre and post. Then minus dividend payable. As we do minus dividend paid. So now minus dividend payable. This dividend payable will be always post. This will be always post because this will be for current year only, which is will always post acquisition adjustment. So this dividend minus from what? Always post. Understood what I am saying? 1 second. Those who are coming late for them. First now, always time punctuality you need to learn. ठीक है ना? Just try. You are becoming CA. CA means they value time. You need to also start valuing the time. Whether you are CA student, whether you are CA. Once you understand time value, you will become what? You understand the importance of present value and future value. Time value means what? Present value and future value. Correct? Start respecting time of anyone. I always say, CA best quality is what they will be always punctual. Have you seen any CA teacher who are late in the class? Never. You will never see. CA teacher, non-CA not. Because today I came exactly 8. You came at 8:15. 15 minutes late. I was sitting alone in the classroom. Means ऐसा लगता I need to become CA. Sometimes I think that I need to become CA. Just try to understand what is the position. But try to respect time. Once you start valuing time now, you will become CA. This is, you might be right now thinking, अरे चल ना, ठीक है ना. But major point. You will understand this only after becoming CA. ठीक है, चलो ठीक है. But this is your life. I can't force you much. Correct now? Because your life, you need to decide about your life. Correct? Yes, sir. Now, what I am saying, once again, those who are late, for them, we are doing what? Equity dividend declared but not paid. Nowadays, they are asking this type of adjustment to can be again asked in exam. Can you say what I said? It is practically impossible. Because dividend declared will be always paid. Because as per Companies Act, we need to pay within 30 days. So I will say practically impossible. But Bakwas chapter already I have said. We are doing only this chapter from exam point of view. Correct? So equity dividend declared but not paid, there can be two situations. First, related to parent company, and second, it can be related to subsidiary company also. Now, related to parent company, there can be two situations. Means first two case related to parent company, related to subsidiary company. Now, there can be two situations, whether recorded by parent company or not recorded by parent company. If already recorded by parent company, it means can I say already they have done one journal entry, return into dividend payable. So dividend payable will come in the balance sheet of which company? Parent company. So from that we can understand already recorded. So already recorded, no adjustment required because it is correct only. But if not recorded, we will record it. So what journal entry will do? Retained earning account debit to dividend payable, reduce retained earning, and dividend payable will come in the liability side of the balance sheet. Understood this point? For parent company simple. For parent company simple. Now subsidiary company, once again there can be two situations, whether recorded or not recorded. Recorded or not recorded. How we will understand whether it is recorded? If dividend payable is coming in the balance sheet of subsidiary company, means already recorded. If dividend payable is already coming in the balance sheet of subsidiary company, means already recorded. If not coming, means not yet recorded. However, they will give in the additional information, no journal entry has been recorded. Correct? So if it is already recorded, so I will say that treatment is same to same whatever we have done for dividend declared and paid. Dividend declared and paid. So first add back dividend payable will be added back. So we will get profit before dividend, then allocate in pre and post, then deduct, but deduct always from post because this dividend payable will be always from post acquisition profit. It cannot be pre acquisition profit because this is related to only post acquisition period. Correct? Always deduct from post, and can I say this become total pre and post acquisition profit. AOP done. AOP done. Now, if situation number 2, not recorded. Not recorded. So if not recorded, means there is no need to add back. Because you have not, if you have not done any journal entry, so if you have not reduced your return earning, so there is no need to add back. So do not add back. So because this profit is before dividend only, we want profit before dividend. If it is not recorded, so return earning whatever you are getting, that is profit before dividend only, and therefore there is no need to add back because not recorded. But if not recorded, then also you need to deduct it, whether from pre or post. From where? Post, always post, because you need to record it, you need to rectify it, and you reduce your post acquisition profit. You need to reduce your post acquisition profit. Understood this point? Have you understood this point? Correct. I hope these 2 points you have understood. Correct. Means now can you say after this, whether it was recorded or not recorded, it will come in the liability side of the balance sheet of which company? Subsidiary company. But dividend payable to the extent of parent company share will become dividend receivable of parent company. So dividend payable in the books of subsidiary company will become dividend receivable in the books of to the extent of parent company share. That will become intercompany balance kata kata. That will become intercompany balance kata kata. Means can I say it has two parts. This will be also minus, this mistake. Deduct from both. Oh no, sorry. Pre and post now. So we'll deduct from post. Now this dividend payable has two parts. One is related to parent company, one is related to NCI. But can I say to the extent it is related to parent company will be cancelled from dividend receivable whatever is appearing in the balance sheet of parent company. Yes sir. Now there can be two more situations. Just try to understand whatever I am saying. Following cancellation entry will be recorded for CFS. Cancellation entry you understood? But you need to understand whether dividend receivable is recorded by parent company or not. If dividend receivable is already coming in the balance sheet of parent company, means already recorded, then kata kata. Then what journal entry will do? Dividend payable to dividend receivable and to the extent of parent company share, kata kata. But it is quite possible dividend receivable is not recorded by parent company. First you need to record it, then cancel it. First record it and then cancel it. Means what is the recording journal entry? Means that will become their income. So they will say dividend receivable to dividend receivable to PL, and from PL it will go to retained earning. So dividend receivable to retained earning, dividend receivable to retained earning, and then cancellation into what? Dividend payable to dividend receivable. So what is the net adjustment entry? Can we do in this way? Retained earning account debit to dividend payable. Means we need to pass two journal entry now. First journal entry is what? Dividend receivable to retained earning, then dividend payable to dividend receivable. This is kata kata. So what is the net adjustment entry? Dividend payable account debit to retained earning. Understood this point? Have you understood this point? So dividend payable will be cancelled and retained earning will increase by the amount of dividend receivable, will increase by the amount of dividend receivable. Have you understood this point? Bolo. Have you understood? This was the point which was asked in last exam, last CFS, last exam CFS. But it was recorded in the balance sheet, correct? So this was the point which was asked in last exam. Have you understood? I don't know whether it will be repeated or not, but can be repeated again. So once again, can you say have you understood subsidiary company? So batao, if already recorded, so first add back, then deduct from post acquisition profit. Okay. If not recorded, so don't add back but reduce from post acquisition profit, correct? But can you say whatever you are reducing belong to what? Parent company and NCI. So can you say whatever belong to parent company will become dividend receivable in the books of parent company? So if it is already recorded by parent company, then what is the cancellation entry? Dividend receivable to, dividend payable to dividend receivable, kata kata. Now it will not appear where? That will not appear in CBS. Neither dividend receivable will come, nor dividend payable will come to the extent of parent company share. But if it is not recorded by parent company, so it means we should first record it and then cancel. So what is the net adjustment entry? Dividend payable to retained earning. So dividend payable will be cancelled to the extent of parent company share, and retained earning will increase by the amount of parent company share. But can you say with this what happened? Dividend payable to the extent of NCI will remain, and that will appear in the CBS. So dividend payable to the extent of NCI share will not be cancelled. Dividend payable to the extent of NCI share will not be cancelled, and that will appear in the liability side of CBS. That will appear in the liability side of CBS. Understood? So what is given? Dividend payable to the extent of NCI share will be shown as current financial liability in financial liability. It is a financial liability. Current financial liability in CBS. Understood? Have you understood this point? Correct? We'll take that question, nothing to worry. But have you understood? Okay. Now there is one more concept about preference dividend on cumulative preference shares of subsidiary company that are classified as equity. Till now not asked. This you want me to explain? You want me to explain? This much we have done in this exam, they asked this there. So try to understand. We'll not do any question, but try to understand what they are saying. Preference dividend on cumulative preference shares of which company? Subsidiary company, which has been classified as equity. Means can I say any cumulative preference shares of subsidiary company can be financial liability, can be equity. If it is financial liability, then it is a borrowing. Then it is just like debenture. Then we are not talking about that. We are not discussing about financial liability preference share. We are discussing about preference shares which has been classified as equity. Understood? So can you say any cumulative preference shares? Any cumulative preference shares of subsidiary company which has been classified as equity. Whenever question is silent and they have given preference share capital and that is given under share capital, we'll assume it is cumulative only. Understood? So that if it is given under share capital, so it is equity. So that will be cumulative preference shares of subsidiary company classified as equity. Understood? Now just try to understand, if suppose the preference dividend of that preference shares has not been declared, it means no journal entry has been done. no journal entry has been done. Correct? So not declare, so no journal entry because of Ind AS 10. Because of Ind AS 10. Now suppose this is our profit of current year. Correct? And minus preference dividend. So not declare, so will not pass any journal entry. So can you say this become the profit? This become profit, and this will be allocated to whom? Equity shareholders in the ratio of 80:20. 80:20. But okay, this is not correct because it is cumulative preference shareholders. So can you say in future when you declare dividend, because it is cumulative in nature? Yes or no? So what our Ind AS says, कि if there is some cumulative preference share capital of subsidiary company classified as equity, then even though dividend has not been declared, you should reduce the dividend. Suppose 10,000 dividend, correct? And this 90, this belong to preference shareholders, and this belong to what? Equity shareholders, and this will be allocated in what? 80:20. And can you say this will be allocated if suppose this is entirely belonging to NCI? So this will entirely go to what? NCI. Entirely go to NCI. I hope you are understanding. Because cumulative preference here, which has been classified as equity, if that is not held by parent company, so that means it is entirely belonging to whom? Non-controlling interest. So if it is entirely belonging to what? NCI, this will entirely go to what? Non-controlling interest. Non-controlling interest. But suppose preference share capital is also held by parent company to the extent of 60%. It means out of this 60% belong to what? Parent company. 40% belong to what? Sub NCI. It means the total allocation is what? This plus this belong to what? Parent company. This plus this belong to what? NCI. Understood? Are you able to understand what they are saying? Not able to understand. Have you understood? So first, if suppose in the balance sheet what is given? Preference share capital, and that has been classified as equity. First find out how much belong to parent company, how much belong to NCI. That will be given the question. That will be given the question. If nothing is given, then entirely belong to whom? NCI. But suppose they have given that parent company also hold some of the preference shares of subsidiary company, so we can find out percentage. We can find out percentage. Suppose this is 20:80. Quite possible. So this is the ratio of preference share capital, and this is the ratio of what? Equity share capital. Understood? Correct. Now whenever you are calculating your profit, means pre and post acquisition profit, so can you see we'll deduct preference dividend even though it is not declared. So we'll minus it. And this balance profit will belong to what? Parent company and NCI in which ratio? In 80:20. But this will belong to parent company and NCI in which ratio? 20:80. Now when you will add sharing profit in other equity in NCI, so this will be added to what? Parent company. This will be added to what? NCI. Understood? Only this much. Correct? Let me explain. So first, if suppose they have given, find out closing balance, opening balance, this is the profit for the year. Can you say because preference dividend is not yet declared, so no journal entry, it means no need to add back. So nothing will be added. So this will become profit. This will be allocated to pre and post acquisition profit. Now from this deduct preference dividend not yet declared, always deduct from post. Understood? And this become pre-acquisition and post-acquisition profit. Correct? This will be allocated to what? Parent company and NCI as per the equity shareholder ratio. And this will be allocated to what? Are you getting? Parent company and NCI as per preference share ratio. Understood? That is only given. Correct? Preference dividend not declared will be allocated as under. Attributable to parent company will be added to the consolidated return earning. Attributable to NCI will be added to NCI. Understood? Have you understood? Correct. Now one doubt will come. Sub preference share capital is now some portion belonging to what? Parent company, and some portion belonging to what? NCI. Once again, whatever belonging to NCI, preference share capital, that will be added to NCI. That will be added to NCI. So cumulative preference share of subsidiary company will be treated as under. Held by NCI will be added to what? NCI. But held by parent company means they have done some investment. So some investment will come in the balance sheet. So the cost price of investment and the parent company share in the subsidiary company preference share capital, that will be the difference, and the difference will be goodwill or gain on bargain purchase, will be adjusted in goodwill or gain on bargain purchase. Understood? So difference between the cost price of such investment and the cumulative preference share of subsidiary company held by parent company will be adjusted in what? Goodwill or gain on bargain purchase, as we have done for what? Equity. As we have done for equity. Till now not asked. I don't know whether it will be asked or not. But a small question of this nature has been given in ICI study material. But just observing the new type of question, this is the only point which they have not yet asked. That can be asked. Understood? Can you do it by your own? Can you do it by your own? Chalo, done. With this, I have completed all the adjustment related to consolidation. So if you see at the end now, I have given one full format. What to done for revision purpose. एक बार revise करते हैं. Whatever we have done till now. ठीक है? Step for preparing CFS. First step 1, calculate share of parent company and NCI if specifically not given in the question, means the holding ratio is not given in the question. So share of parent company, number of shares held by parent company before what? Bonus share. Total number of shares of subsidiary company before what? Bonus share. This you have understood? Or you take after. Okay? Then identify date of acquisition, date of consolidation and post acquisition period. This will be as per the information given in the question. Then step number 3 is what? Perform working note of what? Fair value adjustment. This you have understood. So step number 3 was do fair value adjustment as we have discussed in our class. Then perform AOP, means perform analysis of profit of subsidiary company. So it can be retained earnings, it can be other reserve. First we write down closing balance, opening balance. Then profit after appropriation will come. Now I will ask you, will say what to be done. Okay, now don't see. But the abnormal loss, what will do? Abnormal loss, add. Final dividend paid, add. Interim dividend paid, add. Bonus share not recorded, ignore. No add, say ignore. Don't say no add, ignore. Correct? Bonus share no journal entry, ignore. Bonus share recording done, ignore. ICI will ignore you. Bonus share journal entry done, add. But add to general reserve. Understood? Correct? Then I also forgot. Okay. Then listen and say whatever I am saying. Then proposed dividend wrongly recorded by a subsidiary company. हाँ तो बताओ क्या? Proposed dividend wrongly recorded by a subsidiary company. Add to what? Retain earning. Add to retain earning. Understood? New adjustment. You have applied your common sense. Okay? Then dividend declared but not paid, not recorded. Dividend declared but not paid, not recorded. Nothing. Not recorded means why you will add back? Abhi we are doing nullifying. So not recorded, nothing. Okay. Dividend declared but not paid, recorded. Add. Means similar to dividend paid. Understood this? So you can see abnormal loss, add. Dividend paid, add. Whether final dividend, interim dividend. Bonus shares, add if recorded. Proposed dividend, if recorded wrongly, you need to cancel it, add. Equity dividend declared but not paid, if recorded, add. Any error as per the information given. The error given as per the information. It can be plus, it can be minus. So any error in subsidiary book depend upon the question. So you need to read question whether it is plus or minus. but that will be also rectified before time adjustment. So can this become profit for allocation? This will be allocated in which ratio? Time ratio. This you can do. Then we'll add opening balance. Now you will say what we'll do. Abnormal loss minus from where? Pre or post as per the date of occurrence minus dividend paid. Pre or post as per the date of payment. Okay. Bonus share. If not recorded, ignore. If recorded, minus from always pre. Correct. Proposed dividend wrongly recorded. Already adjusted. No. Already rectified now. Now we recorded. No. Done. Rectification done. Once rectification done, now once again you will not reverse it now. Are you getting what I am saying? Rectification done yahan par. Now here you will not do reversal of rectification. Got this point? Correct? Understood? Okay. Bonus shares I have said now. Now equity dividend declared but not paid. Equity dividend declared but not paid. If not recorded, then also minus, because that will be recorded now. Minus, but from where? Always post. Equity dividend declared but not paid, recorded. Then also minus from post. So once again, this is a new adjustment. Equity dividend declared but not paid, whether recorded, not recorded. Minus from where? Post. Understood this point? Okay. Now think and say. Unrealized profit on unsold stock, downstream transaction. Batao, it will come in AOP or retained earning? AOP or retained earning? Retained earning means AOP no adjustment. Understood? Okay? Means that will go to retained earning minus. Okay? Unrealized profit on unsold stock, upstream transaction. What? Ignore. Why ignore? Unrealized profit will be always eliminated. Unrealized profit on unsold stock, upstream transaction means this is the profit of which company? Subsidiary company, included in the stock of parent company. So we eliminate now. To eliminate from where? Post acquisition profit. Means either you can do from post acquisition profit or you can do directly from retained earning and NCI. I have given two adjustments. If you are deducting from here, this is as per ICI solution. Correct? Understood? Then soon now. Unrealized profit on PP transferred from parent company to subsidiary company. But the AOP or retained earning? Retained earning. Very good. Okay. Now in this additional depreciation on URP. In this additional depreciation means on this additional depreciation be charged by subsidiary company. Yes or no? From AOP. Pre ki post. Pre ki post. Understood this point? Similarly. बहुत ज़्यादा हो रहा है. If everything to come in together, but you need to revise in this way only. Then only you will be able to understand. Correct? Once again. Unrealized profit on the PP sold or transferred by subsidiary company to parent company. बताओ retained earning की AOP. AOP from post acquisition profit minus an additional depreciation retained earning. Understood this point? That is only given. Check करो. Unrealized profit on unsold stock upstream minus unrealized profit on unsold PP upstream minus additional depreciation on unrealized profit on unsold PP. This is plus. Correct? Understood? Then this was the last point, preference dividend on cumulative preference shares not yet declared. Always minus from post. If they ask. Correct? Now note is given if bonus share is not yet recorded by subsidiary company. Ignore such adjustment entry from AOP and SONA. Now we'll do SONA. So can you see equity share capital will come as per the information. We'll add other equity as per previous working note. This will become carrying amount of INA of what? Subsidiary company. If goodwill is given in the balance sheet of subsidiary company, deduct. Already I have explained. So if goodwill is given, deduct or not? Deduct. So this will become carrying amount of INA, but excluding what? Goodwill. In this, do what? Fair value adjustment. Fair value adjustment, you know. So fair value adjustment, you can do this. You can do now. Yes or no? Based on increase in asset, increase in liability, decrease in asset, decrease in liability. Correct? Understood. So this become after fair value adjustment. Then after this, you'll do DT and DTL adjustment. If given in the question, deferred tax wala point. So DTA, DTL you have understood. If DTL, so you will do minus. If DTL, you will do minus now. And reversal of DTL will be plus. If DTA, you will do what? Plus. And reversal of DTA will be minus. That will depend upon whether it is taxable or deductible. So if there is a net fair value gain, means this amount is what? Net fair value gain, taxable, deductible, taxable. If this is net fair value loss, then what? Deductible. So if this is gain, taxable, DTL, loss, deductible, then DTA, and reverse will be what? Reversal of DTA and DTL. I hope you have understood. This will become what are your final answer, and in this you will apply parent company and NCI share. The next working note is what? Calculation of goodwill or gain on bargain purchase. Okay, this will be PC from the balance sheet, 90% from the balance sheet, 10% chances they have not given. Okay. Then value of NCI by using fair value method or Pasina method. Fair value method means number of shares not held by parent company multiply by fair value of shares of subsidiary company. Pasina method means fair value by name. Which fair value by name? This fair value by name multiply by share of NCI. You can easily find out if there is some previously held equity interest. So you need to find out fair value of previously held equity interest. This become total. From this minus fair value of INA, this become goodwill or gain on bargain purchase. If there is some impairment loss of goodwill, deduct it. Now impairment loss of goodwill, if full goodwill attributable to parent company NCI, means deduct from retained earning and NCI. If it is partial goodwill, then only attributable to parent company, then deduct only from retained earning, in the next working note, understood? This become the carrying amount of goodwill which will come in the balance sheet. Now we have done step acquisition in last class, business combination. Whenever there is step acquisition, so what Ind AS 103 say that it will measure a fair value, and fair value minus carrying amount of the previously held equity interest will be remeasurement gain and loss, and that remeasurement gain and loss will be transferred to consolidated retained earning. Correct? So this becomes the fair value of what? Previously held equity interest. Can you say now we'll compare fair value of previously held equity interest with the carrying amount of previously held equity interest? That carrying amount will be given the question. This become remeasurement gain and loss, and this remeasurement gain and loss will be transferred to what? Consolidated retained earning. One question they have asked step acquisition also. We'll do step acquisition after this only. Okay? Then other equity NCI. This other equity NCI you have understood. Can you read by your own? I will not explain. Other equity NCI you are comfortable, but because up to this you have done correct, so this will be also correct. Understood? Once you read fast. Means this is last day revision. Just before exam, just revise it. All points will come in your mind. There is no need to practice any question. Means I have covered all the points. May 2024 exam question, May 2024. Acha, I'll do. That is associate wala na. That will do after Ind AS 28. Have you understood this? Check कर लो एक बार. Understood? Okay, can we move? Chalo. Now, let me first complete CFS wala point, then we'll come to some question. Whatever point left. Where is the book? Now, step acquisition you have understood. Step acquisition, no discussion required. बोला रे. Step acquisition you understood. हाँ, step acquisition you have understood. Correct ना. So explanation not required. Then there will be one question of changes in the proportion of NCI. Changes in the proportion of NCI. This can be asked in MCQs or 5-mark question or 5-mark question. Correct. So changes in proportion of NCI means what? Once the control is obtained, suppose they have acquired 60%, further they are acquiring 10%, or further they are disposing -5%. So they can be either further acquisition of shares or disposal of shares. So this will only change NCI. Correct. So suppose this here the NCI was 40. So here NCI will become what? 30. And here NCI will become what? 35. So this is what changes in proportion of NCI. Correct. So what will be the journal entry in separate financial statement and consolidated financial statement? Can I say in this way? Ki whenever there is a further acquisition of shares, so in separate financial statement, simple journal entry investment account debit to cash or bank. But in CFS, here is a journal entry will affect NCI. So we will say NCI account debit to what? Cash or bank. NCI account debit to cash or bank. So your NCI will decrease. Your NCI will decrease. Yes or no? You can see here it was 40%. Now it become 30%. So NCI decreased by what? 10%. NCI decreased by 10%. So NCI will decrease with proportionate decrease in NCI. Proportionate decrease in NCI. And this will be consideration paid. Only I need to explain what is this amount. This I will explain. Similarly, whenever there is a disposal of shares, so in SFS what journal entry? Bank account debit to investment, and this will be consideration received, and this will be proportionate carrying amount. Difference will be gain or loss, and that gain or loss will be transferred to PL account. But in CFS, journal entry will be cash and bank to NCI, because NCI will increase. You can see NCI increase from 30% to what? 35%. So NCI will increase by 5%. Correct. So cash and bank will be consideration received, and NCI will be proportionate increase in NCI. So what our Ind AS 110 says that whenever there is changes in proportion of NCI, so in this two journal entry, difference will be not transferred to PL, difference will be transferred to other equity. Why? Because NCI is also equity. Any changes in equity will remain in equity. So this difference will not be transferred to PL, this difference will be transferred to other equity. Other equity can be retained earning. Other equity can be retained earning. Now only I need to explain how to calculate this amount. How to calculate this amount. Now there are two types of questions from exam point of view. So have you understood this journal entry? But for purchase what journal entry? For disposal of share what journal entry? For purchase it is NCI account debit to cash or bank. This journal entry cash or bank to NCI. Now this will be consideration paid, this will be consideration received as per the information given in the question. Means I am here to explain this amount. If you have understood this amount, you can do any question. Now, in question there can be two type of information. If they have given INA plus goodwill information, on which date? On the date of change. On the date of change. Correct? INA goodwill. Okay? If this is given, then how? So can you say it will depend upon full goodwill and partial goodwill? If it is full goodwill, then percentage change will be INA plus goodwill multiplied by percentage change. Understood? But if it is partial goodwill, then only you will take what? INA. You will not take what? Goodwill, because that goodwill only belong to what? Parent company. It does not belong to NCI. So only you will give share of what? INA. To whom? NCI. Understood? The percentage change. Understood this point? Have you understood this point? Correct? Have you understood this point? Now, you want carrying amount of INA on the date of change in CFS, or you want fair value of INA? No. Fair value we want only on the date of acquisition. Subsequent information about fair value of INA in this chapter is not relevant. We want only fair value of INA on the date of acquisition, not subsequently. Can you see, we want carrying amount of INA in CFS. So they may confuse you by giving fair value as well as carrying amount in CFS. So fair value information is not at all relevant. We want what? Carrying amount. On which date? On the date of change. On the date of acquisition we want fair value. But subsequently fair value information is not at all relevant. Understood this point? Are you able to understand what I am saying? Have you understood? So we want carrying amount of INA. Can you see, if INA is given, you can easily calculate? You can easily. But sometimes INA is not given. Then we'll use NCI. Now suppose this NCI they have given previous to change is 30%. Now it becomes 35%. So what is the change? 5%. So we'll suppose it is given 1 lakh 30%. So we'll say 1 lakh divided by 30%. How much change? 5%. And proportionately we'll calculate. But first preference will be given to what? This. If this is not given, then you will calculate by this. Understood? Have you understood? So whenever the question came for this, normally INA information is given. If given, apply that information to find out percentage change. If that information is not given, you don't have any other option because you can't calculate INA now. So NCI will be the percentage changes of NCI will be calculated proportionately from NCI only. So if NCI is 30%, now it becomes 35%, so 5% change. So 1 lakh is 30%, so how much? 5%. Both for partial and full goodwill, we will apply this only. Understood? Can you say any question now you can do? This can be asked for 2 marks or 5 marks. Now I think this type of question will be asked for 2 marks. Okay. Now coming to loss of control, this question can be also asked for 2 marks or 5 to 6 marks. 5 to 6 marks. 5 to 6 marks. Now whenever there is a loss of control due to disposal of shares, means initially you are holding 60%, now you have sold 60%. So this is entire investment sold. Or initially you are holding 60%, now sold 40%, then also loss of control. But in this case you have retained how much? 20%. You have retained 20%, correct? So in SFS, what will be journal entry? Bank account debit to investment, and the difference will be gain or loss, and that gain or loss will be transferred to PL account. So in SFS, so you can pass journal entry, but what will be journal entry in CFS? So in CFS, we need to eliminate entire subsidiary company. So what will be the possible journal entry? Batao. Can you say bank account will come with the consideration received? Suppose 40% sold. So with the 40% of consideration received will come. Suppose investment retained. How much investment retained? 20% investment retained. Means we are holding 60%, 40% sold. To receive consideration for 40%. That will be given in the question. How much consideration received? Now investment retained. How much investment retained? 20%. So this will be at fair value. At what? Fair value. Fair value will be given in the question. Don't worry. If not given, then what to done? I will say. So fair value will be given in the question. Understood? Correct. Then can I say NCI will be eliminated? NCI will be debited, but how much percentage? 40%. This NCI normally they don't give. So NCI we will use based on full goodwill, partial goodwill. But the full goodwill, then what? INA plus goodwill into what? 40%. If partial goodwill, then what? INA into what? 40%. Understood? But this INA is carrying amount ki fair value? Carrying amount, not fair value. Subsequent fair value information after the date of acquisition is not at all relevant in this chapter. Got this point? We want carrying amount of INA in CFS. Carrying amount of INA in CFS. Understood this point? So can you say you can easily calculate this? Then can you say we will de-recognize INA at which amount? Carrying amount. Will de-recognize goodwill at which amount? Carrying amount. Understood? And the difference will be what? Gain or loss, which will be transferred to PL. The difference will be gain or loss, which will be transferred to PL. Have you understood this point? Have you understood this point? Any doubt? Super easy journal entry. Super easy journal entry. Correct. Now there is one special question. Now suppose there was some OCI component of subsidiary company. It can be revaluation surplus, it can be FCTL, etc. So suppose there is a revaluation surplus. So can you say, if out of this some portion belong to parent company, some portion belong to NCI. Whatever belong to parent company will be added to the other equity as revaluation surplus, and whatever belong to NCI will be added to NCI. Correct now? So if there is some OCI component, what our Ind AS 110 say that it will be now closed as per respective Ind AS. Means it will depend upon whether it is with recycling or without recycling. With recycling or without recycling. Now I will ask you, you will say me with recycling or without recycling. But the revaluation surplus means transfer to retained earning. FB OCI reserve, debt instrument means transfer to PL. FB OCI equity instrument means transfer retained earning. FCTR, very good, PL, correct. You know about remeasurement reserve as per Ind AS 19, actuarial gain or loss, remeasurement reserve, remeasurement gain or loss as per Ind AS 19. So they may give you remeasurement reserve as per Ind AS 19, but the what? It will be always without recycling. So it will be also transferred to retained earning. Cash flow has reserve. Cash, last class hedging we have done. Cash flow has reserve. It will be always retained with recycling. Transfer to PL. Transfer to PL. It will be always reclassified to PL. Understood? 6 example ho gaya? 6. Only they will ask in exam this 6. They will not go beyond this. Can you do rectification of this? Because this is very important and normally in exam will forget. And therefore I have given this note. You can revise from this. Batao. Share of revaluation reserve, transfer retained earning. Share of FCTR, reclassified from OCI to PL. Share of FBOC reserve, debt instrument, reclassified from OCI to PL. Share of FBOCI reserve, equity instrument, transfer retained earning. Share of remeasurement reserve, Ind AS 19, transfer retained earning. Share of cash flow hedging reserve, reclassified from OCI to PL. Only they will ask this 6. They will not go beyond this. Understood? Have you understood this point? There is one very beautiful question which is not yet asked in exam and I am expecting that question. Means suppose they ask business combination chapter full question. So they will ask consolidation that question. Understood? Then the CFS they will ask that type of question. Let me do that question fast. This is the question. As at the beginning of his current financial year, AB Limited hold 90% of interest in BC Limited. 90% they are holding. During the financial year, AB Limited sells 70% of equity share. How much retained? 20%. Correct? For they have sold at what amount? 56 crore. And consequently loses control of BC Limited. At the date of disposal, the fair value of 20% interest retained by AB Limited is how much? 16 crore. The net asset of BC Limited are how much? 60 crore. The net asset is how much? 60 crore. This net asset include following. So this include this including. This include debt investment classified as FBTOCI of 12 crore. So this 12 crore is included in 60 crore. But there is related FBOC reserve of 6 crore. Batao, reclassified, not reclassified. It will be reclassified. Net defined benefit liability of 6 crore that has resulted in a reserve relating to net measurement loss of 3 crore. But reclassified, not reclassified, not reclassified. Equity investment considered not held for the purpose of trading 10 crore for which irrevocable option of recognizing the changes in the fair value in FBOCI has been availed. Means FBOCI, correct, and related FBOCI reserve is 4 crore. But are recycled or not recycled? Not recycled. net asset of foreign operation of 20 crore and related FCTR 8 crore, reclassified, not reclassified, reclassified, understood. But can you say this 6 crore belong to both parent company and NCI? How much belong to parent company? 90%. So what is the 90%? Batao? 5.4. How much 90%? 2.7. How much 90%? 3.6. How much 90%? 7.2. In consolidated financial statement, 90% of the above reserve were included in the equivalent equity reserve balance and 10% is attributable to NCI. That is understood point. Even though not given, that will be applicable. Now we need to pass journal entry. What will be journal entry? Batao. 40. But the bank account how much? 56. Investment account how much? At fair value 16. Whether NCI given? Not given. NCI they will not give. So that will be 10% of what? 10% of INA. Goodwill is not given, means this net asset might be including goodwill. Goodwill is not given, so we'll assume full goodwill only. Correct. But goodwill is 0, मान लो goodwill is 0. So 10% of 60 crore. How much? 6. Correct. Then INA how much? 60. What is the gain or loss? Transfer to PL how much? 18. This is the first journal entry. Understood? Then second journal entry. First they have given which reserve? FBOCI reserve. Debt instrument. Reclassified to PL. So we'll say OCI, FB, OCI reserve, account debit to gain and transfer to PL. How much? 5.4 na? 5.4 na? 5.4. Then they have given remeasurement reserve, which is a loss. They have given loss. Just check. Remeasurement reserve, but loss. That will be directly transferred to retained earning. So what journal entry will do? Retained earning account debit to remeasurement reserve. How much? 2.7. Just try to understand the difference journal entry. In this reclassification, OCI and PL will be affected. So this is reclassified from OCI to PL. But here we are doing directly, means neither OCI will be affected nor PL will be affected. So don't write down OCI and PL यहाँ पर. Directly reserve will decrease and retained earning will increase or reverse. Are you getting what I am saying? So whenever we are saying reclassification, so reclassification will be from OCI to PL. So OCI will be also affected, PL will be also affected. But we are saying not reclassified, so OCI will also not be affected, PL will be also not affected, and therefore in this journal entry don't show OCI and PL. Understood? Then fourth journal entry. Batao. Then is what? FBOCI reserve, equity instrument. It is a reserve. So that will be directly transferred to. So we'll say FBOCI reserve to what? Retained earning. How much? How much? 3.6. 3.6. Last may we have FCTR. You will give me the journal entry. FCTR. What journal entry? Now OCI. Write down OCI, FCTR, account debit to gain. Transfer to PL. How much? 7.2. Understood? Have you understood this point? Good question. Till now not asked. Should be asked in exam. But till now not asked. Good question or not? Now, if suppose the same question comes in MCQ, so what type of question will come? First question they will ask, what is the gain transfer to PL? What is the gain transfer to PL? Be careful. Okay, this plus this and plus this. So this is the entire gain transfer to PL. Second question they may ask, what is the effect in retained earning? Retained earning effect is what? This plus this minus. Means net effect is 3.6 minus 2.7. These two type of question can be asked. So they will give simple question, not such a big question. They will give 2 or 3 OCI component. They will ask MCQs में what is the net impact in PL? What is the net impact in retained earning? 2 marks question. Understood? You can do it by room. Have you understood? Yes, sir. But for that you need to retain this point. This is very important. And this is applicable for any chapter. This point is applicable for any chapter. Any chapter. Understood? Yes, sir. This also done. Now, chain holding. Chain holding, believe me, they have asked 3 times, but now some attempt has happened, they have not yet asked. So quite possible they will give chain holding now. Quite possible. Means from last 4 or 5 attempts they have not asked chain holding, I think. Now chain holding, same to same whatever we have done till now, only 3 points you need to understand. 3 points. If you understood that 3 points, then entire question you can do. Correct? You want me to take one question or directly can I explain with one example? Can I explain with one example? Yes, sir, better, because you have understood now everything. First point is what? Calculation of NCI. First point is what? Calculation of NCI. Calculation of NCI, which will be thought different. They will give A, B, C. A control B, B control C. Suppose A is having 60% and B is holding 70% of C. So you need to, now we are preparing CFS from A point of view. Means this become ultimate parent company. So this become chain holding. B is also subsidiary and through B, C is also subsidiary. This become chain holding. So now we are preparing CFS of what? A. They will not ask CFS of B. If they are asking CFS of B, it is same to same. We have done whatever we have done, that you apply. So in this you need to find out NCI in B and NCI in C of A. Means from A's point of view, what is NCI in B? What is NCI in C? So first write down what is the total holding, 100%, 100%. Now from this minus direct holding. So what is the direct holding in B? 60%. What is direct holding in C? 0. Then minus what? Indirect holding. So can you say in B no indirect holding? But in A is now how much they are holding in C through what? B. That is 60% of what? 70%. 60% of 70%. So we'll do 60% of 70%. How much? 42%. So what is NCI? NCI becomes this 40% and this 58%. This is NCI. It does not mean they are not controlling. A controls C, even though NCI is what? 58%. Because if B is controlling C, so A will also control what? C. Understood is fine. So this is NCI for distribution of profit. For distribution of profit. Understood is fine. One more question which is not yet asked, can be asked in exam. Suppose they have given A, B, C. A holds 70%, B holds 60%, and A also hold what? 20%. Quite possible. In this, how you will calculate NCI? Batao. Batao fast. So in B, C, what is the total holding? What is the direct holding? Direct holding is 70 and 20 is the direct holding. And what is the indirect holding? It is 70% of 60%. How much? 42. So what is the NCI? 30 and 38. So this become NCI. So what is the parent companies here? 70 and 62. So this will be used for distribution of profit. Distribution of profit. First point you have understood. First changes are understood. Okay. Now can you say you will prepare 2 AOP? Means for B and C. 2 SONA means for B and C. Everything now 2. 2 AOP same to same, no changes. SONA same to same, no changes. Are you getting what I am saying? Correct. Now can you say 2 goodwill? 2 goodwill. So in that way there will be some changes. Just try to understand. Suppose they have given, try to understand. The A, B, C. Now A has purchased 70%, B has purchased 60%. A has purchased at rupees 7 lakh and B has purchased at rupees 6 lakh. Means this investment is coming in the balance sheet of A. This investment is coming in the balance sheet of B. So what changes in goodwill calculation? So we'll say B and C. So PC will be what? Okay, this will be 7 lakh. This will be 7 lakh. Now you need to understand how from A's point of view, how much B has paid to obtain control over C. Understand the language? Means we are preparing CBS from A's point of view. So we need to understand how much B has paid to get control over C. Understood? So how much B has paid from the point of A? So it will be 70% of 6 lakh. 70% of 6 lakh, because A is holding how much percentage? So whatever they have paid consideration, how much they have paid from A's point of view? 70% of 6 lakh. So it means here the PC will be 70% of what? 6 lakh. 70% of 6 lakh. How much? 4 lakh 20,000. Can you say NCA will remain same? No changes. NCA will remain same, no changes, either by fair value method or Pasina method. That you can do. And INA will remain same as per working note. We can find out goodwill or gain on bargain purchase. This you understood? This you understood? Understood? I am just giving another example. A, B, C. You will say what to do. A has invested 70%, B has invested 80%. 70% is for 5 lakh, 80% is for 9 lakh. And B has also done direct investment of 20%. And 20% they have purchased for 2 lakh. But what is the PC? For B and C, PC will be what? This will be 5 lakh. This will be what? Means how much? Batao na. 80% of? No, not 80%. I am writing 80%. You don't say 80%. Be careful. It is what? 70% of 9 lakh plus entire 2 lakh na. Entire 2 lakh. This will become PC. Understood? Till now this type of question has not been asked. Can be asked. Understood? Now the last adjustment. I said how many adjustment? 3 adjustment. First NCA you understood? PC you understood? Now can you say now NCA will be also 2? NCA will be also 2. NCA for B and C. NCA will be B or C. So you can find out NCA means whatever we have done till now that you can do for B and C. Means post acquisition profit of B will be allocated to parent company NCA of B. Parent company NCA of B. Post acquisition profit of C will be allocated to parent company NCA of C. So you can add on this as opening balance, means what is the NCA on the date of acquisition. This you can take from this formula. This will come this now. Opening balance will be this. Are bolna rahe? So opening balance will come from there. Then you add post acquisition profit. Post acquisition profit of B will go to this. Post acquisition profit of C will go to this. Correct? Understood? Now after this, just try to understand. Can you say, if you see this example, so we have taken 70% 6 lakh. How much we have not taken? 30% of 6 lakh we have not taken. So by this amount, NCA will be overvalued. By this amount, NCA will be overvalued. I mean, don't ask me the explanation of this. Huh? If you know, okay. If you don't know, then also okay. Because if I will explain, it will take 1.5 hours. I don't want to explain. Okay? So from your eyebrow, I have understood what is this, sir. But I don't want to explain right now. Just see what need to be done in exam. I think this much you have understood, no doubt. But here doubt will come, sir, why? I will not explain why. Okay? So can you say one thing is clear, that because you have taken 70% by 30% of 6 lakh, balance will not tell you. It means can you some adjustment required? So what ICA is doing, they are deducting, because this was investment of which company? Investment of A or B? As 6 lakh was investment of A or B? B. Therefore will deduct from NCA of B. Therefore, we deduct from NCA of B. So this is the investment of which company? B. Therefore, we deduct from NCA of B. So we'll say minus NCA share in investment in C Limited. How much? 30% of 6 lakh, and that will deduct from NCA of B, and this will be the amount, and your balance sheet will tally. Understood? So these three adjustment, if you have understood these three adjustment, any question of chain holding you can do. Understood the first adjustment is what? NCI calculation, have you understood? Second, PC calculation, have you understood? Third, NCI. So whatever you are not taking in this PC, how much you have not taken? 30% of 6 lakh. In second example, how much you have not taken? Sorry, 40. Acha, ठीक है. 30% of 9 lakh you have not taken. So whatever you have not taken, deduct from NCA of B always. Means intermediate party, intermediate parent company, always deduct from that. So NCA of B deduct, and this total NCA will come in the balance sheet. They have given only two questions of same nature, no changes. One question is given ICS study material. I think two questions they have asked in exam, same question, no changes. You can try, you will be able to understand. Yes, you can do it. Can I leave? I'm not doing any question of that nature. Chalega. Chain holding also completed from my point of view. Correct. Now this miscellaneous concept is not important from exam point of view. Meaning control you do by your own. Control definition, so till now they have not asked, they will not ask. But if they ask, do it by your own. Control definition. Okay. Control definition. So with this, we have done all the adjustment of Ind AS 110 completed. Ind AS 110 completed. Okay. Understood? Now let me do one question very fast. Can we take? Only for practice. Better now. First I will complete what? Ind AS, because time is running out. First we'll complete what? Ind AS 111 and Ind AS 28, but it will take 1 hour. Can you hold on for 1 hour? 1 hour? Hold on for 1 hour, then we'll take lunch break. Once we'll come after lunch break, we'll take some question, then we'll start share based payment. Okay? Chalo. This is completed. Ind AS 111 will take only what? 10 minutes. Only listen. Joint arrangement. Ind AS 111 joint arrangement. Now joint arrangement, you know what is joint arrangement? This is an arrangement between two or more than two parties having joint control under contractual agreement. Means there are two elements. There must be joint control as well as agreement. If these two elements are there, it is a joint arrangement. So first condition is what? Joint control. Second condition is what? Contractual agreement. If there is no contractual agreement, they cannot be joint arrangement. Now for the purpose of accounting treatment, what they say, this joint arrangement are of two types. One is joint operation, one is joint venture. Okay. Now this joint operation can be either unstructured or it can be structured. Unstructured means no separate legal entity is created for that joint operation. Structured means what? Some separate legal entity is created for that joint operation. But this joint venture will be always what? Always structured. Means joint venture cannot be unstructured. For joint venture, always a separate legal entity will be created. Understood? Means the question says unstructured means no separate legal entity, it will be always joint operation. But if this is structured, then we need to understand from the question information whether it is joint operation or joint venture. Understood? Now joint operation accounting treatment is as per Ind AS 111, as per Ind AS 111. But Ind AS 111 says if it is joint venture, go to Ind AS 27 and Ind AS 28. Go to Ind AS 27 and Ind AS 28. Means if you are in SFS, apply what? Ind AS 28. If you are in CFS, apply what? Ind AS 28. Means joint venture is outside the scope of Ind AS 111 for accounting purpose, not from meaning purpose, from accounting purpose. Understood? It means, can I say, we are only here to understand the accounting treatment of joint operation. But before that, let us understand what is the meaning of joint operation, what is the meaning of joint venture. Now, what our Ind AS 111 says that whenever parties having joint control have a right to asset and obligation for the liability of arrangement, joint arrangement, then it is a joint operation. Not understood? Means suppose they have given one joint arrangement and there are some asset and there are some liability. Suppose asset 1, 2, 3 like this, liability 1, 2, 3 like this, and this belong to X, this belong to Y, this belong to X, this belong to X, this belong to Y, this belong to X. It means, can I say, parties having joint control have a right to specific asset, an obligation for specific liability. So this will be always what? Joint operation. But if suppose there is one entity in which there is an asset and liability and no party have a right to any specific asset, no party have an obligation for any liability, means they have a right to only net asset. Means when the company will be liquidated, then the net asset belong to what owner? So they have a right to net asset, but they do not have a right to any specific asset or obligation for any specific liability. Then this is what? Joint venture. There is joint venture. Understood this point? Means any question says that building belong to only one party, then it means it is a question of what? Joint operation. Whenever such type of information not given, means it is a question of what? Joint venture. Understood this point? Have you understood this point? Chalega. So I hope meaning to you have understood. So here they have a right to net asset. Here they have a right to asset and obligation for liability relating to that joint arrangement. This much you understood? This much you understood? Now, can you say, when I am saying joint operation, there can be two type of parties. Parties having joint control and parties having no joint control. No joint control. For example, ABCD has entered into a joint operation. Joint operation. A is holding 40%, B is 20, C is 20, D is 20. 100% done. Now AB has done one contractual agreement that they will take unanimous, they will take some unanimous consent, decision for the decision of joint operation. Means, can you say A and B join together and they can anytime outvote what? C and D. So who has control? A and B together has control. So this become what? A and B is having joint control and C and D has no joint control, but they are party to the arrangement. So this C and D will come yahan par and A and B will come yahan par. Understood? So A and B become parties to the joint arrangement having joint control, and C and D become parties to the joint arrangement having no joint control. So what will be the accounting treatment in their books? What will be the accounting treatment in their books? Correct? First, one more clarification. Normally when I say, sometimes you are not able to understand my emotions. Correct now? I said A and B enter into a joint operation. A and B enter into a joint operation. Okay? So but this Ind AS 111 is applicable in the books of joint operation ki A and B. Understood? This Ind AS 111 is applicable for the books of joint operation ki A and B. A and B. Very good. Means you are understanding my emotion. Ind AS 111 is applicable in the books of A and B, not in the books of joint operation. Not in the books of joint operation. Are you getting? Correct. So these parties are known, I have already written, these parties are known as joint operator. These are known as what? Joint operator. This party has not given any name. This party has no name. So whenever I say joint operator means what? Parties having joint control. Okay. The parties having no joint control are not known as joint operator. They are not joint operator. So they have no name. They only say parties having no joint control. Understood? Now in their books, what will be recorded? So in their IFS, yeah, you can say SFS and CFS. Can you say whatever you are recording in SFS, from SFS will come in CFS? So whatever you are recording in SFS, from SFS what it will come to what? CFS? Yes or no? So whatever you are recording in SFS will directly come to what? CFS? Yes or no? Are you able to understand what I am saying? So in SFS and with SFS in CFS, are you getting? What will be recorded? So we record their asset and share in asset which are jointly held. Their asset and share of asset which are jointly held means, suppose this is joint operation and I say asset A, asset B, asset C, asset D, and there are X and Y, there are two party. This belong to X, this belong to Y, this belong to both, this belong to both. So in the books of X, what will come? A will come and C and D will also come, but to the extent of their share. Suppose 50% their share, so 50% of C will come, 50% of D will come. Understood? So their asset and share of asset jointly held. Similarly, their own liability and share of liability jointly incurred. Similarly, their income and share of income jointly earned. Similarly, their expense and share of expense jointly incurred. Only this much. Correct? So if you read what is given, check karenge. What is given? Okay, accounting by joint operator. Joint operator means what? Entity that is a party to the joint operation that have joint control. In the separate and consolidated financial statement joint operator, a joint operator account for the following in accordance with applicable Ind AS. What do we record? Its asset, including its share of any asset held jointly. Its liability, including its share of any liability incurred jointly. Its revenue, including its share of revenue earned jointly. Its expense, including its share of any expense incurred jointly. Understood? Now, coming to the books of this party. One time they have asked question of this for 5 marks. Means they have asked in the books of this party. So what they are saying? Ki if this party, even though they don't have joint control, but they have a right to asset and obligation for liability, then same treatment. Understood? Means party having no joint control, but have a right to asset and obligation for liability, then same treatment as you have done for joint operator. But they do not have a right to asset or obligation for liability, then their investment will be accounted as per Ind AS 109. Then whatever they have done investment in that joint operation, that investment will be accounted as per Ind AS 109, means either FBTPL or FBTOCI, as the case may be. Understood? So any parties not having joint controls, if they have a right to asset, obligation for liability, same treatment as joint operator. But they do not have a right to asset, obligation for liability, then their accounting for this interest will be as per Ind AS 109. Correct? Similarly, can you see joint venture? There can be two parties. Parties having joint controls and parties having no joint control. Correct? So in their books, for SFS what will be applicable? 27. CFS what will be applicable? 28. And 28 says equity method coming soon. Equity method will do under Ind AS 28. Now parties having no joint control. Correct? Understood? So parties having no joint control. But can you say they may have significant influence? So suppose A, B, C. These are the party having joint control. And the C is holding 30%. So can you see if they are holding 30%, they can exercise significant influence. So you need to find out whether they exercise significant influence or no significant influence. If significant influence, so can you see it will become associate, means the joint venture, means this ABC Limited will become the associate of this party. Correct now. Then again in SFS apply what? 27. In CFS apply 28. But no significant influence, then apply Ind AS 109, means either FBTPL or FBTOCI. Understood? This type of question can be asked for 2 marks in multiple choice question. Multiple choice question. Understood? Now I am expecting there are some few very simple question given, but there is one very good question that I want to share with you, and I am expecting that type of question in multiple choice question or 5 marks question. I am expecting. Correct now. Now they will say, suppose A Limited and B Limited has a joint operation. So if they have done some transaction with joint operation, what will be the accounting entry for that transaction in the books of A and B? Understood? Means if suppose they have contributed some asset to joint operation, or they have purchased some asset from joint operation, so what will be the accounting journal entry in the books of joint operator? Understood? Means there can be 2 type of question. A, joint operation. Correct? They have sold one asset to joint operation. Correct? Suppose the carrying amount of the asset is 100 lakh. Correct? Understood? They have sold at a profit of what? 20 lakh. So it will become 120 lakh. So this will become what? Cost price of what? This per party. I mean, right now we are here to understand journal entry in the books of A, not journal entry in the books of joint operation, because Ind AS 111 is applicable in the books of A and B, not in the books of joint operation. Understood? Now just write in whatever has been transferred to joint operation. Correct? Suppose they are holding 40% in joint operation. So other party is holding how much? So can you see they have transferred only to the extent of 60%, because this 40% again belong to what? This 40% again belong to what? A. I hope you are understanding. Are you able to understand? So this 40% again belong to what? A. It means they can de-recognize the asset only to the extent of 60%. Only to the extent of 60%. So what journal entry they will do? But the bank account how much? Can I say 120 ka 60% how much? 72. And 2 asset, what is the carrying amount? 100 ka 60% how much? Only 60. Only 60. And the difference is what? Gain. Gain is how much? Transfer to PL how much? 12. So they will recognize only gain or loss to the extent of other party share. Other party share. May they will not recognize gain or loss to the extent of their share in joint operation. Understood? Have you understood this point? One similar question has been given, you can read it. They have given from loss point of view, I have given from profit point of view. Correct? Now one more question. Suppose A, joint operation, and joint operation has sold what? Asset to A. Quite possible reverse. So suppose cost price is 100, loss later. Loss is 20 and sale price is equal to 80. Correct? Now, can you see, just try to understand, whatever was the asset of this company, and suppose they will have done investment of 40%. Correct now? Can you see already 40% is in the books of what? A. Already 40% is in the books of A. Means already in the books of A, 40% of 100 is coming. 40% of 100 means 40 is coming. Means they have purchased only 60% now. It means they have purchased only 60%. Yes or no? Because already 40% is coming in the books of A. Yes or no? It means they have purchased only 60%. So what journal entry do? They will do asset account debit how much? 60% of 80 lakh. Sale price what? 80 lakh. Now how much? 48. To bank how much? 48. This much is the journal entry. They have paid only 48 lakh now. to acquire 60%. To acquire 60%. It means in their books, the asset will come at 40 plus 48. Means how much? 88. Understood. These are the two questions they have given, which is quite expected in MCQs or as a 5 marks question. As a 5 marks question. But there is one more good question. Let me take that also. With this, India's 111 will be completed. I am feeling hungry. You are also feeling hungry? Good हो रहा है. अच्छा, this question. Entity A and B establish a 50-50 joint venture. Sorry. Entity A and B establish 50-50 joint operation in the form of separate legal entity. Entity J, whereby each operator has a 50% ownership interest, take 50% output. Understood? On the formation of joint operation, entity A contribute a property with a fair value of 110 lakh, an intangible asset with a fair value of 10 lakh, whereby entity B contribute equipment with a fair value of 120 lakh. So A and B contributed some sum. Okay. Then they will carrying amount of the asset contributed by entity A, entity B is 100 lakh and 80 lakh. What will be the amount of gain and loss to be recognized in the books of entity A and entity B? Have you understood the question? Question, have you understood? What they are saying? A and B. And this is joint operation. Means whatever is contributed by, what is the fair value? Can you give me the total fair value? So they have contributed two things, 110 and 10. So 120 is the fair value. 120 is the fair value. And what is the carrying amount? Carrying amount is what? 100. Carrying amount is 100. Yes or no? Carrying amount is 100. And whatever is contributed by B, what is the fair value? Carrying amount. The carrying amount of the asset contributed is 100. They are given together 100. Therefore, I have written together fair value. Okay, na? Entity B, what is the fair value? 120. And carrying amount is what? 80. Carrying amount is 80. And what is the investment? 50% and 50%. Now, whatever they are transferring, they are transferring only 50%. And whatever they have transferred, they are getting what? 50%. Means in the books of A, they will get asset contributed by B. They will get asset contributed by B. So they will get fair value or carrying amount? Fair value. Fair value will be recorded because they have transferred at fair value. So 120 ka 50% how much? So it means they will receive 60. But can you say they will recognize this asset at carrying amount? So the carrying amount of this is 100, but how much they will transfer? 50%. So 100 ka 50%, how much? 50. So what is the gain? Gain is 10. This is the gain in the books of A. Can you do in the books of B? 2 marks question in MCQs. Have you understood this? Means this will be received by A and this has been transferred by A na. Are you getting? Means from the A point of view, they have received this but to the extent of 50% and they have transferred this to the extent of 50%. That only we have done. Now from the point of view of B, they will receive this and they have transferred this. So how much they are receiving? 60. How much they have transferred? 40. So their gain is also what? 20. This is the gain in the books of B. This is the gain in the books of A. Can be asked for 2 marks MCQs or 5 marks question as a descriptive question. Correct? India's 111 is completed from my point of view. Can I continue? Huh? You want break? Chalo, nahi chalega. So India's 28 will do because I am also feeling hungry. Now dimag is not working. ठीक है ना? So India's 28 is left. So I become thoda sa slow actually. My target was that before lunch break I should complete what? India's 28 and one more question of CF is left. what was my planning? To 1 hour we are slow. Acha, already I have said that today I am leaving Chennai. So tomorrow what was the schedule, I will not be able to take. There is some emergency came, so I need to leave today only. Unavoidable is there, so I need to go. Correct? So share based payment I will be completing. My flight is at the flight is in the night. So share based payment I will complete and leave. I will complete and leave. Even one student is there, I will teach. ठीक है ना? Means those who are tired, they can go. Are you getting what I am saying? So share based payment I will complete by today. And whatever is small, now whatever is left, small Indias is left. So small Indias already I have my marathon classes already, previous attempt is there. So if you want to do it soon, do from there. However, whenever I have the time, I will record it and upload. But that is because my new batch is going to start. So I will not have full day time. So whatever time left, I will do recording and upload. But this is only as per my time availability. But I'll try to upload. I will try to upload. If you have any preference, suppose you want, sir, do this Indias, that I will give preference. So at the end of the class, I will ask which Indias you required on an emergency basis. For example, you say Indias 33. Suppose, so I will do Indias 33 first and record it and upload. Understood? Whatever I am saying? Understood what I am saying? Or I will give you in my Telegram channel, yeah, I will inform you I am coming live on this. You also attend live. Correct? So due to some emergency situation, I need to go by night only. It was not planned. It was not planned because my hotel booking was up to what? 26th only. But due to some emergency, I need to go. Okay, sir? Okay, sir? Correct? But I will try to upload as per your preference. Suppose you want, sir, please do that, this, sir. So I'll give preference to that chapter. But can I say most all important chapter we have covered? Business combination we have done, financial instrument we have done, consolidation we have done, Indias also done, Indias based on asset also we have done. So all the important chapter we have done. It does not mean the balance are not important. That are also important. Okay. So what we'll do? We'll take lunch break of 1 hour, or you want 45 minutes? 45 minutes, today 45 minutes. So 45-minute lunch break, then we'll come fast, we'll complete Indias 28, then we'll complete share based payment. Okay? Chalo. Thank you very much. Now, can we start once again, everyone? Okay. Now, before break, we completed India's 111. India's 111 is easy. You can manage. Now, come to India's 28. India's 28 is investment in associate and joint venture. Now, joint venture you have understood from India's 111. Now, associate means what? That it is an entity in which investor has significant influence. So, whenever investor has significant influence, whenever investor has significant influence over any entity, that entity will become associate. Now, as per India's 28, some presumption has been taken that any entity which hold directly or indirectly 20% or more than 20% of voting right of any other entity, it is presumed that in that entity significant influence will be exercised, and therefore that entity will become associate. This from examination point of view, 20% or more than 20% means what? Associate. 50% or more than 50% means what? Subsidiary, from examination point of view. Got this point? Yes, sir. Now, these are our theoretical part. Let us come to the accounting. Now we have understood that in CFS of investor, we need to apply India's 28 for joint venture and associate. Means, to conclude, can I say in this way, if there is a parent company having a subsidiary, so this will prepare one SFS and CFS. In SFS they will apply 28(7) and in CFS they will apply 103 plus 110. Correct? If any investor has an associate, so this investor also prepare what? SFS and CFS. In SFS they will apply 27 and in CFS they will apply 28. Now, any investor which is also known as joint venturer has joint venture. So, in the SFS of joint venturer, we apply 27. In CFS of joint venturer, we apply 28. Now, 27 says that investment will be recorded either at cost price or fair value as per Ind AS 109. So, Ind AS 27 has given two options, either cost price or you can also measure as per Ind AS 109. Measure as per Ind AS 109 means it can be FBTPL or FBTOCI. However, question is silent, always we assume that in SFS we have applied what? Cost. That is our general assumption. So, question is silent, to always we assume that investment is recorded, whether it is subsidiaries or associate or joint venture, we always assume that it is at cost price. Now, in CFS, we apply here line by line consolidation method. We call it line by line consolidation method, but here we call equity method and equity method. This must you know. So, now we are here to understand what? Equity method. Correct? So, equity method is very simple, only you need to understand some point from examination perspective. Correct? So, on the date of acquisition, can I say in CFS? Right now, whatever journal entry I am saying, that is in CFS, not in separate financial statement. So, on purchase of investment, our journal entry will what? Investment account debit to cash or bank. Investment account debit to cash or bank. Now, what Ind AS 28 says that on the date of acquisition, you need to also calculate goodwill or capital reserve. Now, we don't call it gain on bargain purchase. We say goodwill or gain, and that gain will be also transferred to capital reserve, but we don't call it gain on bargain purchase. So, we need to calculate goodwill or capital reserve. Formula remains same. Means this is cost price of investment. For example, this is for 30%. So, now we will write down only 30%. And of course, here there is no NCI. So, we will not add NCI. The question of adding NCI will not arise. Correct? So, NCI will only come in parent and subsidiary relationship. NCI will not come in this particular point. So, now from this we will deduct fair value of INA. Same fair value of INA, but to the extent of 30%. So, we will deduct 30% of fair value of INA of associate or joint venture, and this will be goodwill or capital reserve. This will be amount will be goodwill or capital reserve. Now, what Ind AS 28 says that if it is goodwill, then it will be not recognized, it will be only disclosed. So goodwill, if any, will not be recognized, only disclosed, but any gain will be recognized, So any goodwill will not be recognized. Why it will not be recognized? Why? Because suppose this is 100 and this is 80. So goodwill is 20. So okay, this 100 is inclusive of 20. This 100 is inclusive of 20. So because the cost price of investment is inclusive of goodwill, therefore we are not supposed to again recognize it. Otherwise we will recognize 2 times a goodwill. Therefore there is no need to recognize it because it is included in the carrying amount of investment. Similarly, if I say this is 100 and this is 110, so there is a gain of what? 10, but this cost price does not include this 10. The cost price does not include this 10, therefore we need to add it. We'll add 10 and that will be transferred to capital reserve. So our journal entry for this will become investment account debit to gain, and the gain will be transferred to capital reserve, and investment will increase by that amount of rupees 10 in my example. Then this is up to the date of acquisition. Then for post acquisition period, we need to pass up journal entry. So during post acquisition period, can I say associate will earn some profit? So that will become post acquisition profit. Now profit, when I say, so profit means SOPL. SOPL means PL plus OCI. So there can be some PL, there can be some OCI, there can be some PL, there can be some OCI. So if there is a share in profit or loss, so what will be journal entry? So if there is a share in profit, the journal entry will be investment account debit to share in profit. If there is a share in loss, journal entry will be share in loss account debit to investment. Means investment will increase with the amount of share in profit. Investment will decrease with the amount of share in loss. So journal entry is very simple. Correct now? Journal entry is very simple. Correct. Okay, this share in profit will be transferred to PL, and from PL it will be transferred to retained earning. Means if you are preparing any consolidated financial statement, directly you can transfer this share in profit to which working note? Consolidated retained earning working note. Consolidated retained earning working note. Got this point? Similarly, this loss will be transferred to PL, and from PL this will be transferred to retained earning. Got this point? Now for recognizing any share in OCI, same journal entry. If it is a profit, then journal entry is investment account debit to share in OCI. If it is loss, then share in OCI account debit to investment. Understood? Simple. Means in this case, can you see this will be transferred to OCI, and from OCI it will be transferred to respective other equity. Respective other equity means separate component of equity. Means if it is revaluation surplus, it will be transferred to revaluation gain, will be transferred to revaluation surplus. If it is exchange gain or loss, it will be transferred to FCTR, and as the case may be, Similarly, if there is a loss, that will be also accumulated in separate component of equity. Got this point? So this is also very simple. Now any dividend received or receivable, So for any dividend received or receivable, the journal entry is what? If received, the bank account debit to investment. If receivable, then if received, then bank account debit to investment. If receivable, then dividend receivable account debit to investment. So journal entry is very simple. Correct? Understood. Now only in this thoda se interesting point, suppose they have given SFS, and from SFS you are preparing CFS. If they ask journal entry, if they ask only journal entry, then to pass this journal entry. Means suppose they ask journal entry in the books of CF, means in the CFS books of investor. Then your journal entry is what? Bank account debit to investment or dividend receivable account debit to investment. But if they ask you to prepare consolidated financial statement from separate financial statement, so can I say in separate financial statement, this dividend income received from associate or joint venture is already transferred to PL. Means already you have done one journal entry, bank account debit to PL. But in CFS, the bank account debit to investment. So can I say you need to pass one adjustment entry from SFS to CFS. Are you getting what I am saying? So in SFS you have transferred to PL. But in CFS, it will transfer to investment account. So what will be the adjustment entry? Adjustment entry what? PL account debit to investment. Means can I say retained earning account debit to investment. Are you getting what I am saying? So if from examination point of view, they have asked you to prepare CFS from SFS, and in SFS it is already recorded, so it has been already transferred to dividend income, and dividend income has been transferred to PL, and from PL it has been transferred to retained earning. So it means reduce retained earning and reduce investment. Then this will be your adjustment entry, retained earning account debit to investment in associate. Understood? Got this point? Yes, sir. Then again, can I say, because here we have taken fair value by NA. So if you have taken fair value by NA, so there will be some post acquisition depreciation adjustment as we have done in what? Subsidiary company. In subsidiary company, so I have explained everything. I have explained depreciation adjustment, then inventory sold, then debtor collected, then creditor paid. We have done a lot of adjustment now. But in this chapter, they will ask only PP. They will not give anything. Means till now, whatever question they have given from that point of view. So what I have seen, whatever question I have seen, they only ask PP. So PP means additional depreciation. You are saving in depreciation. It is quite possible due to fair value by NA on the date of acquisition, because you have taken fair value by NA, there can be some post acquisition additional depreciation adjustment. Yeah, post acquisition saving in depreciation adjustment. So additional depreciation will reduce share in profit. Additional depreciation will reduce share in profit, and saving in depreciation will increase share in profit. So if there is some additional depreciation due to upward valuation of asset of associate or joint venture, then what is your entry? Your share in profit will decrease. So share in profit account debit to investment account, share in profit account debit to investment account. If there is a depreciation saved, then what is your entry? Investment account debit to share in profit account, share in profit account. Means can I say your share in profit will be sum total of what? Share in, whatever share in profit you have got minus what? Share in additional depreciation, minus share in additional depreciation. I will explain how to work from examination point of view. But have you understood this journal entry? Have you understood this journal entry? Yes, sir. Then point number 6. This is till now not asked in exam. Till now not asked in exam, but can be asked. I think not yet asked. Yeah, not yet asked. Not yet asked in exam. Not given in ICI study matter in question. They have given a separate question for this only to calculate what? Unrealized profit, but not given in the full questions. Okay, so there can be what? Some unrealized profit on the unsold stock sold by investor to associate. Yeah, sold by associate to investor. So it can be downward, yeah, upward. It can be downward or upward. Let me explain this point. We suppose there is an investor and there is an associate. Correct? Investor is holding 40% and investor has sold goods to what? Associate. Suppose the cost price is 100, profit is 10, sale price become 120. 110. And this becomes the cost price of associate. Now this remain unsold. Now but in CFS, you only say in CFS of investor, whether this stock will come. In CFS of investor, whether this stock will come. At Nalayak. Only investment will come. Stock will not come. So can you say we don't recognize any individual assets and liability of associate or joint venture in CFS of investor? So we recognize only investment now. It will come only investment. But can you say this investment represent 40% of net asset? 40% of net asset of this company? Can you say 40% of net asset will include 40% of stock? 40% of stock will include 40% of URP. So can you say this investment is overvalued by 40% of URP? Are you able to understand? So investment is overvalued by 40% of URP, and can you, this profit has been transferred to PL 10, but how much you can eliminate? Only 4. And what will be journal entry? Retained earning account debit to investment. Retained earning account debit to investment. So can you say whenever downstream transaction, what is journal entry? Retained earning account debit to investment. Retained earning account debit to investment. Understood? Yes, sir. Reverse. If suppose I say investor, associate, and associate has sold to whom? Investor. Quite possible investor is holding 40%. So suppose cost price is 100, profit is 10, and what? Sale price is 110. So this becomes the cost price of stock 110. Correct? Now in the CFS, this stock will come. Yes or no? 110. Correct. And can you see this profit will be recognized only to the extent of 40%. So what journal entry they have done? Investment account debit to share in profit. How much? 4. So can you see this profit will be recognized in the books of investor? to the extent of their share. So what journal entry will do? Investment account debit to share in profit. This share in profit will transfer to what? PL. From PL it will go to what? Retained earning. So can you say in retained earning what will come? 4 will come. Yes or no? But what journal entry will do? To eliminate URP. Can you say this is nothing but this 110 include this 4 or not? So what journal entry? Retained earning account debit to stock. Retained earning account debit to stock, or we can say sharing profit account debit to stock. Sharing profit account debit to stock, but only to the extent of investor share. So URP will be eliminated, but only to the extent of investor share. If downstream, then what journal entry? Retained earning account debit to investment. If upstream, then retained account debit to stock. Understood? Important. Correct. So can you say whenever downstream, then what journal entry? Retained earning account debit to investment. But if upstream, then you can say retained earning account debit to inventory, retained earning account debit to inventory. Understood? This you remember? Bolo. You can remember or not? Correct? Understood? Okay. This is not so much important. Now, intercompany debt. Now just try, intercompany debt will never be cancelled. Why it will not be cancelled? Because we are not recognizing the individual assets and liability of associate or joint venture in CFS. So any intercompany debt will not be cancelled. So intercompany debt will not be cancelled as the asset and liability of the associate and joint venture are not recognized in CFS. This is not so much important. Okay? Understood? Correct. Now, suppose they have given a question of consolidated finance system as it comes in May, November not. In May it came. In May 2024 exam came. Jhatka diya. Correct? So what you need to understand? Suppose they have given one parent, subsidiary, associate. So this to you can do. Are bolna re? Parent and subsidiary you can do. So I am not teaching you parent and subsidiary. I am teaching you what? Parent and associate. Got this point? Are you able to understand? Okay. Look at this. Step number 1 for consolidating associate. Step number 1, perform working note of fair value adjustment if any. As we have done in subsidiary company, as we have done for consolidation of subsidiary company, same to same. But they will ask only PP, I know, or they will not ask. So can you see if they ask fair value adjustment, you can do it? Bole yes or no? Then prepare AOP. Prepare AOP here also. Same thing. Closing balance, opening balance, closing balance, opening balance. This will be profit after appropriation. Then any dividend paid, what you will do? Add back. Correct? Dividend paid, you will add back. Correct? Yes or no? Correct? Dividend paid, add back. And if suppose dividend declared but not paid and recorded, what you will do? Add back. That is also add back. So therefore I have written dividend paid or payable. If recorded, add back. Understood? Normally I have seen they are asking only dividend. In this they are not asking bonus share. In this they will not ask any other adjustment. Abnormal loss. But suppose they ask abnormal loss, same treatment. Suppose they ask bonus share, same treatment. Everything remains same. But I am not confusing you by writing all the things because I know they will never ask. For subsidiary they will ask, for associate they will not ask because I have never seen that type of question in any reference book. Correct? So they will not create that type of question. And believe me, whatever question they have asked in May 2024 now, same question is in my ICA study, my question bank. But when I do, I say to my student, it is other sources. So before exam they will never do. Same similar question we have, and that question I have taken from AS based CA final syllabus, and the same question with one adjustment I will say they have changed, they have asked in exam. But my student also will not do my other sources question. Normally what happened, just try to understand. They could just try to what actually happened. One thing you need to understand is fact. Okay? ICI exam from ICA book, yeah, not from ICA book. Correct? Not from ICA book. There can be two situations, correct? Passing percentage will remain 20%. In both the cases. Understood? Means what do you think? If they ask from ICA book, it will become 80%. What do you think? Are we able to understand? Passing percentage is 20% only, because the demand is only 20% in the market. Now, if it is over flooded, so demand of CA will decrease. If demand of CA will decrease, no one will do CA. So ICA will never do that, and we also don't want that. You ask any CA, he will say no, come se come CA. Correct now? Because if over flooded, demand will decrease or not if supply is more. Therefore, result will be 20%, whatever may be the case. But in this case, what happened? Ki those students who have done these ICA books 10 times, their passing percentage will increase. But in this case, those who are conceptual, they will pass. And this is the difference. Difference is this only. If this is the case, so paper checking will be hard. If this is the case, so everyone have not done this question, paper checking will be easy. But result will remain it will vary from 18 to 20 to 23%. Yeah, I'll say 15 to 25%. Result will vary from 15 to 25%. Every time. This is the fact. Understood? Are you able to understand? Correct? Got this point? You know, one exam came Jan 2021 attempt. This was the opt-out scheme. Means there were two attempts. One November 20 and Jan 21. Two exam was there. November 20 was super easy paper. Means lollipop. Jan 21 paper, all questions were out of book. All questions were out of book. Every questions were new question. Bola low panga from ICA. Means those who are opted out now, all questions of FR for the first time was out of book. But then also result remain same. Not much difference. Result remain same. So this is the fact. Means questions come from anywhere. Do it. Whatever you have understood, just try to attempt. Don't panic in exam hall. That panic you need to decrease. That fear that you need to decrease, fear of not passing the exam. Fear of not passing in the exam. So first to perform, then result will come. So exam day is only for performance. Correct? Exam day, that 3 hours only perform. Don't think much ki what will happen after exam. Okay? Now, so can you say whatever adjustment we have done for parent subsidiaries, same thing will be applicable यहाँ पर. But they are not asking, therefore I am not discussing much यहाँ पर. Correct? But can you say dividend paid and payable you have understood? Correct? This will be allocated toward pre and post acquisition profit as per the time ratio, if any. Correct? Then this will be add opening balance. Understood? But in this case now we don't prepare SONA. Will not prepare SONA. So fair value adjustment can I say we can do from here? Fair value adjustment we can do here. So this is what fair value gain or loss on the date of acquisition, and this is the post acquisition adjustment. So we will not prepare SONA because that will be time wastage. So we will not prepare SONA is not required. So we will do fair value adjustment from this only, and this become total pre and total post acquisition profit. Now you will think, sir, why you have not deducted dividend paid? So I am just giving two attention wala point. From this, don't deduct dividend paid or payable, and don't do any URP adjustment from AOP. Correct? Why? I will explain at the end. So attention is what? Don't deduct dividend paid or payable and unrealized profit upstream from the post acquisition profit. But what is the journal entry I have said for unrealized profit upstream? I have said what? Sharing profit account debit to stock. So sharing profit means this is only sharing profit. So that will go only sharing profit. So don't deduct total. That will be wrong. So I will say don't deduct dividend paid or payable or unrealized profit from post acquisition profit. This is one attention. However, in case of AOP or subsidiary company, we used to deduct what? Dividend paid also. We used to also deduct URP also, because that was from in that we used to consider total profit. But here we want only sharing profit. We want only sharing profit. So never deduct this two. Never deduct this two. Understood this point? Correct? Then, can you say calculation of goodwill or gain or bargain purchase now you can do? Can you say this will be the cost price of investment? This is the PC. You will get from what? Balance sheet. Then investors sharing fair value of INA on the date of acquisition. So okay, this will be share in equity share capital. Share in equity share capital and share in this pre-acquisition profit. Share in pre-acquisition profit. We can find out this becomes the fair value of INA. This becomes share in fair value of INA, and this will be either goodwill or gain on the date of acquisition. Correct? If there is a gain, we'll pass journal entry. What journal entry? Investment account debit to capital reserve. Investment account debit to capital reserve. If goodwill, then we'll not pass any journal entry. Then we'll prepare one value of investment state. Then we sorry. Then we'll prepare one statement to calculate value of investment associate as per equity method. Means whatever journal entry we have understood, now we'll do plus minus यहाँ पर. So can you say we'll start with the cost price of investment. In this, goodwill is already included, and therefore don't add goodwill. Okay? But if there is a gain, we need to add gain. So we'll add gain on acquisition, and that will be transferred to capital reserve in the balance sheet. This will be transferred to capital reserve in balance sheet. This will become value of investment as per equity method on the date of acquisition. On the date of acquisition. Then we'll do post acquisition adjustment. So if there is any sharing profit, so share, if there is any profit of associate, so we'll transfer sharing profit only. The investor's sharing profit or loss will be adjusted. So we'll take this profit will find out what? Suppose 40%, and this will be added. And can I say this is automatically adjusted with fair value additional depreciation adjustment? Already adjusted with fair value additional depreciation adjustment. We'll take only this 40%. Suppose 40%. So we'll take 40% of this, and 40% of this share will be either added or deducted. If profit, then added. If loss, then deducted. Understood? Correct? Normally they are not giving OCI, but suppose they give OCI, so we'll do plus minus for that also. If there is some OCI, so we'll do plus minus for that also. Sharing profit in OCI, that will be also done. Correct? Now dividend paid by associate will be received by associate will be received by investor. So that is deducted from what investment? What journal entry? Bank account debit to investment. Bank account debit to investment. And therefore I say don't deduct dividend paid यहाँ से. Don't deduct dividend paid, because normally we are habituated of deducting dividend received or receivable from यहाँ से. So minus dividend received or receivable from associate or joint venture. So whatever dividend received or receivable, deduct from this. Understood this point? Correct? Then any downstream transaction if there is a URP. Any downstream transaction if there is a URP, so we need to find out share in URP of downstream transaction. That will be also deducted from investment. That is also deducted from investment. But only which transaction? Downstream transaction. Only which transaction? Downstream transaction. So what will do? Elimination of URP for only downstream transaction, but only to the extent of investor share. That is deducted. This will become value of investment as per equity method. Correct? This become value of investment as per Ind AS 28. Correct? Now can you say this become one single investment? This might be impaired as per Ind AS 36. This might be impaired as per Ind AS 36. So quite possible in your question they have given it is impaired by this amount as per Ind AS 36. So impairment loss will be also deducted. So if any impairment loss is given as per Ind AS 36, that will be also deducted, and this will be the carrying amount of investment in CFS. This will be carrying amount of investment in CFS. Correct? Okay, so whatever we have done, we need to give double effect, second effect. So this will be transferred to what? Capital reserve. This will be transferred to what? Retained earning. This will be transferred to what? Any other component of equity as per the nature. This will be transferred to what? Either bank or PL means retained earning. Understood why I am saying bank and PL? Means suppose it is not recorded in SFS. If it is not recorded in SFS, then our journal entry is bank account debit to investment. But if it is already recorded in SFS, then our journal entry is what? Retained earning account debit to investment. Retained earning account debit to investment. So that depend upon the information whether it is recorded or not recorded in CFS. In SFS. Understood? So if recorded in SFS, then our journal entries were retained earning account debit to investment. If not recorded in SFS, then bank account debit to investment. Understood? Have you understood? Then elimination. This will be also adjusted with retained earning, and this will be also adjusted in retained earning. So this is the other effect of this particular transaction. So second effect given, balance will tally. Balance sheet will tally. Now can you say we need to, after that we need to prepare other equity. Other equity. So retained earning and OCI. If suppose OCI component they have given, they are not asking. If they are asking, okay. But if they are not asking, you will not have this. Correct. So can you say balance will take as per parent company balance sheet, means as per the investor company balance sheet, as per the investor company balance sheet. Of course, here there will be no NCI, na? No non-controlling interest. So balance will take, then will take sharing profit, that will be added, means this will be added, na? This amount will be added. This will go to OCI, this will go to OCI. Means all this second effect will be given or not? All this second effect will be given. I hope you are understanding. Less share in URP of downstream transaction will come. So what is journal entry for URP of downstream? Retained earning account debit investment. Can you say we'll also do share in URP of unsold stock of upstream transaction also? Their journal entries were retained earning account debit stock. The retained earning will decrease and stock in CBS will decrease. So this will also come. I hope you have understood this. Then dividend receivable if recorded in SFS will come. Dividend received or receivable if recorded in SFS, then what is your journal entry? Retained earning account debit to investment. Retained earning account debit to investment. Understood this point? Then impairment loss, if any, that will also come. This will be balance to be shown in CBS. Balance to be shown in CBS. Correct? Means when you prepare CBS, so this is a parent company and associate company. So can you see all the assets and liability of parent company will come, but assets and liability of associate will not come in CBS. Only what will come? Investment will come as per this previous working note, and capital reserve might come. Capital reserve might come now. Capital reserve might come. Only these two will come. Nothing will come. Can I say intercompany debt will not be cancelled? Intercompany debt will not be cancelled. If there is some upstream transaction, so stock may URP might be there. That need to be cancelled. That need to be cancelled. Only this much adjustment is required, nothing more than that. If you read, you will be able to understand. Correct? Understood? We'll take one question. We'll take one question directly. Can we take that same question? Whatever was asked? Chalo, we'll take that question. You need to do with me, yeah? Now, देखना, such a flow will come now. मजा आ जाएगा. Are you ready? Are you ready? So let us take some simple question first, then I'll come to that. One simple question for 5 marks. Normally we expect this type of question from this chapter. 5 marks question. 5 marks question. On 1st April 2019, investor acquired 30% interest in another entity, XYZ Limited. Investor determined that it is able to exercise significant influence over XYZ Limited. Investor has paid total consideration of 47,50,000 for acquisition of interest. This become cost price. At the date of acquisition, the book value of net asset is 90 lakh and the fair value is what? 1 crore 10 lakh. investor has determined the difference of 20 lakh pertain to an item of PP which has the remaining useful life of 10 years. So what is the additional depreciation? 20 lakh divided by 10. How much? 2 lakh. But be careful about date. Sometime in one of the question they have given date of acquisition as 30th June. Then the post acquisition period will be for how many months? 9 months. Then additional depreciation will be for how many months? 9 months. Understood? Be careful about that date. Okay. During the year ended, they made a profit of 8 lakh and they paid a dividend of 12 lakh. Okay. They also earned a long-term investment in equity securities. Under Ind AS, investment is classified as FVTOCI in accordance with Ind AS 109, and XYZ recognized an increase in the value of investment 2 lakh in OCI. So this become 2 lakh gain in OCI during the year. Ignore deferred tax. Thank you very much. Calculate a closing balance of investor as on this date. So first we'll calculate goodwill or gain. Always, even the question is silent, first we'll calculate goodwill or gain. So batao, what is the cost price? 47 lakh 50,000. What is the fair value of INA? 1 crore 10 lakh. 35% how much? How much? 38 lakh. So what is the goodwill? What is the journal entry for this goodwill? No journal entry. Chalega. So you can see they have also calculated goodwill how much? 9 lakh. But our cost price is how much? So this will write down including what? Goodwill of how much? 9 lakh. Of how much? 9 lakh. Then can you say we'll add share in profit? We will add share in profit. What is our profit? 8 lakh. Okay, from this 8 lakh we should deduct additional depreciation. So what is our additional depreciation? 2 lakh. So 8 lakh minus 2 lakh how much? 6 lakh. 6 lakh ka 35% how much? 2 lakh 10,000. So you can see they have also added share in profit 2 lakh 10,000. Understood? So from means they have calculated this here, I will say do directly 8 lakh minus 2 lakh into what? Into what? 35%. Directly we can do. Chalega. Then how much dividend paid? 12 lakh. But how much they will receive? 35% of 12 lakh how much? 4 lakh 20,000. This will plus ki minus? Dividend receivable plus ki minus? Minus. So minus dividend received how much? 4 lakh 20,000. Correct. Now there is then one OCI. OCI how much? 2 lakh. This is again OCI. 2 lakh ka 35%? 70,000. So this will be also added. Added how much? 70,000 will be added. So this will be closing balance of investment in CFS how much? 46 lakh 10,000. Perfect question for 5 marks. Perfect question for 2 marks also. Means if 2 marks, they will ask this amount as a multiple choice option. Correct. This is one of the favorite question of a student in this chapter. Chalega. Now come to this question. The accountant of Mr. Ramesh Khanna of H Limited submitted with the following standalone balance. They have given H as A. From name we have understood holding company, subsidiary company, associate company. Okay. Okay. Non-current asset PP, financial asset investment 14,000 shares. Means H has invested in how many shares? 14,000. Out of how many shares? 20,000. The 14,000 divided by 20,000. So 70% investment. And 4,000 shares in A Limited out of 10,000 means how much invested? 40%. This so we can understand. We can understand. Okay. Inventory, financial asset, cash and cash, trade receivable, equity, share capital, other equity. Okay. पढ़ लो. आगे चले. ठीक. The following additional information made available. H Limited purchased the shares in S Limited on 31st October 2003. On 31st October, when retained earning in S Limited was 5 lakh. Oh, it means they have given retained earning on the date of acquisition only. Means time adjustment not required. Means case opening balance is given on the date of acquisition only. So we need to read the question carefully. This is not the retained earning in opening date. This is the retained earning on the date of acquisition only. Be carefully. Good question. And the shares in A Limited when the acquired on 30th June, when is retained earning is how much? 1,70,000. So of course this has been given for AOP. This has been given for AOP. Inventory of A Limited as on 31st March 2024 include inventory valued at 60,000 which had been purchased from H Limited. But the downstream, upstream? Down. It is down. So down means H has sold to whom? A. So but it will affect investment की stock. Investment. It will affect investment. So कहीं ना कहीं लिख दो this will be affecting investment account. So journal entries were retain earning account debit to investment. Retain earning account debit to investment. Understood? Have you understood? If it is upstream, then retain earning account debit to stock. Understood? Yes, sir. Trade payable of H Limited include 25,000 payable. Can I say bakwas? No cancellation required. No cancellation required. Chale. Goodwill in respect of acquisition of S Limited has been fully impaired. S Limited fully impaired. So first calculate, then impair. First calculate, then impair. The recoverable amount of investment in A Limited exceed the carrying amount of carrying. Means can I say investment recoverable amount is more than carrying amount. Means no impairment loss. No impair. Recoverable amount is more than carrying amount. No impairment loss. I said if impairment loss, then deduct. So here no impairment loss. NCI is valued by using Pasina method. Okay. 10% dividend was declared by both H Limited and S Limited, whereas A Limited declared 15% dividend for which year? 23-24. 23-24 is which year? Current year. Now here only lot of doubt came because of this point. I will explain why. Okay. Means this was totally a point in which a lot of doubt came. On 31st March 2004, S Limited made a bonus issue of 1 equity shares for every 2 shares held by shareholders of S Limited. So bonus share declared by S Limited. Okay? Dividend were declared but not accounted by all the 3 companies. Dividend were declared but were not accounted by all these companies in the books before they earned. Means what is language? Batao. Dividend declared, so earned or paid? Dividend if I am declaring it is paid or earned? Paid na. Dekho, English dekho. Dividend were declared, okay, but not recorded, okay, in the books before they earned. Means total confusion. They want to say about dividend receivable or dividend payable, and because of this, these 2 points, lot of doubt came. Understood? And though every student have done as per their choice. Okay. Similarly, bonus issued by S Limited were not reflected. Okay, means no journal entry done. So can you say ignore this or not? Totally delete this. Totally delete this. Because no journal entry has been done. No journal entry has been done. Totally ignore. Understood? Only I need to explain point number 5 and this. Now, because what is given, 10% dividend is declared for current year. Current year, but the current year dividend will be declared after balance sheet date or before balance sheet date. Means it can be interim, it can be final. If it is final, then after. So many students have taken assumption that this has been declared but after balance sheet date, before approval of financial statement, therefore no adjustment. And many students have ignored this because no adjustment, they are correct. The first assumption many students have taken what? This has been declared after balance sheet date but before approval of financial statement. Correct? First assumption was this. Those who have taken this assumption, can you say no dividend payable, no dividend receivable? So can you say ignore this transaction entirely? Question becomes super duper easy. Understood? Many students like me, when this question came, so what assumption I have taken? What I have taken? This is dividend declared but not paid. Dividend declared but not paid. This assumption I have taken. So which is also one assumption because it can be interim dividend. So it can be dividend declared but not paid because from the question it is understood declared. But they have not given when declared. And declared for the year they have given. So it is understood from the question dividend declared but not paid. Last fall adjustment. Last fall adjustment I said have been asked 2 times in exam. So this can be one assumption. Dividend declared but not paid. Dividend declared but not paid. Understood? Correct. And one more assumption has been taken, but I will say that is the bakwas assumption. They are saying ki, but let's see what ICA has taken assumption. They have taken for these actually means they have taken three assumption also. So I have deleted the third assumption wala point because from my point of view, no one will take that assumption that I have deleted. So they have also taken this two assumption only. Ignore the adjustment dividend completely as dividend has to be approved in the annual general meeting. And second assumption they have taken, consider dividend was declared but not paid. And third assumption what they have taken in the suggested solution, dividend declared but paid but not recorded. This is bakwas. This is bakwas na. Dividend declared and paid but not recorded. Are by payment done, so anyone will record. This is the bakwas na. If the payment done, of course you will do bank reconciliation statement. We record or not. So this is the totally bakwas. So I will say either these two assumptions will prevail. So most of the students have done this and their answer was correct. If the bonus year adjustment they have done correct. So bonus year also ignore, dividend also ignore. Question becomes super easy. Now you want me to take this assumption or this assumption? A or B? A to very easy, you can do by your own. If the exam now came A, तो you can do by your own na. Let us do B. थोड़ा interesting वाला करते हैं ना. Not able to. And suppose in the same question now given dividend declared and question में given dividend declared in current year but not paid. So A तो you can do na. If dividend declared, dividend not declared before balance sheet date, then तो you can do ignore it. Then no adjustment. But if dividend declared but not paid, then it become a good adjustment. Then what need to be done? So let us do by B. Suppose they ask B in exam, तो practice हो जाता ना. अरे बोलना रे. In exam you take A only. Same question in exam what you take? A. But यहाँ तो practice कर. Let us practice ना. Can we take B adjustment? Yes sir. Now let us do it. First we'll do subsidiary company. Don't think about associate right now. Don't think about associate. Subsidiary तो you can do. Can we start? One by one. बताओ. Question number, what question we are doing? 61. Now बताओ. Whether any fair value adjustment is there? Any fair value adjustment? You don't have the question. अरे कहीं question लो यार. How much time I will open? You should take print out now. There is no fair value adjustment. Okay. So no working note for fair value adjustment. Now we'll prepare AOP. AOP. So AOP में we have retained earning. Whether we have general reserve, check करो. Whether we have general reserve. So they have given only retained earning. So first we are doing only for subsidiary company. So closing balance what? 7,50,000. 7 lakh. So closing balance what? 7,50,000. Opening balance, but this opening balance they have given on the date of acquisition. They have given on the date of acquisition. So how much they have given? 5 lakh. They have given 5 lakh. They have given 5 lakh. Understood? चलेगा? Correct. Now बताओ, what is the profit? 2,50,000. And this will be entirely post acquisition profit? Correct. But now we'll do first adjustment. Any abnormal loss given? Bonus here given? Ignore. Okay. Any dividend? Yes. Now dividend declared but not paid. Let's see whether it is recorded or not recorded. Can you see if recorded? So dividend payable will come in the balance sheet. But dividend payable is not coming in the balance sheet. Means it is not recorded. So how will understand it is recorded or not recorded? If recorded, then dividend payable will come in balance sheet. But in any balance sheet, dividend payable is not coming, means it is not recorded. It means it is not recorded. So will you add back? No, because it is not recorded. It is not recorded, no add back. Understood? So abnormal loss, No. Dividend, yes, but not recorded. Bonus share, ignore. Any error is given? There is no error given. So but this is only the case, only this much. Now we'll find out pre and post. Can you say entirely it will be what? Entirely it will be post. How much? 2,50,000. And we'll add what? Opening balance will be entirely what? 5 lakh. Understood? Correct. Now can you say from this we'll do minus what? Dividend payable. Dividend payable. Dividend payable. Dividend payable subsidiary company, what is the rate of dividend? It is 10%. 10% of what? Capital. Capital is how much? 2 lakh. So capital is 2 lakh. So 10% of 2 lakh. How much it is coming? 20,000. Understood? Pre ki post? Pre ki post? Post only. Dividend payable will be always post. Understood? Correct. Any other adjustment? No other adjustment. So this is the final answer. This become what? 5 lakh and 2,30,000. This much you understood? This much you understood? Correct. Now, next working note is what? Sona. Let us prepare Sona. Sona. So what they have given? Date of acquisition, date of consolidation and post. Can you give me equity share capital? It is 2 lakh and 2 lakh. Then other equities how much? 5 lakh and 2,30,000. Total is what? 7,30,000. Whether it is equal to closing balance, check karo. No, it will not, because we have done dividend payable minus. So देखो total balance was 7,50,000, but now we have deducted it now because it was not recorded. So of course it is correct, only 7,30,000 will only come. So you can cross check. Yes, we are doing correct. Yes, sir. So it will become 7 lakh and 2,30,000, and this become 9,30,000. Now what is the? There is no fair value adjustment. Nothing is there. Can we move on? Yes, sir. Our ratio was 70 is to 30. Can you allocate? How much? 1 lakh? 61,000 and 69,000. Understood? Correct. This also done. Now let us come to working note number 3. What is goodwill or gain on bargain purchase? So what is the PC? PC given for 70%, how much? 5 lakh 60. 5,60,000. Then NCI by using which method? PC na? PC na? 30%. 30% of what? 30% of what? 30% of 7 lakh. 30% 7 lakh. Now this is 7 lakh. Date of acquisition. How much it is coming? Just don't write. If you are not able to say, stop me. Huh? Don't copy paste. In class, first time you are doing copy paste, but now you are not doing first time now. If you are not able to understand, stop me. Okay? Don't copy paste without understanding. If you understood, okay. So 30% of 7 lakh. How much? 2,10,000. Then minus INA how much? 7 lakh. But of goodwill or gain, means this ko plus karo. This is minus 70,000. Goodwill or gain? Goodwill. They said entire goodwill has been impaired. So this is partial goodwill or full goodwill? Partial. Minus what? Impairment loss. Entire has been impaired. So goodwill will come in the balance sheet how much? Nil. Balance sheet में nil. Understood? Correct? Can we move? Working note number 3 done. Now let us come to working note number 4. We'll say other equity and NCI. So we have retained earning and NCI. Can you give me opening balance? Means balance as per parent company balance sheet. Retained earning is coming how much? 9 lakh. So can we write down 9 lakh? Can we write down 9 lakh? 9 lakh. correct? And NCI will be how much? 2,10,000, correct? Can you give me plus sharing profit, post acquisition profit, how much? 1,61,000 and 69,000. Okay, sir. Now, any other adjustment? बोलो क्या क्या? You say what you are saying one by one. Impairment loss minus impairment loss from parent company, NCI की both. Only parent company, how much? 70,000 minus 7,000 minus. Any more? Nothing. Any error in the books of parent company? Yes. There was one dividend declared but not paid and not recorded. So dividend declared by all the companies. Okay, dividend is not recorded by parent company also. So we'll say minus dividend payable. Yes or no? So 10% of their capital, 10% of their capital how much? 10% of 5 lakh. So 10% of 5 lakh, how much? 50,000 will be deducted or not? This is an error. Error understood? 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 Correct. Now one point I have said, any dividend declared but not paid, whatever you have deducted, yahan se, it is having two parts, parent company and NCI. Parent company will be cancelled. Dividend payable and dividend receivable will cancel. Now just check whether dividend receivable has been recorded. Not recorded. So it means what will be the cancellation journal entry you say? Dividend payable account debit to retained earning. Very good. Excellent. Dividend payable to retained earning. So dividend payable to the extent of 70% will be cancelled and dividend receivable to the dividend receivable will be added to what? Retained earning. Very good. Excellent. So can you say return plus what? Dividend receivable. It will be how much? What was the amount? 20,000 ka? 20,000 ka? 70%. How much? 14,000 plus ki minus plus. But can I say you record it but then cancel, but it will not come in CBS because dividend payable to the extent of 70% and this receivable kata kata, it will not come in CBS. Understood? Understood? Any URP for parent subsidiary? No. Done. Subsidiary done. Understood? Now, can you say, but some adjustment will come for retained earning for associate also. Now you can't close it, to leave come se come 6 lines and go to what? Associate. Don't close it because associate some working will come na retained earning. So leave some line and come to what? Next working note? Associate. Equity method. Associate equity method. Can I say in this also? First, we should think about favorable adjustment not given. We'll prepare AOP analysis of profit. Correct. So retained earning is given. What is the closing balance? 4,24,000. 4,24,000. What is the opening balance? But this is also given on the date of acquisition. How much? 1,75,000. How much? 2,49,000. Correct. Understood? Now you will say, any abnormal loss? Any bonus here to not given for this? Will never be given. Any dividend paid? Dividend declared but not paid. So dividend declared but not paid. Whether recorded? So will you add back? Will not add back. So no add back is required because it is not recorded. If recorded, then add back. So okay, this is only the case. So we'll now allocate in pre and so entire is what? Entire is post. So 2,49,000 will be entirely post. Allocated profit and opening balance will come in pre. Opening balance will come in pre. Understood? Then dividend declared but not paid, whether we will minus. We should minus, but I have given one special note. One is attention कि share in URP means URP and dividend paid and payable don't deduct from here. That was one special point. That much you need to keep in your mind. So I will say don't do adjustment. You can write down this become what? 1,75,000 and this become 2,49,000. Understood? Chalega? Understood? Can we move? Okay. Then next working note is what? Can you say calculation of goodwill or gain? Calculation of goodwill or gain? Sona will not prepare. Time wastage. Sona don't prepare. Okay. What is the cost price of investment? For how much percentage? How much? 1 lakh. Now we'll minus fair value of INA. How much percentage? 40%. But what is the total equity share capital of associate? 1 lakh. And what is the pre-acquisition profit? Already we calculated 1,75,000. So what is the total INA? 2,75,000 into 40% how much? 1,10,000. But the goodwill or gain? Gain will be transferred to capital reserve. So gain is 10,000. Gain is 10,000. Understood? Are you able to understand? Correct. Now, next working note, we'll find out value of investment. Value of investment as per equity method. As per equity method. This will come in the balance sheet. But what is the cost price of investment? 1 lakh. In this, what will add? Gain. Gain will add. You can add on capital reserve also 10,000. So total become 1,10,000. Correct. Can you say in this will add plus share in post acquisition profit? Share in post profit. What was the post profit? 2,49,000. 2,49,000 का 40% how much? 99,600. Okay. Then minus, there is one dividend receivable which is not yet recorded. So what journal entry will do? Dividend receivable to investment. The dividend receivable come in balance sheet and investment will be reduced. Dividend receivable to investment. Understood? So what amount, how much they have paid? What is the associate has declared how much? 15% of how much? Their capital 1 lakh. Into what? 40%. Into 40% na? Into 40%. So 6,000 is the dividend receivable. Double effect we need to give. First we'll do and second effect we'll think after that. This is plus ki minus? Minus. Any URP is there downstream? Yes, URP is there. So minus URP, unrealized profit. Let us calculate URP. How much given? They have given inventory includes 60,000 and they have earned a profit. H Limited has earned a profit of cost plus 20%. So cost plus 20%, but is the sale price of H Limited. So we'll do 20 by 120. 20 by 120. This to you know na 20 by 120. 20 by 120. So 60,000 into 20 by 120 how much? So 60,000 into 20 by 120 how much? 10,000 into what? 40%. We'll eliminate 40%. How much? How much? 4,000. 4,000 plus ki minus? Minus. Done. All point done. But this is coming how much? Are you able to follow me? 1,99,600. Okay. This will come in CBS. Now double effect. But this will go to what? Capital reserve in CBS. This will go to what? Retained earning. Okay, this will come to CBS, dividend receivable, and this will go to what? Retained earning. Yes or no? So there are two adjustment retained earning. Can we do? So this will be added in retained earning and this will be deducted from retained earning. Have you understood this point? So write down in retained earning. Batao. Plus sharing profit of associate, how much? 99,600 minus URP, how much? 4,000. How much is the total retained earning? Can you give me? $10 lakh. And how much NCI? 2,79,000. Correct. Now we can prepare CBS. Can we prepare CBS fast? Whatever I will say, that you will give me. Plus, whatever. Correct. We'll start with PP now. So can you say for PP, this will come, but this will not come. So give me only book value plus book value. This is nil. Okay. So how much? Any fair value adjustment is there? 10 lakh 30. PP done. Then goodwill is there. But it become 0. Goodwill was there, but it become 0. Then what? Investment will come. Investment in associate will come as per working note. How much? 1,99,600. Then what is there? Inventory. Can you give me book value plus book value? There is no URP. There was one downstream URP, but that was deducted from investment. Correct? So no URP cancellation. How much? 865, 867, 500. 867, 500. Understood? चलेगा. उसके बाद what? Cash and cash equivalent. 1,78,000. Then trade receivable. $7 lakh. There is no intercompany balance cancellation. There was one cancellation for associate, but that will not be cancelled. But for parent company subsidiary, they have not given, no cancellation. Any more item? One more will come, dividend receivable. Dividend receivable will come now. We have done one else. This is not correct. 1,80,000. This calculation mistake don't do, huh? Calculation mistake is the worst mistake we do. Okay. Can a dividend receivable come? One we have recorded now. What we have recorded? This 6,000. This will come or not? As dividend receivable 6,000? No. That dividend receivable has been cancelled. This is not cancelled. This was cancelled or not? This 14,000 was cancelled. Are बोलना रे? But this is not cancelled. So this dividend receivable will come or not? 6,000 will come. 6,000 will come. Total is what? One minute. I'll come to your doubt. I will forget the flow. How much? 90,100. Okay. Equity share capital how much? 5 lakh. Can I say under other equity, retained earning will come how much? As per working note. So it is 10 lakh 10,50,600. 10,50,600. And NCI will come how much? 2,79,000. Then what? There is one capital reserve also. Acha, I miss. Capital reserve how much? 10,000. Very good. Then liability give. Batao. Item. Long term borrowing. How much? 5,50,000. Associate you have not added na. Okay. Then trade payable how much? 5,44,500. Then what? This much. This much only. Then can is one dividend payable will come. Dividend payable. Sunna. One is payable by parent company. How much? Payable by parent company. How much? And one is payable by subsidiary, but to the extent of NCI share. Holding share to cancelled nonetheless. Only to the extent of NCI. How much? 6,000 plus 6,000. How much it is coming? And you can see balance will tally. Check kar lo. Balance will tally. Tallied. Understood? Have you understood this? Intensely I have taken dividend declared but not paid to inform you that adjustment. However, you can ignore also in the same question. Then it becomes super easy. Only the question was complicated because of dividend declared but not paid. Yes or no? If suppose you would have taken first assumption, then the question is lollipop na. Are bol de yes or no? So in exam, if same question came, then take that assumption. But suppose in the same question now they write dividend declared but not paid, then you can't take assumption na. So I have just to have done that adjustment to inform you dividend declared but not paid, because they have asked in this attempt, then last attempt also they have asked this dividend declared but not paid. So it can be now asked in any attempt. Are you getting what I am saying? So you should know what is dividend declared but not paid. Got this point? So with this, our associate also completed. Associate also completed. Means more or less I have done everything. Now, if you want, I will take one question, otherwise leave it. If you want. Means I have done my job. I have done my job for consolidation. Last attempt question now you can do by your own. Believe me, laugh, if you have understood dividend declared but not paid, so in that it was recorded. If you have understood, you can do by your own. Last attempt question. So I will say, I will not do, you only do. So in that question it was dividend declared but not paid but recorded. So now you can do now. And believe me, you can do it. If you have understood. Correct? One question, good question, we have a step acquisition, but I think now you can manage that step acquisition wala question. If you want, I will do it. Okay, sir. Can we conclude this chapter? Revision बहुत हो गया. For morning we are doing this only. बोलो. So we'll start CR based payment. Done na? You want one more question? Yes या no? कुछ नहीं. बोलो, if you want, I will do. Yes, one more question. Only for practice. Chalo, we'll take that step acquisition wala question also. That is also good question. Can we take? Okay. So we'll take a step acquisition wala question also. That is also good. This was the question. 27. The extract of balance sheet. Now, I will not explain anything. You need to understand by your own. After this, I said after consolidation. Okay. After this, you again remind me. The extract of balance sheet of Hamel Limited and its subsidiary Silk Limited as on 31st March 2023. Okay. I will only read. You need to understand the entire question by your own. PP, intangible asset, investment, inventory, trade receivable, cash and cash equivalent, equity share capital, other equity. Okay. The notes to account they have given in PP, plant and machinery, furniture and fitting. Intangible asset, goodwill is given where? Subsidiary company. Understood that adjustment? So whenever you are preparing Sona, deduct goodwill from that Sona also. You remember that adjustment? This was one new point in this question. Okay. Then they have given general reserve, retained earning, borrowing 8% debenture. Additional information. Hamel Limited acquired 20,000 equity shares of Silk Limited on 1st April 2022. The cost of rupees 2,40,000 and further acquired 17,500 equity shares on 1st October 2022 at a cost of 1,90,500. Okay. Means step acquisition. It is a question of step acquisition. 2 times they have acquired now. The 8% debenture Silk Limited include debenture held by Hamel Limited of nominal value of 35,000. Means out of this, how much nominal value H Limited has purchased? 35,000, and this was purchased at a cost of what? 84,000. So this 84,000 will be included in investment. Means this investment is inclusive of what? 84,000. So batao, what will be transferred to consolidated retained earning? We'll cancel it. Cancellation. So how much will be transferred to consolidated retained earning? How much? Means 84 minus 35. Very good. How much? 49,000. Correct. So this will be transferred to what? Consolidated earning. Can I say out of this 35,000 deducted, and out of this investment 84,000 will be deducted. Understood? That will be cancelled. That will be cancelled. Understood? One thing is clear that this investment include other investment also. It means PC we need to find out. PC we need to find out. However, PC is given only. You can see they have given this is the cost price and this is the cost price. That is given also. The retained earning had a credit balance of 75,000 on 1st April 2022. On that date, balance of general reserve is 50,000. So they have given the retained earning opening balance and general reserve opening balance. Silk Limited paid 10% dividend on his paid up equity share capital out of balance of retained earning on 1st April 2022 for the financial year 2021-22. Means for previous year, the entire dividend received was credited to SOPL. Okay. As per the resolution dated, okay, Silk Limited allocated bonus shares at a rate of 1 equity share for every 10 shares held out of general reserve. The accounting effect has not been given. Ignore. I said that 2 times it has been asked. Ignore it. Understood? So 2 times they have asked bonus share, no journal entry. Now I am expecting bonus share with journal entry. Already I have explained. Now you can't say out of book, huh? Okay? Because no question in ICS study matter here. Got this point? Trade receivable of Hamel Limited include BR of 2 lakh drawn upon Silk. Out of this 50,000 has been discounted. But how much we can cancel? 1,50,000. Very good. During the financial year, H Limited purchased goods from Silk Limited of rupees 25,000 as a sales of 30,000. 40% of these goods remain unsold. But our downstream, upstream? Upstream. So retained earning की AOP? Retained earning की AOP? AOP. It will be affected in AOP. Understood? That should clear. कि AOP में we need to do adjustment of unrealized profit. Correct? What is the amount of unrealized profit? What is the total profit? 5,000 into 40%. 2,000. 2,000 is the URP. 2,000 is the URP. On 1st October, machinery of 3 kilometers was overvalued by 20,000. Now over here now most of the students have done wrong. English is a funny language, but it is given on 1st October machinery was overvalued by 20,000. It is a gain or loss? There is gain or loss? Everyone respond, Baba. Now I am listening loss, but 2 or 3 people have said gain or loss. Everyone is, you are saying loss because someone is saying loss. Overvalued by 20,000, gain or loss? How many are saying loss? How many are saying gain? So gain is not correct. Overvalued, machinery is overvalued. It means we'll decrease it now. It is overvalued by 20,000. So it means we'll decrease it or we'll increase it? We'll decrease it. So decrease means what? Loss. So it is a fair value loss, and fair value loss is given. Correct. Depreciation charge is 10% per annum. But SLM ki RBM? Can you apply RBM in this case? You can't apply RBM because fair value gain or loss is given. Fair value gain or loss is given. So in this always what? SLM. This only point I have said today. Today I have said. How can you apply RBM, Baba? Whether fair value given, whether book value given, if not given, can you apply? So only SLM. Today only we discuss. Then also Hawa. It means reading is required. Reading is required. The parent company, they have adopted what? What they have given? Fair value method. So fair value method they have adopted for NCI. And for that purpose, what is the fair value of equity shares? 11 rupees. 11 rupees on the date of control was obtained. This is the entire question. Correct? Now first, can you give me, this is 20,000 equity shares out of how many equity shares? 50,000. Jana entry of bonus share done or not done? Therefore easy. If done, then become difficult. Understood now? The bonus share journey done, then first we should calculate what? Before bonus shares, and then calculate our holding ratio. If Jana entry not done, super easy. Correct? Yes, sir. So batao, 20,000 divided by 50,000, how many shares? How much percentage? 40%. And 70,500 divided by 50,000, how much? Use calculator, Ray. Huh? 35% na? 35 na? 25? Why you are so confused? Why you are so confused? I am not able to understand. 35%. Why you are confused? So that is 75%. So say 75%. But say alag-alag, huh? Alag-alag. Separate. So this is 40% initially, then what? 35%. Total become what? 75%. What is NCI? 25%. Understood? Chalega? Yes, sir. Now can we do it? Can we do it? Bata. First is working note number 1. Any fair value adjustment is given? Yes, we can say fair value. What is the fair value loss given? Fair value loss given how much? For PP na, for property, plant and equipment. Can you say in this we'll do saving in depreciation? So saving in depreciation how much? 20,000 ka? 20,000 ka? 10%. For how many months? Means what is your date of acquisition? 110. Very good. 110/2022 is the date of acquisition. So how many months? 6 months. So into 6 by 12. Very good. Into 6 by 12. How much? 1,000. So but what is the net decrease? 19,000 is the net decrease. This is net loss. Understood? Correct. Working note number 2, what you will do? AOP. AOP we have retained earning and general reserve. Can you give me the closing balance from the balance sheet? The closing balance give how much? Means 2,50,000 and 2,50,000 and 1,25,000. I have written first retained earning. 2,50,000 and 1,25,000. Okay. Then opening balance how much? 75 retained earning. 75,000 and 50,000. Correct. What is the profit? 1,75,000 and 75,000. Now think about adjustment. Okay. Any abnormal loss? Any dividend paid? Any dividend paid? Yes. This much time you are taking. Yes, na? Yes. Any bonus share? Ignore. Any error? Any error? No error. There is no error. तो बताओ. Plus final dividend paid how much? 10%. 10%. So 10% of what? 5 lakh. How much? 50,000. Correct? No other adjustment is there. So how much it is coming? 2,25,000. 75,000. Understood? Now we'll say pre and post. What is time ratio? 1:1 means 6 months is to 6 months. Correct? So can you do allocation? Allocated profit. Batao. Can you allocate? It is 1,12,500 and 1,12,500. And general reserve how much? 37,500 and 37,500. Then opening balance. What is the opening balance? 75 plus 50. How much? 1,25,000. 1,25,000. Are you able to understand? Correct. Then minus final dividend paid from where? Now here only doubt will come. What happened? You can see whether date of payment is given. Check karo. Date of payment is not given. Date of payment is not given. When I made my first solution, when ICA solution not came, so I have assumed, means what I have assumed, let me say, means this is the two date now. They have acquired first on 1/4 and 1/10 and this is 31st March. They have acquired 40% यहाँ पर, 35% यहाँ पर. So when I made solution, so I have assumed that this is paid after acquisition. And normally ICA was assuming that only. But in this question, ICA have assumed that this was paid what? In between these two dates. Means before date of acquisition. For the first time they have assumed this type of what? Assumption. I don't know why. So what will be our general conclusion? Whenever step acquisition and for dividend paid question is silent, we'll assume dividend has been paid before between these two dates. What can we do, Ray? Follow ICA solution. Follow ICA solution. Acha hai, one question will do like this also. So here dividend is paid before the date of acquisition. Before the date of acquisition. This assumption we are taking as per ICA solution. So batao, if this is the case, we'll minus from where? Pre. Very good. So we'll minus entirely from pre. Excellent. Okay. Then there is one unrealized profit. You said AOP na? So what was the amount? Minus URP how much? 2,000. Deduct from post acquisition profit. If you forget yahan par, most of the time you will forget, I know. Then do what? Retain earning and NCI. Means if you forget यहाँ पर, then I said what is journal entry? Retained earning account debit, NCI account debit is stock. Then in the last work, deduct retained earning and NCI with the respective share. But ICI is doing like this. So let us do like this. But in exam, most of the time you will forget, I know. 90% student will forget. Understood? Nothing to worry. Forget. We'll do at the end. Okay, sir? Yes, sir. But how much? 2,25,000. Then 1,10,500. Then 37,500. Okay, sir. Done. Now we'll prepare working note number. Whatever. Sona. We write down date of acquisition, date of consolidation, post. Post में what we write down? Retained earning and general reserve. But what is equity share capital? 5 lakh and 5 lakh. Now can you give me other equity? 2,25,000, 1,10,500, 37,500. What is the total? Four lakh 85,500. Check करो whether it is equal to closing balance. Three lakh 73,000. Whether it is equal to closing balance. Achha, this total is coming what? 3,73,000 na? Now whether it is equal to closing balance. Minus 2,000 URP match. Minus 2,000 URP match 1. Means we are doing correct. Okay, sir. Means always cross check. If some plus minus mistake, so you will identify yahin par. Now this is the total how much? 7,25,000. 1,10,500. 37,500. This is what? 8,73,000. Now batao. Okay, this become total asset minus total liability. This total asset will include goodwill or not? But we want INA including or excluding goodwill. So minus what? Goodwill appearing in the balance sheet of subsidiary company. However, ICS solution, whatever is given, totally wrong. Means they have done bakwas. And bakwas means bakwas. That is totally bakwas. So I am just explaining, whatever I am explaining, your all question can be done correctly. So you follow my method only. Don't compare with ICS solution. Correct? And I am saying correct only na. Are बोलना रे. So how much goodwill given? So 75,000 from date of acquisition and 75,000 from date of consolidation. Can you give what? 6,50,000 and 1,10,500. 37,500. This minus this. 7,98,000. Can you see? Then we'll do plus minus fair value adjustment. Plus minus fair value adjustment. So 20,000 loss was there. And what was the saving in depreciation? 1,000. That will be plus na. So 90,000 minus this become your final answer. Final answer. How much? 6 lakh? 30,000. 1 lakh? 11,500. 37,500. 7,75,000. Can you allocate this in which ratio? 75% and 25%. Allocate. 79,000. Okay, sir. But can you allocate these and these in 75 and 25? 82, 125. Correct? Then you throw your calculator. Otherwise, I will throw you outside the class. Many times you are doing calculation mistake. I don't like this type of mistake. You do conceptual mistake, we don't know. Chalega. But this is calculation mistake, nalayak. Bata. How much? 86. 20. 875. Don't feel bad, huh? Don't feel bad, huh? Okay. 37,500. This much right to I have now. 37,500 into 70. 28,000. Then everyone say, how can I listen? I have 2 years only. Okay. Okay. Done. चलो उसके बाद what will do? बोलो. Goodwill or can you say working note remains same? Every question same working note we are doing. Only adjustment is changing. Working note remains same na? Yes sir. Now here be careful. PC first for 35%. How much? This is given in the first para, first line. 2,40,000. %, they have purchased for 1,92,500. I said, first give me PC for 35%. So PC for 35% is what? 1,92,500. Means this was the amount paid on the date of acquisition. 1,92,500. Correct? Now listen carefully, everyone. Okay? Now NCI will come. And fair value of previously held equity interest will come. This is 40%. This is 25%. Correct? But the fair value of previously held equity interest will come in carrying amount or fair value? Fair value. Correct? So this is what carrying amount. This is carrying amount, not 2,40,000 is carrying amount. We want fair value. So how many shares they have acquired? 20,000. What is the fair value? That is given at the end. 20,000 into 11 na? 11. How much? 2,20,000 is the fair value of previously held equity interest. Correct? And NCI, they have said Pasina method or fair value method? Fair value method. They have given fair value method. So 25%, how many shares? 50,000 into 25%. 50,000 into 25. 12,500 into what? 11. How much? 1,37,500. Understood? Have you understood? This total is what? 5,50,000 minus what? Fair value of INA. INA is what? 6 lakh? 6,30,000. So what is the gain? Gain on bargain purchase? 80,000. It will come in the balance sheet as capital reserve. Done. Done. Understood? Okay. Now because we have applied step acquisition, so we need to find a remeasurement gain and loss also. So बताओ, next working note. What is the fair value of previously held equity interest? And what is the carrying amount? 2,40,000. So how much loss? This 20,000 will be also transferred to consolidated retained earning. This will be also transferred to retained earning. This point have you understood? This is the fair value of previously held equity interest. And what is the carrying amount? At what amount you have purchased? At what amount you have purchased? 2,40,000. This become remeasurement gain or loss. Remeasurement gain or loss. Have you understood this point? This was a new point in this. Means this calculation was the new point in this. Other point all remains same. The last working note, other equity and NCI. So we have retained earning, general reserve, NCI. First, can you give me balance? Retained earning 3,50,000. General reserve, NCI 1,37,500. Then we'll add plus sharing profit. Sharing profit as per Sona. So this is 83,625. 83,625. Then general reserve how much? 28,125. 28,125. Then NCI, can you give me this total? 37,000. 37,250. Done. I'm coming. Minus remeasurement loss. How much? 20,000. Any other? URP to we have done from AOP now. How many times you will do? Any other? What? This dividend paid. It's not dividend declared but not paid. No. Debenture, very good. Achha, you are saying about debenture. You are saying about debenture. Trade receivable, what adjustment is there? Bills receivable is there. BR is there. Okay, we'll do that, but that will do in CBS, not directly. Intercompany balance will be cancelled in CBS, not here. Very good. There is one loss on cancellation of debenture. Loss on cancellation of debenture. Already we calculated how much? 49,000. I think done. I think this much only. I think done. Bolo. Can you give me this? Three lakh. Just check now in solution this is correct or not. Means in other equity this amount will come with capital reserve is of the. Achha, don't. This is correct. Match. Chalo. Now, can you say balance sheet too you can prepare? Only I will explain balance sheet. Suno. Can you say this PP you can add down? Just check book value plus book value minus adjustment. Minus 19,000. This will be correct. Now intangible asset I will explain at the end. At the end. Investment, can you say other investment will come? So what you will do investment, check karo. Everyone. Investment they have given 6,25,000 minus 84,000 minus 2 investment done minus this 2 minus 2,40,000 minus 1,92,500 and plus will do what? 1,25,000. So how much it is coming? 2 lakh 33,000. This also tallied. Inventory में will do book value minus URP will do. Just do check करो. Book value minus URP minus 2,000. Check it. Book value plus book value minus URP. Done. Then trade receivable will be including bills receivable. So book value plus book value minus how much? 1,50,000. That will come. Cash and cash, book value plus book value, and this will tally. Equity से capital only 10 lakh will come. Other equity I will explain at the end. NCR देखो check करो is tallied or not. NCR our working not tallied. Borrowing will be only one debenture is there, 1 lakh minus 35,000 will come, minus 35. Bank overdraft book value plus book value. Trade payable will be book value plus book value minus 1,50,000. Now, what they have done for intangible assets, Sunna. Everyone, as per our working note, capital reserve is what? 80,000. But what they have done? 75,000 is the goodwill. 75,000 is goodwill. Okay? And they have calculated capital reserve, how much check karo. Their capital reserve is coming how much? How much it is coming? 1,55,000. So what they have done? They have done wrong. Means they have shown this goodwill separately and 1,50,000 capital reserve separately. But ultimately this is how much? You only say whether goodwill of subsidiary and capital reserve of subsidiary will be shown separately. It is 100% wrong. Either goodwill will come or capital reserve will come. Both cannot come. Have you seen any time? This is the bakwas. They don't know anything. Correct? Now, this is totally bakwas. I will say they will correct it someday. They will only correct it. This is totally wrong. I can't teach you wrong now. 100% wrong. So I will say do as per our solution only. Next time in exam any question come to follow this only, it will be 100% correct. So this mistake they have done, and because of that reason our goodwill and other equity is not matching with that. If you follow my answer, balance sheet will tally. It means we are doing correct. Understood? So I have shown you what mistake ICI has done, which is absolutely wrong. In other question they will correct it. In other question they will correct it. Understood? With this, I have think that step acquisition ka also one question we have done. So all varieties of question we have done. All good questions we have done in the class. Now my job done. Consolidation chapter is completed. We'll take 10-minute break. After that one measurement period wala concept will do, and then we'll start what? Share based payment. Okay? Today I will teach you up to 6:30. 6:30 और थोड़ा सा extend to 7 also. Okay? ठीक है. 10-minute break. Now, chalo. Can we start? Chalo, first we'll take India's 102. Okay, let us finish it. It will not take much time because share-based payment, I think you all are comfortable. This is not a chapter in which more revision required. Once again, you need to avoid calculation mistake in exam. And sometimes what happens, we sometimes don't understand the information given in the question. We don't understand the information. I will just highlight the point where you can do mistake. And highlight the point where you can do mistake. Okay, sir? Okay, sir? Now, can you see when I am saying share-based payment, there can be three category of question. One is equity settled share-based payment, one is cash settled share-based payment, and one is SBP with cash alternative. Means any type of question can be asked. There is no such key it is important, not important. Let's close this. Understood? So all categories are important. Any type of question can be asked. When I say equity settle, so we open SBP reserve account. When I cash settle, so we open SBP liability account. Your cash settlement means there is an obligation to pay, so we will open SBP liability account. Whenever SBP with cash alternative, so actually it is just like a compound financial instrument. So compound financial instrument will recognize maximum liability and minimum equity. So in this we open both SBP liability and SBP reserve account. Correct? Now when I am saying equity settled, so on grant day will not pass any journal entry. On grant day no journal entry. Then can I say during the vesting period, we recognize EB expense based on the fair value of option on grant day. Based on the fair value of option on grant day. Correct? Means for equity settle, any fair value of option given subsequently is not relevant. Fair value of option on grant day is relevant. Fair value of option given subsequently at each reporting date is not at all relevant. Means can you say whatever SBP reserve you are creating, that should be based on the fair value of option grant date, and that subsequent measurement of equity is not allowed, and therefore it will not be reassessed. It will not be reassessed. So what journal entry will do? EB expense account debit to SBP reserve. At the end of each year during vesting period, EB expense will be transferred to profit and loss account. Then can you say on exercise day, we will pass the journal entry on exercise. So on exercise money will be received. Exercise money will be received. So what journal entry will do? Bank account debit with exercise money. SBP reserve account debit with the fair value option to equity share capital to bank. So when compound journal entry will pass, this is the compound journal entry. SBP reserve account debit, bank account debit to equity share capital, and balancing figure will be always securities premium. Correct? And then whatever option remain unexercised, during exercise period, that will be cancelled by transfer to retained earning. So what journal entry will do? SBP reserve account debit to retained earning. So can I say very easy, super, nothing to explain much in this. Correct? And I think all the question of this nature you can do it by your own. No explanation required. No explanation required. Only one point which I like to say, like to inform you. Suppose they have given like this the information. This is the vesting period and this is the exercise period. Okay? Understood? Correct. And they have given 500 employee and they have given कि 50 employee has left यहाँ पर, and they have given at this point of time कि 10% employee may leave, 10% employee may leave in the remaining 2 year. Then यहाँ पर again 20 employee left, and then they have said 5% employee may leave in the 3rd year. Then again 10 employee left. So what is the actual number of employee यहाँ पे? 500 minus 50 minus 20 minus 10. How much? 480 employee. So can you say first we need to find out what is the expected number of employee, which is 420. 420. So can you say we need to find this is the actual number of employee who vested the option. This become actual number of employee who vested option. But can you say we need to also find out what is the number of employee who may vest the option on vesting day. So what we'll do? 500 minus 50 into what? Into 90%, into 90%, into 90%, 90%, because 10% employee will leave यहाँ पर and 10% employee may leave यहाँ पर. Understood? 10% employee will leave यहाँ पर and 10% employee will leave यहाँ पर, because this is 10% per annum. 10% per annum. I have not said this is annual departure rate. This is annual departure rate. So we can find out like this. In the second year, how we'll calculate? 500 minus 50 minus 20 into what? Now we are expecting 5%. So we'll do into 95%. Into 95%. So be careful about this calculation. Be careful about this calculation. Correct? And we'll do estimation based on the fair value of option. Fair value of option on grant day. Fair value of option on grant day. Correct? Understood? Can you say exercise money will be also given? Exercise money will be also given at the beginning of the contract only. Exercise money will be given. Now in one of the question what they have given? They have given fair value of share and they have given fair value of option. And the student got confused. I think last attempt only. Fair value of shares and fair value of option. Batao, for calculation we want fair value of share or fair value of option. Option. So again, this information is not at all relevant. Just try to understand, whenever exercise price is 0, then fair value of share and fair value of option will be same. So when exercise price 0, then fair value of shares and fair value of options are same. But exercise price is given, so fair value of share and fair value of option will be different. So here we do calculation based on fair value of option, not fair value of share. So can you say we do one working will do, कि they will give year 1, year 2, year 3. So first we'll do working, then first we'll find out cumulative expense and then we'll find expense. Suppose in this example, suppose this is what? Fair value of option is suppose 30. So what we'll do? What is this number of employee? 500 employee, and suppose each employee is entitled to 100 option. Each employee is entitled to 100 option. This is the number of employee. This is the number of option per employee. So this is how many employee? 365. This is how many employee? 409. But the first year what will be our working? 365 into how many option per employee? 100. What is the fair value option? 30. Into what will do? 1 by 3. 1 by 3 will do. So this become our cumulative expense. Cumulative expense how much? How much? 3,65,000. And this will be the expense of the first year. Correct. Second year will take 409 employee into what? 100 into what? 30 into what? 2 by 3. Correct. How much? 8,80,000. Then expense will be what? This minus 1,80,000. Not able to answer. Eight lakh 18,000 minus what? 3,65,000. It become 4,53,000. Last year will take actual. So actual is what? 420 into 100 into 30 into 3 by 3. How much? 60. Minus what? 8,18,000. So this become expense of first year, expense of second year, expense of third year. Correct? Journal entry we can do. Now it is quite possible they have given out of 420, 400 employee exercise and 20 employees nalayak. They have not exercised. So we'll do exercise journal entry for this and cancellation journal entry for this. That you are expert, you can do it. Now one question I am expecting that I will like to take. Can I take that question? Can I take that question? This question I am expecting. This question I am expecting. Have you done this question? When there will be one group, there will be in one plan there will be 3 group. This type of question you have done. The following particulars in respect of stock option granted by company are available. Number of employees covered how much? 400. Number of option per employee 60. Nominal value per share 100. Exercise per share 125. Share offered were put in 3 group. Group 1 20%. 20% 60 how much? 20% 60. So in group 1 we have 12 shares. 12 shares offered with a vesting period of 1 year. So group 1 consists of 20% 60 means 12 shares. Vesting period is what? 1 year. Group 2 consists of 40%. 40% again what? How many shares? 24. For which the vesting period is what? 2 years. Group 3 consists of what? 40%. Once again 40% means what? 24. And the vesting period is what? 3 years. Fair value of option per share on grant date is what? 10, 12.5 and 14 for respective group. So 10 is for group 1, 12.5 is for group 2 and 14 is for group 2. Have you done this type of question? This question I am expecting this time. Because it is given in RTP, after that not yet asked. So I am expecting this question. Correct? Means this question will be totally new if they ask. Okay? Then they have position of first year. Number of employee left how much? 40. Estimate of employee to live in second year how much? 36. Estimate of employee to live in third year how much? 34. Employee exercising the option in group 1 is what? 350. This is the first year information. So can you say when you are in first year, you should think about only first year because this information is not known to you. Correct? Understood. Let me do first year. Correct. So what is the information given? 3-year vesting period. 3-year vesting period. And the plan has been divided into 3 group. 3 group. The first is 12, 24, 24. Vesting is 1, 2 and 3. And their fair value is 10, 12.5 and 14. Now first year how many employees left? Out of how many employees? Total number of employees how much? 400. How many employees left in first year? How many employees left in second? Will be left in second year? How many employees will leave in third year? Okay, this is the mere expectation. Now can you say group 1 plan? For group 1 plan will be vested in first year only. So how many employees perform the condition? 360 employees perform the condition. This become vested number of employee. This much employee vested the option. But how many employee exercise the option? 350 employee exercise the option. Understood? This is for which plan? Group 1. Then they are given some information for second year. How many employees then again left actually? 35 they have actually left. Now how many employees expected to live in third year? How much? 30. Correct? Year 3 how much? 30 na? 30. Now you only say how many employees for group 2, how many employees perform the condition? 400 minus 40 minus 35 how much? 325. But how many employees exercise the option? 319. 319 exercise the option, it is given. 319 employee exercise the option. Last, how many employees left in third year? 28. Understood? Now what is the actual number of employee? How many employee actually vested third plan, third group? This minus this, this minus this, minus this. 297. How many employee actually exercise? 295. This is the question. Question you understood? Now calculation of what? EB expense. Calculation of EB expense. Correct. So we'll say year, working, cumulative expense, expense. So can I say we'll do for group 1, this year is year 1, group 1, group 2, group 3. Now group 1, how many employee vested? Can I say it is 400 minus 40 only? We'll take 400 minus 40 na? How many employee? 360. What is the option per employee? Option per employee 12. What is the fair value per option? 10. Can you see this will be 1 by 1 because this is only 1 year, so 1 by 1. What is the amount? 43 200. 43 200. 43 200. Okay, this will be 43 200. Then group 2, how many employee is expected to vest? So 400 minus 40 minus 36. 400 minus 40 minus 36 na. Don't take this information. Right now we don't know about this information na. This information is not relevant. So 400 minus 40 minus 36 how much? 324. Now what is the number of option in group 2? 24. What is the fair value? 12.5 into what? 1 by 2. 1 by 2, vesting period is 2. What is the amount coming? 48,600. So this will be also 48,600. Now group 3, but how many employee expected to vest? 400 minus 40 minus 36 minus 34. Minus 34, how much? 290. 290. What is the number of option? What is the fair value? Into what? 1 by 3. 1 by 3. Understood? How much? 32,480. How much? 32,480. Can you say the total you can find out because you have calculator? 1. Can you say 1 year I have done, second year, third year you can do whenever you are free? Yes or no? But in second year, batao, can you say group 1 will not come? Only group 2 and group 3 will come. And in third year only group 3 will come. Correct? Can I only explain the ledger account for first year? But the SBP reserve account will open. SBP reserve account. Now, on 31st March, by EB expense we write down. EB expense will be how much? Achha, they have asked journal entry or account? They have asked account. I am drawing account, okay? Because in exam they will ask account only. Okay? So by EB expense of first year is what? 1,24,280. Now can you say in the first year for group 1 vesting day and exercise they are same. It means we need to exercise also on the same date. So we write down on 31st March by bank. By bank. But how many employee exercise? Huh? 350. 350, very good. Means how many vested? How many employee vested? 360. But how many employee exercise? 350. So we'll say 350 into number of option 12. And what is the exercise price given in the question? What is the exercise price? Exercise price is 125 per share. So this much amount will be received. 125 is the exercise money into 125. How much? 5,25,000. Can you say on 31st March we write down 2 equity share capital? at nominal value, it will be 350 into 12. What is the nominal value? 100. It is given. Nominal value is 100. Check karo 100. How much it is coming? How much? 4 lakh. 4 lakh 20. 4 lakh 20,000. Now 31st March, we are on 2 securities premium. 1 lakh. How you have calculated? Balancing figure. 350 into 12 into 25. Everyone done this only? Into 15. 15 is what? You are saying into 15. That is also not correct. 25 is also not correct. Here most of the student will do mistake. So I am here to explain that only. But you should thank you to me, na. Means I know where you can do mistake. Means I know the nervous system of student. Means I know where you can do mistake. Therefore I am asking question. First of all, don't be in hurry. Think. But this is to exercise price, nalayak. Your what? Fair value is what? 10. Exercise price what? 125. What is the total value? 135 minus what? 100. So premium is what? 35. Premium is 35. Always student will do mistake, and therefore I have taken this question. If they are journal entry now, you will never do mistake, because journal entry balancing figure will come. Journal entry में you will never do mistake, because journal entry में balancing figure will come, but here you will do mistake, correct? And therefore I have done ledger account, because in this question they have also asked ledger account. In question they may ask ledger account. So this will be 35. How much? First 1,26,000. 1,47,000. Correct. Then can I say 10 employer nalayak? They have not exercised the option, so their amount will be transferred to retained earning. So how many employed? 10 into 12 into what? 10. This will be 1,200. And can I say balance carried down will be carry forward? So 2 balance carried down. This will be what amount? Check karo. Balancing figure. How much? 81,080. You can cross check this amount from these two amounts. Check karo. It is coming how much? So it means we are doing 100% correct. Second year, third year you can do by your own. Solution is there. Expected question from my point of view. I am expecting from last 3 attempts till now not asked. Now it is due. And my expectation lagta hai. Understood? Is in every chapter one question I am saying highly expected na. In this chapter this is from my point of expected. It will come. If it will come, to come to Hyderabad, give me chocolate, huh? Okay. This is one question I am expecting. Ho gaya? Done. You can do it now. Coming to, now can you say equity settle you can handle? I think nothing to discuss much. Now coming to cash settle is also very easy. Entire accounting treatment remains same. Only SBP reserve will become SBP liability, and we will do reassessment of SBP liability at the end of each year as per the fair value option at the end of each year during vesting period as well as exercise period, and any increase or decrease in liability will be transferred to PL, because this is SBP liability. So any increase, any decrease will be transferred to PL. If suppose, however, cash settle will be always exercised. But suppose not exercise, then SBP liability decrease. So that will be also transferred to what? PL. Because any gain or loss on settlement or liability is transferred where? PL. Understood? Correct? So I think this is also simple. But I would like to take one question where students normally do mistake. Can I take that question? I think it is in my expected list also. And I think 1 or 2 times it has been already asked. This is the question where student do mistake. Correct? Minda Limited issued share appreciation right means what? Cash settle. SAR means what? SAR. SAR is cash settle. That vest immediately to its employee on 1st April 2000. SAR will be settled in cash using an option pricing model. At the date, it is estimated that fair value of SAR was 100. So what was the fair value of grant day? 100. SAR can be exercised at any time until 31st March 2003. So 3 years is being given for exercise. At the end of the period, 31st March 2001, it is expected exercise. The option is 95% of total employee. Means they are expecting at the end of first year, how many employee will exercise? 95%. Then it has been changed from 95% to 92%. And finally, how many employee exercise the option? 89% employee exercise the option. Then they are given SAR fair value at the end of each year 132, 139, 141 past journal entry. Have you understood this point? Now, in this question, what is given? If you see, they have said vested immediately. Vested immediately means can I say grant day and vesting day are same, means entire expense will recognize on the first day only, and the 3 year is exercise period. 3 year is exercise period. Means can I say entire expense will recognize on which day? First day. First day. So this 3 year is not vesting period. 3 year is what? Exercise period. Then can I say first year your expense on the date, on the grant day, your vesting day, you can say what will be your expense? How many options? 11,000. What is the fair value of option? 100. And can you see nothing given? So we'll assume 100% will be exercise. 100% exercise. Therefore, they have done into 100%. How much it is coming? 11 lakh. So this become the expense on the first day of year. Then can I say at the end of each year we'll do what? Reassessment, because it is SAR. So now it become how much percentage? 95%. So they have done what? 95%, and the fair value become 132. So they have done 11,000 into what? 95% into 132. How much it is coming? So this become what? Increase. Increase become what? Expense. Understood? Then become 11,000 into what? 92% into what? 139. Correct? Now again increase. So this become expense. Correct? Then it become 11,000 into what? Actually exercise how much? 89%. What is 141? Now it become decrease. So this will be decrease in liability means gain. Understood? So it means first journal entry on grant day only. Grant day is vesting day. Your journal entry is what? EB expense account debit to SBB liability. Then at the end of first year, EB expense account debit to SBB liability. At the end of second year, EB expense account debit to SBB liability. But at the end of third year, what? SBB liability account debit to EB expense, and then we'll pay entire liability on the same day. SBB liability account debit to cash or bank. Understood what mistake you will do? Most of the student will take here, they will do 1/3 because we are habituated of doing 1/3. Means they will assume exercise period is what? Vesting period, and this mistake will happen. Dangerous question. Read the question carefully. It is vested what? Immediately. This can be one dangerous question. SAR is also manageable. Can we proceed? Can we proceed? The next topic is what? Share-based payment with cash alternative. Share-based payment with cash alternative. So what Ind AS 102 says that initially we'll assume that all the employee will do cash settlement and we'll find out maximum liability and minimum equity. Maximum liability and minimum equity as we used to do for compound financial instrument. Means we'll assume that initially it will be classified as liability. Now can you say First we'll allocate, means first we'll find out liability component, equity component. So liability component will be SBP liability, equity component will be SBP reserve. SBP reserve will not do any reassessment, liability component will do reassessment. This is the concept. Let me take one question. Let me take one question to explain this. Suppose this is the question. On 1st Jan 2001, ABC Limited gives the option to key management employee to take either cash equivalent to 1000 shares or 1500 shares, means either take cash equivalent to 1000 shares or take what, 1500 shares. The minimum service requirement is 2 years and the shares being taken must be kept for 3 years. Means if you exercise, if you demand equity shares, so there is some lock-in period. Lock-in period means restrictions. Lock-in period means restriction. Means for cash settlement there is no restriction, but for equity settlement there is a restriction. So there are two type of option. One is with restriction, one is without restriction. So they will give you two fair value options. One is with restriction, one is without restriction. Understood is fine? Yes, sir. So you can see fair value of shares are as follow. Shares alternative fair value with restriction how much? 102. So grant date fair value they have given. So this is without restriction. If nothing has been given, then it means without restriction 113. And they have given fair value. Can you say, you only say you want fair value at the end of each year for cash settlement or equity settlement? Cash settlement. So it is understood this is also what? Without restriction. This is also without restriction. Understood is fine. The key management exercise is cash option at the end of 2002. So what will do? So in this first question number whatever, first we'll find out fair value of liability component. So what is the number of shares? 1000. What is the fair value for cash alternative? It is what? 113. How much? This become 1,13,000. This become your liability component. Then we find out fair value of what? Equity component. This will be equal to fair value of equity alternative minus fair value of what? Liability component. Means what is the number of shares? 1500. And what is the fair value of shares with restriction? 102. So this become maximum equity. From this will minus what? Fair value of what? Liability component. So what is the balance? 38,000. So this become your fair value of equity component. It is as simple as whatever we used to do for compound financial instrument. This is 40,000. Why you do calculation mistake, Ray? 40,000. Understood. Chalega. Correct. Now can you say this will become SAR? This will become what? Equity settled. Understood? Because in this there is no changes in the number of employees. There is no changes in the number of employees. So can you say this will be allocated in 2 years equally? But you can't allocate this equally because this will, the fair value option will change. Therefore now we'll do another working note. Calculation of what? EB expense. So year 1 and year 2. Year 1, but the liability component, how many shares are there? 1000 into what? Now you will take what? 120. You will take 120. Understood? You will take 120. 120 into what? 1 by 2. Because 2 years the vesting period, how much? 60,000. And your expense will be also 60,000. And for equity component, directly we can take 40,000 divided by 2. If the number of options changes due to changes in the number of employees, then here also be careful because this will also change. Okay, sir. So this will become 20,000 and this will become 20,000. So your expense of the first year become what? 80,000 and 80,000. Correct? Yes, sir. Now year 2. Year 2, what will be my liability component? 1000 into what? 132 into what? 2 by 2. How much? 1,32,000 minus 60. How much? 72,000. And equity component, you can say 40,000 will be entirely. 40,000 will be entirely. And minus what? 20,000. How much? 20,000. So this become expense of second year. What is the expense of second year? 92,000. Understood? Correct. Means first year journal entry is what? EB expense account debit to SBP liability and SBP reserve. Second year journal entry EB expense account debit to SBP liability and SBP reserve. Correct. Now what will be journal entry for settlement? What will be journal entry for settlement? Can you say settlement accounting will do? They have given in the question कि they are opting what? Cash settlement. If cash settlement, then journal entry is very easy. We'll say SBP liability account debit to cash or bank. What was the amount? 1,32,000. 1,32,000. And can you say SBP reserve account will be closed by transfer to retained earning? It will be closed. How much? 40,000. 40,000 will be closed. But suppose in the same question they have not given anything, then keep both alternative. If equity settlement, then what will be journal entry? Then what will be journal entry? SBP liability how much? 1,32,000. SBP reserve how much? 40,000. And bank will come for exercise money. In this question bank is nil because exercise price is nil. But in your exam question there can be some exercise price. So be careful about exercise price. Okay, there can be some exercise price. Now this will be equity share capital. Equity share capital is how much? 1,500. They have not given nominal value. So balancing figure will be securities premium. If suppose they have not given nominal value, so what you should write down in an exam? Equity share capital plus what? Securities. This you write down total. This you write down total. Understood? Don't assume anything nominal value because ICA is also doing in this way. ICA is also doing in this way. Chalega? Okay, sir. Have you understood? Yes, sir. So this is one of the question for share based payment with cash alternative. Now modification. Modification is also one of the question which is expected. Modification is also expected. Now whenever I say modification, so this modification is for equity settled. Can you say cash settlement if there is modification? So that is not relevant because cash settlement we do reassessment at the end of each year. Suppose they have given modification, so don't worry. Whatever fair value has been given after modification at the end of each year, that will be used for reassessment. So therefore not so much relevant for discussion. Understand what I am saying? So suppose cash settlement they have given modification, then also after modification whatever fair value has been given at the end of each year, that become relevant. Therefore can I say no discussion required. But equity settlement modification become relevant. Now modification actually can be favorable to employee or it is unfavorable to employee. Whenever modification is unfavorable to employee, means favorable to entity. Are you getting what I am saying? So whenever modification is not beneficial to employee, means unfavorable to employee, so we need to ignore that modification. Ignore that modification completely. Do original accounting. Means that time modification is ignored. Total modification will be ignored. This type of question till now not given in ICA study material because easy. Ignore modification. But if they ask, it will be difficult. So whenever modification is what? Not beneficial to employee. Yeah, it is favorable to the entity. Then ignore that modification. Means whatever modification is given, ignore, and whatever you were doing originally, that only you continue. Whatever you are doing originally, that you continue. Can I say if asked, it will be dangerous now? Because no question is there. So can you say when it will become beneficial? Can you say if the modification reduces the fair value of option granted by increasing the exercise price. Means if the entity increase the exercise price, it is beneficial or not beneficial to employee? Not beneficial to employee. Or the number of option granted is reduces, number of option granted reduces, then also it is not beneficial to employee. Or entity modify the vesting condition by increasing the vesting period. They increase the vesting period from 2 years, they say 3 years. So this is also not beneficial to employee. So suppose this type of modification given, ignore that modification and do original plan accounting. Follow originally, means whatever you are doing, continue that. Understood? However, they will not ask. Now, situation number 2 is what? If modification is beneficial to the employee, is beneficial to employee. Now here actually there can be 3 type of question, but normally ICI is focusing on 1 type of question. Keep modification increases the fair value option, that is by reducing what? Exercise price. Whenever exercise price reduce, it become beneficial for employee. So can you say when exercise price will reduce, fair value of option will what? Increase. Fair value of option will increase. So if exercise price reduce, fair value of option will increase. So if fair value of option will increase, it become beneficial to employee. Correct? So how to do this type of questions? So I'll take one good question to explain everything. Only for revision. This is one of the. This question now is SAR question. This you do by row. This is also good question, but you can manage. You can manage now. This is also one good question till now not asked. This is one good question till now not asked in exam. So this is also one of the expected question. One good question of SAR till now not asked, but you can manage it. Okay, can I move? Yes, sir. One question I will take for modification. This is the question. Question 16. QA Limited had on 1st April 2015 1000 share option to 2000 employees. Just draw the timeline. If 1st April 2015, how many options granted? How many employee? 2000. The options are due to vest on 31st March 2018, means 3 years. 3 years na. On 1st April 2015, the directors of the company estimated that 1800 employees would qualify for the option. The estimate was amended to 1850 employees on 31st March 2016 and further amended to 1840 employees on 31st March 2017. Understood? On 1st April 2015, the fair value of option is how much? 1.20. This is on which date? Grant date. The fair value increased to 1.30 as on 31st March 2016. Correct? At the end of first year. Okay? But due to challenging condition, the fair value declined thereafter. In September 2016, something happened when the fair value of option was now 0.90. The directors repriced the option and this caused the fair value to increase to what? 1.05. So here modification happened. The director repriced the option. Repriced the option means they have deduced the exercise price and the fair value of option increases from 0.90 to 1.05. Understood? Modification question. Modification question understood. Trading condition improved in the second half of the year, and by 31st March 2017, the fair value of option is 1.25. QA Limited decided that additional costs incurred. This point you leave, don't read, not required. The company has suggested suitable accounting treatment. In this question, so many information given, with the information will be confused in exam hall if you are not concentrating. Means if you will not draw timeline, then you will not be able to understand only. Correct? Have you drawn the timeline? Can you help me? What was the first date? 1st April. What is the number of employee? Now, actual number of employee how much? What is the number of option? But they are expecting how many employee? 1800. What is the fair value of option? 1.20. Then on 31st March 2016. How many employees they are expecting? 1850. What is the fair value? 1.30. Then something happened on which date? 30th September. What is the fair value? 0.90. Now modification happened. Due to modification, what is the fair value? 1.05. Then on 31st March 2017, how many employees? 1840. What is the fair value? 1.25. And no information has been given for 31st March 2018. Suppose I will give. This is not given because they have asked only for 2 years. They have asked only for, but we'll do 3 years. Okay. Suppose they have given 1800 and they have given one fair value also 1.35. Understood? These two information I have given in exam, don't assume. Because they have asked for 2 years in this question. Okay. Now what Ind AS 105 says that whenever there is a Ind AS 102 says that, what Ind AS 102 says that whenever there is a modification, so on the date of modification, find out incremental fair value of option. So it is 0.90. Means first find out fair value of original plan on the date of modification. So what is the fair value of original plan on the date of modification? What is the fair value of original plan on the date of modification? 0.90. I am asking what is the fair value of original plan on the date of modification? 0.90. What is the fair value of modified plan on the date of modification? So can you say what is the incremental fair value of option? 0.15. So what Ind AS says that the incremental fair value of option will be recognized as an expense over the remaining vesting period from the date of modification. From the date of modification. Once again I will repeat. What Ind AS 102 says that incremental fair value of option will be recognized as an expense over the remaining vesting period from the date of modification. So from the date means from this date. This is how many year? 1.5 year. 1.5 year. Understood? Correct? Now batao. What is the expense? We'll do working year 1, year 2. First we'll do working. But year 1, how many employee? How many employee will take? Means you have 3 options. 2000, 1800, 1850. Changing na. Maja aa raha hai na. And this is dangerous question. So many information, if you are not conceptually good, you will die. But we are calculating EB expense at the beginning ke at the end. So all information at the end is relevant. Any information at the beginning is not at all relevant. So this kata laga, only what? 1850. Understood? Correct? So how many employee? 1850 employee. How many option per employee? 1000 per employee. Okay. Now what is the fair value of option? What is the fair value of option? 1.20 ki 1.30? How many are saying 1.30? How many are saying 1.20? Chalo, all are correct because this is what? Equity settlement. So any subsequent reassessment of fair value of option is not relevant. If it is SAR then 1.30. Understood? Are you able to understand? Yes, sir. So this will be 1. Very good. Excellent. We'll do 1/3. How much? $7,40,000. Correct. Now year 2 में can you say there will be 2 expense. One is original expense. One is modification expense. ठीक है ना? So I will add on this way original expense and modification expense. तो ओरिजिनल एक्सपेंस बता, हाउ मेनी एम्प्लॉय 1840 per employee 1000. Now what will be your favorable option? 1.20. Very good. Into what? 2 by 3. Then modification expense will be what? 1840 into what? 1000 into what? 0.15. Understood? 0.15. Incremental favorable option into what? 0.5 divided by 1.5. Can you give me the total of these two? 14 lakh 72,000 minus this 7 lakh 32,000. Understood? Understood? Now last year you do. As per my given information. Last year you are doing. I asked total 15 lakh. I'm asking total. Minus this 8 lakh 24,000. Now okay. ठीक है. Now year 3 do by your own. How much? So the original will be what? How many employee? 1,800 into what? 1,000 into what? 1.2 into what? 3 by 3. Modification expense will be what? 1,800 into what? 1,000 into what? 0.15 into what? 1.5 divided by 1.5. Total what? 24 lakh 30,000. 30,000 minus this 8 lakh 66,000. Understood? Correct. Now let me confuse you by asking something. This so you have understood. Now suppose in an exam question they have given some number of employee यहाँ पर भी. Suppose they have given 1830 employee. तो बताओ. Now whether your answer will change. Your answer will not change because we are doing calculation at year end. So number of employee we want estimation at year end. Number of employee we want estimation at year end. Now suppose this question is of SAR. Then what changes? If suppose this is SAR, बताओ what you will do? First year. How many employee? What is the number of employee? Now what will take? 1.30 into what? 1 by 3. Calculation you can do. Now year 2, how many employee? 1840 into what? 1000 into what? Can this all information now become not relevant? Now you will take 1.25. Whatever is the reassessment you will take. So cash settlement one time they have asked. The student got confused with this only. They have given this information. Student become confused with this only. So 1.25 you will take. 1.25 into what? 2 by 3. And year 3 what you will take? 1,800 into what? 1,000 into what? 1.35 into 3 by 3. So for SAR that modification wala point is not relevant because it is reassessed at the end of each year. Can you do 90 questions by your own? One question I have done. SAR also, a modification also you have understood. Cancellation also one time they have asked, can be asked. Cancellation. Cancellation means what? Ki suppose some of the employees redundant, means that have left the company. Means suppose we close our one of the factory. So number of employees reduce. So that is what? Cancellation of what? Option given to them. Cancellation of ESOP given to them. So in that case, it can be cancellation with settlement. So whenever there is a cancellation with settlement, because of course we need to settle something, because that is our mistake. We have cancelled the plan, management mistake. So there will be cancellation with settlement. So in that case, what need to be done? Let me explain with. Let me revise this point with one question. Question 18. Anara Fertilizer Limited has issued 2000 share option to its 10 director for an exercise price of 100. Correct? The directors are required to stay with the company for next 3 years. How many years? 3 years. Payable option estimated is what? 130. Expected director to vest the option is what? 8. During the year, there was a crisis in the company and management decided to cancel the such scheme immediately, and it was estimated further as below. Payable option at the time of cancellation is how much? 90. Market price of share. Can bakwas information? We don't require market price of share. Okay? There was a compensation which was paid to the director, and since only 9 directors were currently in employment during the date of cancellation of such scheme, hence the amount of 95 per option has been given to each of the 9 directors. So how much compensation paid? 95. What was the payable option on the date of cancellation? 90. Question you understood? So what they want to say? Ki suppose initially 3-year scheme. Understood? How many directors initially? 10 directors. What is the option given to each director? 2000. And what is the fair value? 130. And now they are expecting that how many employees will vest the option? So 8 employees will vest the option. Now during the second year, what happened? Cancellation happened. The date is not given. But on this date, how many employees actually was there? 9. Now they have given what is the fair value on this date? 90. And what is the compensation paid per employee? 95. This is the entire question. Correct? Understood? Means, can you say, first journal entry will do EB expense, account debit to SBP reserve for the first year. First year means based on how many employee? 8 employee. So we'll do 8 into 2000 into 130 into 1 by 3. How much? 6,93,333. 6,93,333. First year, so you have understood. Now what our Ind AS 102 says that once the cancellation done, so on that day we recognize the entire expense of the entire vesting period which has not been recognized as an expense. Means we recognize the future expense also on which date? This date. Because this is a cancellation and it will be always settled. Understood? So we'll recognize remaining expense on the date of, means on the date of cancellation, means during the year. Date is not given, so I am writing date of cancellation. Same journal entry will do EB expense, account debit to what? SBP reserve. How much? Batao. How many employees now? 9. 2000. Can you say for the entire year? Means 3 by 3. You can say 3 by 3 or don't multiply. So what is the fair value? Fair value is what? 130. So this becomes total expense of the entire vesting period minus how much already recognized? 6,93,333. 6,93,333. So what is the remaining expense? How much? Have you understood this point? Understood. So remaining expense of the plan will recognize on the date of cancellation. Correct? This much you understood. But can you say now on the date of cancellation, this will be settled in cash. So SBP reserve become SBP liability. So what Ind AS 102 say that in this equity requires settlement. So this is nothing but buyback of equity. Buyback of equity. It become buyback of equity. And buyback of equity will be done based on the fair value of the option on the date of cancellation. It should be done on which price? Fair value of option. So we'll convert SBP reserve to what? So we'll say SBP reserve, how much? This is what amount? This is what amount? Book value of SBP reserve. 23 lakh. And now it will become what? SBP liability. Can you say SBP liability will be based on the fair value of option on the date of cancellation. So it will be 9 into 2000 into 90. How much? 16 lakh 24,000. Now 16 lakh 20,000. Now can you say whenever you do buyback of equity, whether any difference will be transferred to PL or other equity? It will be transferred to PL or other equity? Other equity. Therefore, the balancing figure of this will not be transferred to PL. That will be transferred retained earning. So the retained earning will be how much? 7 lakh 20,000. 7 lakh 20,000. Understood? Now can you say we'll do settlement of liability as per the settlement price, that is 95 per option. So we'll say SBP liability, how much? 16 lakh 20,000. But you have paid how much? You have paid how much? 9 into 2000 into 95. How much? 70 lakh. So what is your loss? Loss will be transferred to what? PL. How much? 90,000. 90,000 will be transferred to loss. So this is loss on settlement, and this loss on settlement will be transferred to what? PL. Understood? Have you understood? Now what type of question can be asked in exam? This can be asked in multiple choice question. Now listen carefully. Listen carefully. They can ask three types of question. First, how much EB expense will recognize in second year? That you can calculate. This can be one question in MCQs. Same question now I am expecting in MCQ. Correct. Second question they will ask, what is the loss on settlement? So 90,000 you can calculate. So that is 95 minus 99. So 5 rupees per option into 9 director into 2000. So you can calculate 95 minus 9. Then they will ask one last question. What is the amount? Sunna, what is the amount deducted from equity? What is the amount deducted from equity? Equity means SBP reserve. SBP reserve is equity or not? So what is the amount deducted from equity? 23 lakh 40,000. So what is the amount deducted from equity? 23 lakh 40,000. This is the amount deducted from equity. So three questions. First question, what? What is the EB expense of second year? Second question, what can be the loss on settlement transfer to PL? Third question they may ask, what is the amount deducted from equity? The amount deducted from equity is 23 lakh 40,000. Check karo, they have given that only. First they have given what is the EB expense of second year. Correct. What is the amount deducted from equity? 16 lakh. What is our answer? This is the correct na? Transfer to oh sorry, my mistake. What is my mistake? Sorry. what is the amount deducted from equity? So this is decrease and this is increase. Sorry, correct. So what is the amount deducted from equity? Okay, this is decrease and this is increase also now. So net amount deducted from equity is what? 16,20,000. So your answer will be what? 9 director, 2000 into 90 based on the fair value of option on the date of cancellation. Understood? Correct. So these 3 questions they will ask in MCQs. First what? EB expense of second year. Then loss on cancellation, or they may ask what is the amount deducted from equity. So either you can pass this journal entry or simply you can calculate 9 into 2000 into 90. So shortcut is this. Once you have understood, you can do it. Or if they ask journal entry, do this journal entry. Chalega. Okay, sir. This also done. Cancellation also done. Now, non-employee share-based payment transaction, I am expecting in MCQ question. And recent time they have given in MCQ question this type of, they are asking. So whenever non-employee share-based payment transaction, there are 2 points. First, means journal entry what? Asset account debit to SBP reserve or SBP liability. Yeah, simply speaking, asset account debit to equity share capital. Means suppose I purchase property, plant and equipment in exchange of equity shares. So that is not covered under Ind AS 16. That is covered under Ind AS 102. Suppose you purchase inventory in exchange of equity shares. So that is not covered under Ind AS 2. That is covered under Ind AS 102. Whatever you are purchasing and you are paying what? In the form of equity shares, that become non-employee share-based payment transaction. Non-employee share-based payment transaction. Understood this point? Correct? Now there are 2 points. First they will ask, ki, this journal entry will be done when? So journal entry done when the date when the control of the goods has been, received. When the control of the goods has been received. Understood? Correct? So this entire transaction will be recorded when we obtain the goods, means when the control of the goods is received or when the services are received. Understood this point? Correct? You may receive some services, or suppose an auditor provides services and the payment has been done in the form of equity shares, then means we'll say audit fee account debit to what? Equity share capital. So when the services are received, then we'll pass this journal entry. Second, this journal entry will be done at which amount? At which amount? So first preference will be given to fair value. The first preference will be given to fair value of goods and services received. If that cannot be measured reliably, then second preference will be given to fair value of equity instrument issued. Understood? Have you understood? यहाँ पर थोड़ा उल्टा हो गया. याद करो. In case of Ind AS 16, whenever we purchase PP in exchange of other asset, the first preference given to what? Fair value of asset given up, and second preference fair value of asset received. But here ulta, opposite. So here the first preference will be given to what? Fair value of asset received. If that cannot be measured reliably, then fair value of equity instrument issued. So यहाँ पर be careful, because now we are habituated of given up. But here fair value of goods or services received, first preference, and second preference will be given to what? If that cannot be measured reliably, then second preference will be given to fair value of equity instrument issued. Understood? Correct? Of course, now if you have understood, you can do any question. Chalega? Understood? Yes, sir. Then group share-based payment plan. They have given good question, but till now not asked in exam. Till now this point has not been asked in exam. I don't know why they are not asking. But with MCQs, once again, scope of this question also increases. Now, there can be 2 type of transaction. First type of transaction is what? Ki parent company and subsidiary company, and this is the employee of subsidiary company. So they are providing services to what? But who is giving option? Parent. Batao. In the books of parent company, in the books of subsidiary company, can you see it will become EB expense of which company? But it will become SBP reserve or SBP liability of which company? Parent company. Understood? Because who is granting option? Parent company. Who is receiving services? So it become expense of which company? It become SBP reserve or SBP liability of which company? Your SBP reserve means equity settle. SBP liability means cash settle. That too you are understanding. Now batao, what will be the respective account debited and credited? So Very good. It will become investment account debit, and it will become what? Capital contribution from parent company. Capital contribution from parent company. Very simple. Reverse case. If it is parent company, subsidiary company, employee of parent company, rare situation. A rare situation. But suppose they ask, so can you say it become EB expense of which company? EB expense of parent company. And it become to SBP reserve or SBP liability of which company? What will be the account debited and credited respectively? So this will become deemed dividend. So we'll say dividend, and that will be debited to which account? Retained earning. And this will become deemed dividend income. This will become dividend income and transfer to PL. Transfer to PL. Understood? However, this type of question they have given in ICS study material can be asked. So you can do it. You can do it by your own. But very simple. Very simple. Understood? Correct? Correct? Last point of this chapter. Last point of this chapter. Condition. Conditions are of two type of condition. One is known as vesting condition. One is non-vesting condition. Condition are of two type. One is vesting, one is non-vesting. Vesting condition means during vesting period. Non-vesting condition means after vesting period. After vesting period. Now vesting condition are of two types. Service condition and performance condition. Service condition means for how many period they need to remain in service. Correct? Means only there is a time period. There is no extra performance required. But in case of performance condition with service condition, there will be some target to be achieved. For example, profit target, sales target, like this. Correct now. Now performance condition are of two types. One is market related condition. One is non-market related condition. Understood? It means there are four type of condition effectively. One is service condition. One is market related performance condition. One is non-market related performance condition. And one is non-vesting condition. Acha, what do you mean market related performance condition? Means achievement of certain market price of shares. Means if the target is that you need to achieve this much market price of shares, that become market related performance condition. But when I say achieve this much sale, achieve this much profit, achieve this much EPS, reduce this much cost, so that become what? Non-market related performance condition. Understood? Correct? Now there are 2 points. Point is what? Can you say whenever we are calculating expense, so there are 2 elements. One is the number of options and one is the fair value of option. Fair value of option. Can you say fair value of option will be always given in the question? Means we will not calculate fair value of option in exam. The fair value of option will be given in the question. Fair value of option is calculated by your AFM faculty by using option pricing model. So Ind AS 102 says that fair value of option is calculated by option pricing model, but our ICS said that is AFM syllabus. So in FR, what will be given? Fair value of option will be given. Correct? But then also we want these two or not. Okay, this we need to also estimate. Means we need to estimate or not. Even though given, but we need to estimate it. And number of option also we need to estimate. Number of option also we need to estimate. Means this become variable element. This is vary now. This will vary as per the information given in the question. Correct? Now, how many conditions are there? First is service condition. Second is market related performance condition. Then non-market related performance condition. And third is what? Non-vesting condition. Correct? So what Ind AS 102 says that this service condition and this non-market related performance condition will be considered for determination of what? Number of option, number of option. But that will not be considered for determination of what? Fair value of option. Understood? Correct? Means can you say whenever you are calculating number of option is based on service condition that we have done. If the employee is leaving the job, so we are changing the number of employee. If you are changing the number of employee, your number of option will change. Similarly, if they are not able to fulfill some profit condition or any other non-market related performance condition, so your number of option will change. But can I say that will not affect the fair value of option? That will not affect the fair value of option. But what they say, market related performance condition and non-vesting condition will never be considered for determination of what? But that will be considered for determination of what? Fair value option. But can you say fair value to will be always given? Fair value will be always given. But this can be asked in what? MCQs. It can be asked in MCQs, multiple choice question. So you need to remember what will be considered for determination of fair value of option? Market related performance condition and non-vesting condition. But fair value option will be given in question. Therefore, this point is not relevant for practical question. This point is not relevant for practical question because what will be given? And whatever fair value option will be given, that has been determined by taking this into consideration. That has been determined by taking this into consideration. So whatever fair value option is given, we'll accept that fair value option for calculation purpose. But can I say in our all question we are determining number of options? Means number of options we need to estimate. Number of options we need to estimate, and that is based on which two conditions? Service condition and non-market related performance condition. Understood? Okay, now have you understood this point? So this is, there are some few questions given. Do it by your own. I have explained the theoretical part. Chalega. With this, I think I have covered what? All the points of this chapter. Question I think you can manage. In this chapter you can manage, and doubt will not come in solution. Doubt will directly come in exam. Because you will be able to do it if the solution is given. Correct? But thoda sa conceptual understanding and calculation should be clear. Now let us come to the last point of business combination. Can I take that point? Which I have left what? Okay. Measurement period. The concept is what? This is concept of which chapter? Measurement, business combination chapter. And I am expecting one question in this. Means in the full question they will add this point. Okay. Now what measurement period says? Suppose this is the reporting date. And just before reporting date, there was some business combination. There was some business combination. Now can you say we need to apply 103? So we want fair value, and fair value is measured as per Ind AS 113 based on expert, as per expert now. So expert will give valuation report. Can I say it will take some time, and it is quite possible if this is date of approval and we have not received valuation report before date of approval. It means can I say we can't do accounting of business combination before approval of financial statement. So it will delay in approval of financial statement. So what Ind AS 103 says that don't worry. If you have not received valuation report, do accounting on what? Provisional basis. Do accounting on provisional basis, and will give you a maximum period of 1 year from the date of acquisition. Will give you maximum period of 1 year from the date of acquisition period, in which you can receive the information related to business combination. You can complete the business combination accounting. Understood? Now suppose, of course, can I say we receive some information after approval only, because if you receive before approval, that can be adjusting event. Correct now? So we receive some information. Now this information, whatever we are receiving, can be of two types. One is for the facts and circumstances existed on the date of acquisition, or it can be facts and circumstances after the date of acquisition. So this is not relevant for what? Business combination accounting. This is relevant for what? Business combination accounting. For example, suppose we have some debtor on date of acquisition, debtor of acquiring company, and he become insolvent before date of acquisition, and we got this information now. But this is relevant or not relevant for business combination accounting? Yes, this is relevant. This is relevant because they become insolvent before what? Date of acquisition. So it means that will affect the fair value of debtor. That will affect the fair value of debtor now. So that information become relevant for business combination accounting. But suppose there was some debtor on the date of acquisition. but he become insolvent after what? Date of acquisition. So of course this is important fact, but for subsequent accounting, that is not for what? Business combination accounting. Are you getting? We'll create some allowance for bad and doubtful debt, but subsequent accounting now, as per relevant Ind AS, for Ind AS 103 accounting, that is not relevant. So any facts and circumstances which we receive any facts or circumstances which is related to any event after the date of acquisition is not at all relevant. It means this will be adjusted here. This will be adjusted, and what Ind AS 103 says that this will be adjusted on retrospective basis. Retrospective basis. Now retrospective accounting means what? Because this adjustment will do in current year, because last year financial statement already approved. So we cannot do any changes in last year financial statement. So in current year financial statement will do adjustment, but in the comparative figure. Understood? Have you understood? Let me take one example. Suppose on the date of acquisition there was one property, plant and equipment. You have taken fair value how much? 10 lakh. You have taken fair value how much? 10 lakh. And because you have taken fair value this much, you have already calculated goodwill. You have calculated goodwill 7 lakh. Means you have done accounting of 103. You have taken PP at fair value how much? 10 lakh. That was provisional value. Okay? And as per that value, what is the goodwill coming? 7 lakh. Now you got information from your valuation report that this fair value is not 10 lakh. This fair value is what? 15 lakh. Understood? Correct? So what is the adjustment required? That we need to understand. Of course, journal entry will be done during measurement period. And it will be restated in previous year figure of current year financial statement. But adjustment entry you need to find out. Now adjustment entry is based on 2 points. NCI is based on fair value method. NCI is based on Pasina method. Understood? Correct? Now if NCI is based on fair value method, so you will increase PP by how much? 5 lakh. And if you will increase PP, so your goodwill will decrease by how much? And because NCI is using by fair value method, it will not affect NCI, because NCI is not calculated based on INA. NCI is not calculated based on INA. NCI is based on fair value method. It is fair value only. So no adjustment will be done in NCI. So it will be entirely adjusted in goodwill, and goodwill will decrease by how much? 5 lakh. But this journal entry you will do at this point of time. And suppose this is what? Let's say 1 month. So can you say 1 month depreciation need to be also adjusted? 1 month depreciation need to be also adjusted. Because last year you have calculated depreciation on 10 lakh. But last year depreciation now should be calculated on 15 lakh. So 5 lakh additional depreciation will come. So one more journal entry will do. Depreciation account debit to what? PP. And this depreciation will be adjusted in retained earning, opening retained earning of current year. Opening retained earning of current year. Understood? Depreciation you can calculate by using the rate of depreciation whatever given. But if it is Pasina method, then what will do? PP account debit how much? 5 lakh. Understood? But can you say now NCI is based on Pasina method? If your INA increases, so your NCI will also increase. So 2 NCI, suppose NCI share is 20%. So you will do 20% of what? 5 lakh. 20% of 5 lakh will be what? 1 lakh. And balancing figure will be adjusted where? In goodwill. How much? 4 lakh. Have you understood this point? And depreciation journal entry will remain same. Depreciation journal entry will remain same. Understood? Can be asked in exam. Correct? So they will say, means on the date of acquisition to your previous CBS without adjusting this. Means suppose the question came like this. This is what? 31st March, yeah. Suppose 30th June is the date of acquisition. So on this you have applied 103. Correct? Now they will give 31st March and they will say some information has been received here. So for these, you need to pass this adjustment entry separately. Understood? Correct. I think they have given two questions. Both question you can do. One second. I have not understood your doubt. Before, it can be after. I said you have recorded initially at what? 10 lakh, but actual fair value as per valuation report is what? 15 lakh. It means you should consider 10 lakh to 15 lakh, 15 lakh. So how much you have not considered? 5 lakh. So you will increase your PP on the date of acquisition by how much? 5 lakh. So your goodwill will be also affected by 5 lakh. So PP to goodwill. But can you see, you record this entry at this point of time? But here 1 month depreciation will also come. 1 month depreciation. The last year you have calculated depreciation 10 lakh, but you should calculate on 15 lakh. So you have not calculated on 5 lakh. So 5 lakh depreciation for 1 month need to be calculated as per the information given in the question. Understood? Can you do by your own? Correct. One question is given in my expected list. Do it by your own. I think you will be able to understand. Okay, na? With this business combination also completed. This was by mistake left by me. Intention was to do, but I forgot that point. I think all the points now covered. Financial instrument we have completed. Business combination we have completed. Today consolidation we have completed. Share based payment we have completed. Revenue we have completed. Ind AS 116 we have completed. Ind AS 12 we have completed. And all the asset related Ind AS also completed. Correct now. Now whatever is left means already I have said that the classes which was planned for tomorrow, that I will not be able to take. So whatever Ind AS is not done, you can, if you want to do fast, if you want to complete in 5 days or 6 days, so see my previous marathon batch. Because can I say Ind AS remain Ind AS, no changes. Ind AS remain Ind AS, so you can see that. If you have any Ind AS, if you want me to do as a preference, so can you just inform me what are the Ind AS you want me to do? Ind AS? And that too I was knowing. Then 34. Interim financial reporting. And that too you do by your own now. 34 you want? 36 I will take, and $101 Ind AS 21. No, I am just saying I will give this first preference because that is based on my time availability. So 33 I will do first, then I will do 36, then I will do 101, then I will 21, then 19. Okay, then, but suppose just as per your planning, if suppose 19 need to be done, do it. Don't wait for me. Whenever I will have time, I will first record what? 33. Okay, and I will upload in the YouTube, or I will only inform you that I am coming live and I will do it. Okay, but actually from tomorrow, so I have some emergency. From day after tomorrow, my 2 batches is going to start. So actually it will be thoda sa hectic. Okay, so it was planned that kari kar lete, but suddenly something I need to go. Okay, I think whatever we have done, you have understood. And whatever we have done, now if the questions come from there, you should attempt that, because in exam attempt is very important. Once again I am saying 100 marks attempt is required. Always there is a rule that once you attempt 100 marks, there is a high probability that you will get 50 or more than 50. But if you are attempting less than 100, so there is a probability that you are not getting 50 or you are getting less than 50. Correct now? So first condition of any paper, whether it is FR, AFM, audit, DT, IDT, IBS. First तो 100 marks attempt is required. ठीक है. Then I will say avoid calculation mistake. Calculation mistake many students do. I don't know why. Then avoid information mistake. Means we read wrong information or we read correctly but we apply wrong information. That is due to lack of concentration. Either udhar 1 lakh become 10,000. Understood? So first complete 100 marks paper. Avoid calculation mistake. Avoid information mistake. देखो just try. If you forgotten the concept, then whether you can do anything. Then to whatever you have understood, do it. Don't waste your time. Suppose just try to understand measurement period wala question came. You have forgotten. So can you do anything? You can't do anything. Then I will say whatever you know, do it, but don't waste your time. Because now whatever you are thinking, now measurement period, kya hoga? You are wasting your time. Yes or no? So in exam is not a place where you can recall everything. It will automatically come. It will automatically come. But if you have completely forgotten, I will say you are wasting your time. Now whatever you have understood, just do it and leave it. Because in one question, measurement period will be 1 point. But balance point to, do it whatever you have understood. For example, today we have done consolidation, they have had dividend declared but not paid. Now you are out of mind, what is that? So apart from that, other point to, do it, let them decide how much marks they should give you. But in exam, don't waste your time because of that particular point which you have completely forgotten. But try to do it whatever you have understood. Abhi to we have done, now thoda concept you have understood, whatever you have understood that much apply. So normally what happens, in exam there is rule that, and once again I am saying, whatever question is complicated, they will give grace mark for that, normally. So if you have attempted so they will give out of 40 marks, 100% they will give you 5 marks if you have attempted. So 5 marks is also important now. 5 marks is also important. 45 will become 50, 55 will become 60, and 145 will become 150. So that 5 marks difference will pinch you every time. So I will say attempt is first important. Normally I have seen students are not attempting 100 marks paper, first thing. Then avoid calculation mistake. Do every calculation in calculator. Don't use your mind. 1000 plus 1000 how much? Check in calculator and do it. Okay? I also know 2000, you also know 2000, but then also check it. Then please read the question carefully. MCQs, what I will say, MCQs now normally student is finding difficulty. Dekho, just try. I'll just give you one benchmark for MCQs. Dekho, what I have understood from MCQs, 30 marks MCQs and 70 marks descriptive. Now, in this, I will say minimum 30 minutes, maximum 45 minutes, not more than that. So, if you are using minimum 30 minutes, you are getting 2 hour 30 minutes, or you are getting 2 hour 50 minutes, which is more than sufficient to score what? To write 70 marks. But I will say minimum 30, maximum 45, not more than that. Now, when to attempt MCQs? Just try to understand in the last, but whether your mind will work. So can I say you can't handle MCQs at the end because already you are spoiled with what? And can I say we'll start with descriptive, believe me, it will take 3 hours for descriptive only. Are you getting? So what I will suggest, this is my suggestion, then whatever you want to do, do you. Means other faculty, whatever I am saying, I don't know. I will say first 30 minutes to give to entire MCQs. Can you say out of 15, 10 to you have understood? Attempt that. Suppose 5 you have not read or 5 you have not understood. You have not understood. Normally out of 15, from my point, 10 everyone will be able to handle. 5 will be, they have given 5 to waste your, they will give lengthy, they want you to waste your time. So I will say if you are not able to understand, just skip it. And 30 minutes over, and now you are realizing that it will waste your time or if it is of difficult, go to a descriptive. immediately go to descriptive. So 30 minutes में you have attempted 10 na, okay, now you scored 20 marks na. Now for 5 MCQs you become emotional, and if you waste 30 another minute, then descriptive will become dangerous. So what I am saying, suppose 30 done. Now if you are thinking that in 50 minutes, yes, you will be able to complete 5 MCQ, do it. But if you have understood that now this is not my cup of tea, it is not, I will not able to do it. You understood, because can you say by reading we understand, we know our position, we know our strength, we know our weakness. Yes or no? Any chapter, for example, Ind AS 102, so you know how much expert you are. Any chapter, suppose Ind AS 101, any MCQs came, you know whether you will be able to do it or you will not be able to do it. Correct now? So you know your strength. So you can decide at that point of time whether you should leave or you should carry on. But unnecessary, why you are, if you know you are not able to handle it, just go on now. So the benchmark is what? 30 minutes. And if you want to exceed, take another 50 minutes. But not beyond that. It means now you are wasting time, your descriptive will be dangerous. Immediately switch to what? Descriptive paper. Understood? Descriptive paper may, in one point I will say 50 minutes you get 50 minutes. Now 50 minute reading time you will get descriptive question paper. You will not get MCQ question paper. Am I right? You will get what? Descriptive. You will not get MCQs. Am I right or not? So in that, can you read entire question paper? It is impossible. FR to impossible. I don't know about audit. FR, can you read entire question paper? So in that, what you should do? Question number 1 is mandatory. I will say read question number 1. And I think nowadays now in question paper they are giving some rough work. They are giving now. It means you can write down. So question number, try to analyze all the points, because that is mandatory. You need to opt it. So I will say out of 50 minutes, 10 minutes give to question number 1. 10 minutes give to question number 1 and frame entire solution. Frame entire, because that you need to read. But other question you may leave. If you are reading that question, it will be wastage of time. Correct? Because if you read and you think you can't do it, you can leave it now. Because out of 5 you require 4. So question number 1 read in how many minutes? 10 minutes. Give 10 minutes to question number 1 and analyze it in that rough. Nowadays they are giving question rough page. Yes or no? In nowadays they don't used to give. So we are not supposed to write in question paper. Now you can write. To use that rough page for writing. Analyze entire question. Now 5 minutes what you do? Only read the requirement of the question. Last para. And can you say by reading the requirement of question you can understand from which chapter this belongs? For example, EB, share based payment. Last para you will read, you will be able to understand. Just write down. It is 102, it is 16, it is 38, it is financial instrument. And if you can write down what question means, what is the topic they have asked, just write down. Can I say, you know Ind AS 16 you are comfortable or not? You know Ind AS 102 you are comfortable. You know financial instrument, suppose you are not comfortable. So why you are reading that question? So in that you can decide which question or which topic you can attempt first. This way you can manage 50 minutes. And this will help you to save time in what? The balanced descriptive hours all the time. So that 50 minutes is also very important to decide which question. Question number 1 to pakka, read it. Then balance, only read the last requirement. And if suppose you have more time, read any one question fully. Understood? Correct? Now your speed should be very fast. In handwriting there is no marks. Means bad handwriting, no marks deducted. But it should be readable. Means it can be understood by everyone. Okay? Spelling mistake, there is no marks. So if your spelling is not good, don't worry. Grammatical mistake, they also don't know grammar. So don't worry about that. Okay? I'm not saying don't write down anything, but don't worry about this grammatical mistake, spelling mistake. You can use short form also. You can use short form, but one suggestion is that suppose EB expense, so first write down full EB expense, write down in bracket EB. Then you can write down EB. So short form is also allowed. Short form is also allowed. So think about time. Watch. I used to carry one small watch like this. Small watch होता ना, suppose this is small watch, so I used to keep like this in exam hall and ऐसे time. This watch तो बहुत difficult होता है ना, it's like this, time wastage ना, अरे बोलना like this, ऐसे नजर, and this is allowed, हाँ, but it should not be any alarm in this. This is allowed, you can carry, understood? So I used to carry small watch. All planning should be done. Calculator, 2 calculator. Correct, 2 calculator. One is not for other, huh? Be selfish. In exam, be selfish. Okay. Your calculator, okay? So 2 calculator. Sometime not working then. The exam day is very important. Be prepared for that. Okay? Understood? I hope you have understood everything. I have also enjoyed the classes. I hope you have also enjoyed the classes. If you understood, just, you know my number. If you know my number, give some comment ki how was the classes. Whenever you are free, just write down one message. It will help me to, it will motivate me. Okay. Live class student, you also give some good comment, as well as what? Like the classes, subscribe the channel as it is. Okay. Bye bye. All the best. Okay. Which live batch? Marathon. It is starting from either 10th of April, 10th of regular class. My regular batch is going to start from 10th of April. Yeah. Regular. Exam oriented batch done. Regular batch. 10th of April. 1 minute.